December 6th, more than the cut, the commentary would be in focus. Geopolitics and global news will always keep our markets colorful in the month of December. But what's also important for December, there is low global liquidity in holiday season, and towards the end we get that NAV propping as well. So will that happen this time around or not is something we'll watch out for. And that is something which is typically globally known as the Santa Claus rally. So do we see that in the second half of December or not would be a trigger.
Keep the markets colorful indeed, but hopefully the color is green more than the red. At least that's what the bulls would be hoping for. But time for a short break. Mangalam, thanks a lot for that. On the other side, India's second quarter GDP numbers are due later this evening. We get you the expectations on the other side. Stay tuned. Welcome back. Now, India's second quarter GDP numbers are due later this evening at around 4 p.m. Lata is joining in now with the key expectations from this data. Lata, over to you.
Big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th. But that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex, or gross fixed capital formation as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May.
Latha, thanks a lot for that. All eyes on that all-important GDP number at 4 p.m. this evening. Moving on then, Air India CEO Campbell Wilson says that the revival of the airline will be the Everest of corporate turnarounds. Now, speaking exclusively to CNBC-TV18, Wilson also sought patience, saying that the management will need 5 years to get the airline back in shape. Now, Wilson also said that the ambitious plan to upgrade the legacy fleet will take more time and cost more than the budgeted $400 million. Even as the aviation industry is in the grip of consolidation, Wilson claimed that the airfares have gone down and they will remain affordable.
The investment that we're making in turning around Air India is significant. It will take some time to turn around the airline from a financial perspective, but I think if you look at our reports, we are making very, very good progress. And so I think we always said that this would be at least a 5-year turnaround. There was a reason why we said that it would be a 5-year turnaround. There was a reason why the economists said that it was the Everest of corporate turnarounds. I think what we've achieved in a little over 2 years is significant. It's certainly not finished. We are as impatient as anyone to bring it to closure, but I think progress is occurring.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. That was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
Well, the huge task of the Air India turnaround. Well, time for a short break. Up next, we get your cues from the commodities market. Stay tuned. Back on the other side.
I am a big believer in the capability of the group. I am invested and I have bought more in this fall. I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
Welcome back. You're watching Power Breakfast here on CNBC TV18. Now on to some news that is coming in from Australia. The Australian Parliament has passed a social media ban for children under the age of 16. Now this law will make platforms including TikTok, Facebook, Snapchat, Reddit, X and Instagram liable for a fine of up to 50 million Australian dollars for systemic failures to prevent children younger than 16 from holding accounts. Now with this, Australia has become the first ever country to ban social media for children under the age of 16. Australian Prime Minister Anthony Albanese said that the law supported parents concerned by online harms to their children. Now the platforms have 1 year to work around how they could implement the ban before the penalties are enforced. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Geopolitical tensions, but what's been the impact on the oil prices?
Oh, well, yes, it's forming yet again. For the longest time, Hormuz, we kept talking about Israel, Lebanon getting into a ceasefire agreement. And there are reports overnight that Israel, Lebanon are now accusing each other of ceasefire violations. Well, with that as a background, we've seen crude oil prices get a bit firmer yet again in the Asian markets right now. Also, the street will watch out for the OPEC and allies meeting. They are likely to extend production cuts. And we also understand that there is a delay in this meeting. From 1st of December, it has been moved to 5th of December to avoid conflict with another event there. The U.S. gasoline stock surging is something that keeps prices under pressure. So it really is contradicting fundamentals working its way in crude. But some gains finally seen in case of gold prices. The pause in U.S. dollar rally, the U.S. PCE price index meeting expectations, and then thin trading for the U.S. Thanksgiving week. All of that really, in some sense, seems to be supporting gold prices also. What is weighing on, though, is the SPDR gold holdings, where we have seen a decline in some profit-taking, and that perhaps is going to be the narrative going forward as we get into December. The year-ending, book closing, trade unwinding will lead to some profit-taking in many of these asset classes.
All right, Manisha, thanks a lot for all of that update. We'll keep an eye out on the oil prices and, of course, the big delay in that OPEC meeting, which was scheduled for Sunday, now on for the 5th of December. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazar Morning Call sets you up for the final trading session this week.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. We are coming to you live this Friday morning from the CNBC-TV18 Motilal Oswal studios. Yesterday was perplexing, and I think the question on everyone's minds is, should we read too much into it? Is this the start of another downturn? FI sell number was big, or should you just move on and look at it as a one-day aberration? I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, hi, good morning.
Hi, morning, folks. One thing that, and for a change, I was actually waiting for that FI number to come. I was checking the exchange again and again. But one thing that this 11,000 crores of selling tells us that this is not a straight line. The behavior, whatever's going on, it's not a straight line. We all wanted to believe that it's over. Maybe not. We'll have to see. But then, hey, thank God it's Friday.
Well, that's right. But I expect, a couple of technical factors were at play yesterday. And I don't expect such large FI selling. So let's see whether or not that happens. But I think yesterday there were a couple of technical factors that play out. And I don't think that we're getting back to those big sell numbers. So December series, time will tell.
No, absolutely, Nigel. And I think that is the consensus as well, that, yesterday was an aberration and you should not read too much into it at all. You speak to people and they say, well, just ignore what happened yesterday and market should be better, market should be good. So we'll talk about that. Now, there's not very much by way of overnight cues to really take forward because last night US markets were shut. So there isn't that to keep us busy. Thanksgiving holiday, so NASDAQ and NYSE, bond markets, everything was shut. US futures were trading for a short bit, and I think futures were slightly higher. US investors, I said this yesterday as well, in the morning, same time, that they're by and large out for the week now. I don't think any of the larger guys are hanging around to trade whatever markets are trading on Friday. So you've got, in that sense, no US now till we come back next week. And in any case, activity starts to thin out as we get into December, especially the second half of December. But Monday onwards, activity should be a little bit better. Now, as I said, US equity futures, small gains. E-minis, of course, also closed early. Cash, of course, was closed. You had European markets which were trading, and some of those markets were up. DAX was up 0.8, CAC 40 was up. That's a German and the French indices about 0.5% odd higher in terms of trade. Other headlines, there was sort of a comment from the ECB. There was the OPEC meeting, which was supposed to happen. That has now been pushed to the 5th of December and things like that. But these are all marginal headlines, not very much. Yesterday's big fall, and that started at 10:30 when the market just completely collapsed and never really recovered after that, could be expiry-related reversal of positioning and flows which came in earlier. Lots of theories doing the rounds, but that perhaps looks like the most reasonable sort of explanation out there. We'll get into this in greater detail in a bit from now. And the consensus is not to read too much into yesterday's price action, that this is not something new which we are starting. You look at a $2 billion net sell number from FIs and you start to worry. Well, that is not the way to read into yesterday's price action. So just want to make that clear. Now, levels which have not really changed. We've been in this range. The high has been for the last 4 sessions around 24,350. Instead of breaking out on the higher side, the market just broke down on the lower side. That's essentially what happened. So the 24,350 number, that coincides with a 40-day exponential average. That has been elusive, and 4 days, actually, all of this week we've spent knocking at that and then collapsing. Yesterday was no different. With yesterday's sort of cut on the Nifty, we've erased the Maharashtra election gap up as well. So Friday was, between Friday's close and Monday's gap up, there was that big gap, right? Because the election results came over the weekend. Yesterday, we've overlapped a Friday's high. So the gap is between Friday's high and Monday's low. And we've kind of overlapped. We've sort of filled that gap in that sense. What are supports now? You got to go back and look at some very near-term levels. So 23,800, 808 and 23,860. What is this? This is the 50 and the 61.8% retracement of the recent rise from the lows last week to the high this week. Just, 4 or 5 days, not even that. So this 50 and the 61.8% is these numbers, and these are the near-term supports that one should watch out for. So just 100 points away, and I think we're in that kind of a market. For the Nifty Bank, let's just put the levels out as well. The supports come in the zone of 51,271 and 51,774. This is the same gap area, which for the Nifty we filled, for the Nifty Bank we've not yet. So the support comes in that zone, and near-term resistance stands at about 52,760. This is the recent high that we saw, yesterday's high, by the way, that we saw for the Nifty Bank. So, those are some levels. The GIFT Nifty will come up on your screen. A lot of individual stock-specific action that we want to get to, and I think that's where the real bulk of the activity should likely be. Remember, it's anyway the end of the year. On top of that is the Thanksgiving weekend. Global activity, etc., in terms of volumes will be very, very thin. So be mindful of that. 36 odd points higher on the GIFT Nifty. Surabhi.
Absolutely. Asian markets are fairly mixed right now. And for us, through all the early part of the week consolidation, yesterday's fall, all things put together, we are flat for the week on the Nifty. So let's see. Friday promises to be an interesting session. Which way will the scales tip? Now to talk about some of the data points that we have from Asia. Tokyo inflation numbers are out. And why is Tokyo inflation important? Because it's a barometer of, what is overall happening in Japan. And that will lead us to the BOJ policy action. And it seems the expectations are that a BOJ rate hike is not off the table, because those numbers are looking a little hot if we talk about the print that came out. So Tokyo inflation is at 2.6. It was at 1.8% in October. So a bit of an increase has come through. Though core inflation hasn't moved up that much. This is more about, I think, fuel and food prices. Anyway, markets across Asia are mixed. If you look at the hotboards now, so the Hong Kong market started positive, but it's faltering now. The Japanese market is okay. South Korea is down a bit as well. We've got industrial production data out of South Korea. It's not looking too great. So that market's also on the lower side. On oil, now geopolitical risk premium is very much back. The flashpoints, both Ukraine, Russia, there's been enough going on there with Russia attacking some of the energy infrastructure in Ukraine, and the headlines out of the Middle East are also not comforting, because there are repeated reports of a breach of the ceasefire agreement between Hamas and Israel. So oil is back up to about 73 thereabouts on Brent. That's a watch point. Now let's come home and look at this whole FPI business, the number that we're talking about, large sell number coming in, 11,750 crores. Now, technical factors, yes, it was expiry yesterday. We have to see how this plays out. Then you're getting into the end of the year. Yesterday, it's a big number, and the bulls will hope that this is a one-off. It is not a sign of more such selling to come, because we've had enough of this in October and for the bulk of November as well. Domestic institutions were buyers. Imagine what the market would have been without the support of that 8,700 crores of buying that came through. Anyway, in terms of action today, lots of F&O, and we will talk about that because there are 45 new stocks getting added to the F&O tally from today, and it includes a lot of the new age company names as well that were not available to trade in F&O. More coming on this in just a bit. Life insurance as a space will continue to be in focus, and we'll tell you more about this, because what did the insurers say to the story that we put out yesterday? That, look, if it is IRDAI and if there is any major policy change that has to be announced, it's usually through a consultative process. So the insurers are keeping the faith that there'll be no knee-jerk regulatory change with respect to the bank assurance channel, which is huge for these insurance companies. So let's see if there's any recovery from yesterday's slam dunk. Yesterday, the stocks were down 5-6%. Last but not the least, watch out for Z. Now, this is not going to materially change anything, but yes, the news is big. Shareholders have said no to Mr. Puneet Goenka, not even to be a director. So he's not, managed to get that approval. But just a couple of days back, Z told the stock exchanges that Mr. Puneet Goenka is going to be stepping down as MD of the company. He will only continue in the capacity as a CEO. So materially, it doesn't really change much, because I think this was anticipated, which is why he decided to step down from the MD's position. But it's a story that could keep the stock in focus today. So plenty to go through over the day, Nigel.
Well, we're almost into December, and the big question is, will Santa come to town in 2024, December 2024? I'll tell you what, last year he came in with a bang, because last December we had a big Santa Claus rally, and in fact it was even better than 2020 when you had the index that was up close to around 7%, but last year it was even better. The December series, we were up close to around 8% or thereabouts. And this after the last couple of series haven't been so great. Remember, October was a downer. November, we wanted to see a bit of a pullback. Initially, we saw that, and then we saw a sharp decline as well. But if you want to look at a bright spot, then in fact you'll have to look at the, at the Nifty Bank. Nifty Bank, in fact, for the past series itself, that was a bit of an outperformer in last series. Moving to the other couple of data points, then the rollovers. The Nifty bank rollovers, that's been higher than the average, while the Nifty rollovers, well, that's more or less in line with what we have seen. Now, the open interest at the start of the series is something that we normally look at. And at the start of the December series, the total open interest on the Nifty, it's a little bit higher than what we saw at the start of the November contract, but it's still far away from what we saw at October. So it's relatively heavier than the past series, but in comparison to the previous averages, it's not so heavy on that front. What about positioning? The FIs as well as the clients, they have been on opposite ends of the spectrum. And this time around as well, it's not too different because the FIs remain short, but they're not as short as what they were at the start of the last series. And the clients, well, they remain net long. Even in the last series, they were net long. Yet again, they're net long close on 2 lakh contracts on the index futures is what they're net long. Remember, they got it right in October as well when they were net short on the index and the markets did pull back. So I think the clients are still bracing for a bit of a pullback and they have been the ones that have been getting it right. So I don't rule out that December could actually be a far better series in comparison to what you've seen in the last two. On stock futures, they're both on the same lines. As we have seen in the last few series, of both the clients as well as the FIs, they're net long on stock futures. So individual stocks will continue to do well. Coming to the levels then, the last few sessions, I think for the last 4 sessions or thereabouts, this 24,350 mark has been a problem point. And just take a look at it. These are the highs that we have seen. So if we're looking at the resistance, well, this is the resistance, 24,350. Near-term levels that you're looking at, well, the immediate level will be the 20 DMA. We ended below that level in yesterday's trading session, so that's going to be crucial around 24,000 odd. We're seeing some green to kickstart trade, but you'll want to get past that, so that's going to be important. While the next level is the 200 DMA. Remember, in the past series, we went below the 200 DMA for the first time in more than a year and a half. So that's the important mark you're looking at. The Nifty Bank, as I said, for the past series as well, it was a relative outperformer. Very, very crucial levels come up for you on the screen. You'll want to see defend all these levels and, in fact, make a fight back. So the Nifty, well, it will be dependent on the Nifty Bank. That's the one that could lead from here on. And in terms of stocks that we're looking at, more fun and games because you have more number of stocks that will be available in the F&O market. And a few of them should come up for you on the screen. 45 scripts in the F&O market from today itself. And Zomato could be a stock that you're going to be looking at. It's going to be in the Sensex. Now, in fact, it probably could get included in the Nifty as well. Another couple of names like Avenue Supermarts, Geo Financial Services, as well as Paytm, that's actually seen a big rally. So keep an eye out on these clutch of stocks.
Nigel, you're talking about Santa. Do you guys see that story? Santa's complaining of no snow in Norway, one of the Nordic countries.
Global warming.
Did you see that
Gets
picture?
real.
He was sitting, Santa with his red hat. He was sitting there saying, "Well, not a
There's no
flake of snow." I mean, that was.
Is that a meme or is that for real? I don't know. I haven't checked Norway's weather.
Assuming it was kind of just exaggerating to make a point that climate change is real. But I mean, so something to watch out for. Well, Rohit Srivastava is with us, founder and strategist at IndiaCharts.com. Rohit, good morning. Good to have you with us here. Thank you very much for joining us bright and early, Rohit. So good to see you. Rohit, so the question is, I mean, big reversal yesterday, big FI sell number as well. How much should we read into it in terms of taking forward, what happened yesterday as the beginning of something sinister, or you think we should just kind of ignore it as a one-day aberration and look at things more constructively? What happened yesterday, if you have any data, etc., and then road ahead? Go on.
So, yesterday was the monthly expiry, and usually on that day, we do see very big FII, DII numbers. So, we can't really look at that number and take a call. And even if we go a little broader, we know that when there was FII signing and the market was going up, we were giving all the credit to domestic institutions for their buying. So really, when the market is down, to give all the credit to FIs for their selling is probably not the right approach to analyzing this market. Otherwise, you would get it completely wrong. So what we end up doing is looking at sentiment, looking at positioning, and what is really happening to understand this market. But one thing that I'll say, one conclusion that we are coming to is that we are not done with as far as the correction is concerned. Having said that, no market is going to fall one way. And I think after a 2-month fall, we were attempting a bounce back. And I'm not sure that bounce back is over. It's probably still got some legs to go. And this is seasonally a better period than September and October. So September, October, because of the seasonality also, we were expecting a pullback. We got much more in India than we got in global markets. Now, usually this is the year end where you typically get some improvement in markets. And that's, I think, the setup. Yesterday's fall does go below the 20-day average, but still above retracements, even though it's filled the election gap. We can still call it potential higher low in development once we get it. Either it's done yesterday on the expiry day, or worst case scenario, if it does dip, then we'll keep it open till 61% retracement, which is a little lower. But I think we should be headed up to around 24,770 which is a minimum, and possibly closer to 25,000 overall in a counter trend bounce. So I'm saying it is a counter trend bounce. We may eventually see selling pressure again build up as we go into Jan, Feb, March, because again, that is another seasonally weak period for markets typically. And so I'm not really looking at a new high, but it could happen in individual stocks. The mid and small cap indices have held up better than the Nifty itself. So that does raise the possibility that they still do better for the time being. But again, on the Nifty itself, we don't see new highs. So that is the big divergence in the overall setup, which means that eventually we may even go below 23,300, but not right now, not right away. Right now, I think for traders at least, or in the short term, we should be looking at going higher from here and not lower. Another data point, as you said, supporting this, a couple of data points, in fact, are the shorts that have built up, right? There's a lot of shorting in this market that is going on. And we've seen that in the FIA positioning that you were talking about. We saw some short covering yesterday, but it's still a meaningful short position out there. So it's not completely reduced in the market. In fact, out of stocks, one of the interesting reads which I put out yesterday is actually on Reliance Industries. Reliance Industries has the potentially highest short. I say potentially because we are, of course, looking at only open interest data.
Rohit, we'll just come to Reliance in just a bit. I want to just wrap up the Nifty point. So you're saying, so the path of travel in the very near term is higher. Just to make that clear, probably it's higher, right? 24,770 and then 25,000 in a counter trend bounce. But you're also raising the possibility that maybe the correction itself from the September highs is not fully over and that we'll have to deal with at some point. That's essentially what you're saying, right?
That's right, correct.
Okay, got it.
Okay.
Yes.
Rohit, hi, morning. Now, I don't remember the year, but I definitely remember that it was one of those Decembers where we thought everybody is going to go on holiday, but they didn't, and there was a fair amount of FPI action and a lot of volatility and selling as well. I think it was just after COVID or just before COVID. Short point is that I wanted your thoughts on what specifically happened yesterday and whether this cash market selling of 11,000 crores, I mean, would you ascribe any separate technical factors beyond the fact that, of course, it was expiry day, and whether there's any way of further guessing as to what lies ahead? Because we all wanted to believe that the bulk of this FPI selling is over. It had come down to a trickle in the last couple of sessions, and then bam, you get 12,000 crores sold in one day.
So like I mentioned, we have seen this expiration after expiration, that on that day, the FPI selling is always higher than on the other days. And I think it has to do with arbitrage unwinding. It's a very simple equation. If you're long stocks and short futures, right? If you have done that kind of a trade, then on the day of expiry, your futures are closing out. And to the extent that you have cash positions open, which you have not been able to hedge into next month futures where you haven't rolled over, you are going to have to square up that extent of position. So that means cash selling always comes in on expiry day. So you can check back, you'll always find the expiry day cash selling by FI is always being higher than normal, going back, for a couple of years also. So that is why the data point that we are looking at yesterday, 11,000 crores, may not be something that you need to look at and get worried about. What we really want to see is what happens today, what happens after expiration and the rollover and square offs have happened. Do you really see continuation of that selling? And do you see the mid and small caps give up? Because if you actually look at the last two very short-term peaks that we saw, one we saw on, say, 15th of October, another we saw on the 6th of November. Both of them, the Nifty was not able to bounce very far. But the mid and small cap indices did go up a lot, and then they started to sell off from there. Yesterday, we haven't really seen selling in the mid and small cap indices. They both closed positive. So unless you see weakness in the broad market, I would think that, it's again a one-off that what we've really seen yesterday. It's not giving us the same behavior that we saw in the last two occasions.
All right. Hi, Rohit. Good morning and good to see you, Ben. So I think consensus is correct. We started the show that's saying that maybe, in fact, that FI selling is not something that we should see. And it appears that, that seems to be your understanding as well. So good to see that. But you were making that point on Reliance, and the open interest surge that we've seen out there. That's been the bear's favorite stock of late. Stock has corrected, underperformed the markets as well. But in the open interest build up, what are you observing and how do you expect things to pan out from here on?
So this is the highest open interest since 2006.
Yes.
And it's been pretty much one way up on the OI chart, even as prices were continuously falling for Reliance Industries. It's been a relentless sell-off, I think, over the last 1.5 months. And what that usually means, because it is an inference, we don't have the long-short breakup. So the inference that we make is that if prices are falling and OI is rising, it's possibly got to do with a lot of short selling. Okay, so it's the inference essentially means that if there's such a big short built up, any kind of reversal in price would result in a lot of short covering. Whether it's just price action or whether it's news-based is something we'll of course have to see. But there's a case that any turnaround could drive short covering in the stock, and that's something to really watch out for.
All right. So, but do you think that is likely to happen? At around 1200, 1220, we have seen the stock bounce off those levels, Reliance Industries. And if that could come to the party, it'll be very, very good news for the bulls' perspective. So we'll keep an eye out on that front. Rohit, a couple of more questions on stock-specific action. You have more to deal with now because you have 45 new F&O stocks that will be coming in there. Any interesting price action that you're looking at? Zomato has been looking very, very good. Paytm out of nowhere, in fact, has looked good. I've seen this in the past, Rohit, and you will recollect as well. Stocks like Just Dial and all, they came into the F&O market. Everyone thought they were going to run away from them. And from there on, they became the biggest shorting candidates once they came into the F&O market. This time around, any specific stock you're looking at? 45 have been added to the list.
So without really naming a particular stock, what you said is very true, because it's purely psychology, right? We end up recognizing a company based on its past record. And when the record has been good and the stock has done well in terms of performance, we bring it into the futures and options segment, and from there sometimes the performance is not as good as it was in the past. So this has got a lot to do with mass psychology than anything else. Having said that, I'm sure it's not always the case. I mean, in early stages of a bull market, stocks that got included probably did well as well. So where we are in very, very late stages of a move, there's the potential that you have a very different outcome. Now, having said that, if we try to look for winners in this kind of a market, it's not going to be easy, because on days when the market is down, like yesterday, you might find many stocks making new lows and you end up getting caught in that. So I'm again repeating, this is to us still looking like a counter trend bounce. We are not really looking at new highs. That means the chances of getting stuck in stock specific moves is very, very high, which is why we'll probably not take a stock specific approach at this point of time. In fact, be more worried about when the next sell-off will come in, and you end up seeing much lower prices. So very tough call to really take at a stock specific level.
So a bit more defensive in terms of overall approach to things, and not going all out. So that's an important thing. Counter trend and not trend. And when the overall bigger trend overwhelms, we'll have to see. Two other things. Anything from a global macro? Quick one, Rohit, which is important to track. Anything moving?
So
breaking?
the good part, the good part is that bond yields are probably starting to head lower again as far as the US is concerned. Unfortunately, we don't have the same clarity on Indian interest rate cycle, though bond yields in India also have been slightly off. But the currency, which is USD INR, is so close to an all-time high that I really doubt that the RBI can pull a rate cut on that. So that's where the global setup is. The dollar, though, still remains strong. So we have this contradictory move between a rising dollar, but at the same time, you have rising bonds. That's slightly deflationary, which is what we see in commodity prices, which is why even taking a bet on, say, the metal sector is slightly difficult at this point of time.
All right, Rohit, we'll leave it there for this morning. But great conversation as always. Thank you very much. And I look forward to many more at 8 o'clock. Thank you. Have a good weekend as well.
Yeah, this was nice. Count on us to call you again and again, Rohit. But that's really reassuring to you, reassuring to hear that explanation that this large FPI number is probably only technical in nature because of the expiry, the monthly expiry yesterday. Maybe we don't have to get so worried about it. Let's move on then and tell you what else is lined up on the show today. Lots of corporate interactions coming up as well at 8:30. First of all, we'll have Siddharth Khemka of Motilal Oswal joining in. We've discussed the technical setup of the market. What about fundamentals and what are the stocks that you can focus on today? So we get down to it. At 9 a.m., we'll have Manas Agarwal of Bernstein joining in this big debate around whether the bank assurance channel is going to be tightened up for life insurance. But it all started with the FM's comment. Stocks are falling yesterday. What's the Bernstein view? We'll tell you in a bit. At 9:20, we have Devina Mehra joining in. She is our market master of the day. We'll get some perspective going with her. At 9:30, we chat with Sheila Foam. We talk to the management about demand trends and the expectations for the second half. After that, Srinivasan Varadarajan of Union Bank of India will be with us. We discuss the business momentum and the trends on both the lending side and the cost of funds. And at around 9:50, we have Saurabh Gupta of Dixon Technologies joins in. Motilal Oswal has gone quite bullish on this stock. So what are the business expectations? What's happening on the ground? We'll get a check going with Saurabh Gupta. And then on It's the Economy today, Lata will be in conversation with Pranjal Bhandari of HSBC to discuss their expectations from the GDP data that is due today.
Well, time to slip into a short break, but on the other side, we'll get into stock-specific action. All the top stocks in news are waiting for you. Stay with us.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ सत्यनिष्ठा से प्रतिज्ञान करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी।
श्रीमती प्रियंका गांधी वाड्रा।
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ सत्यनिष्ठा से प्रतिज्ञान करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी। मैं भारत की प्रभुता और अखंडता अक्षुण्ण रखूंगी तथा जिस पद को मैं ग्रहण करने वाली हूँ उसके कर्तव्यों का श्रद्धापूर्वक निर्वहन करूंगी। जय हिंद। I'm very happy.
Each company has their own strategy, so I cannot comment into what others are doing in. But we are very sure that after the launch, we will definitely take again the feedback of the customers who gave the feedback initially in terms of what kind of product they are looking at from us. And after the, not only the product, but even the service aspect which we have mentioned today.
Welcome back. So the cues are all right. I mean, it's a little mixed across Asia, but the implied open is giving us hope that we'll start off positive. So let's see if we can recover from yesterday's fall. Lots of stocks are going to be in news as well. So let's straight away get to it. We have our team standing by with a list of top stocks to watch this morning. First and foremost, Nigel, these F&O inclusions, 45 new boys and girls in the house.
Well, that's right. It was announced, a few days ago. And from today onwards, the 45 new stocks will be entering the F&O bracket to trade in. And as of now, you had close to around 178 stocks that were already trading in the F&O. Now, to that list, you'll add close to around 45. And some of the notable entrants were Jio Financial Services. You have Zomato as well as Avenue Supermart. So we'll have to keep an eye out on all these stocks. Zomato, because it's probably a nifty inclusion once they come up for their inclusion criteria. Towards the end of January is normally when we see. And we know the industry has got a bit of a tailwind with it as well. For Avenue Supermarts, I'll be interested to see what happens out there, because we know valuations are rather expensive. So let's see whether or not some shorts pile on to the system, given the valuations, given the way business is shaping up. The other notable inclusions will be some of those Adani Group stocks, Adani Energy Solutions. The stock has corrected big time from the top. In fact, it's one of the stocks that is still below the Heidenberg low. So we'll have to keep an eye out on that one. Adani Green, APL Apollo Tubes as well, and Adani Total Gas. Some of those stock market related plays as well, whether you look at CAM, CDSL, BSC, Angel One, all of them come into the list. And a few more to wind this down. We have CGPA, Delivery, Hoodco, IRCTC, as well as Nykaa. So keep an eye out on all these names. Just thought we'll put up a few for you on the screen. For me, Zomato will be top of mind from here till January end, because that's got the industry tailwind, and now it's in the F&O list, so it gets eligible for a nifty inclusion.
All right, Nigel, thank you very much for that. So let's keep an eye out on these names, F&O additions coming through to the market. Well, more stocks with news flow. Vamakshi is here with details. Vamakshi, morning.
Good morning, Prashant. Let me first start off with Zee Entertainment. This stock will be in focus because shareholders have rejected proposal to reappoint Puneet Goenka as the director of the company in its AGM. The proposal was defeated by a 50.4% vote. Now, keep in mind that earlier, the proxy advisors InGovern and IIAS both had recommended that shareholders should vote against his reappointment. And in fact, a couple of days ago, we did see Puneet Goenka step down as the MD of the company in order to, concentrate on the activities as the CEO of the company, and therefore he will still continue to hold on to the reins of the company as the CEO. Apart from that, keep an eye out on Reliance Industries. Reliance Finance and Investments, a step-down wholly owned subsidiary, has entered into a stock purchase agreement with Wavetech Helium Inc. or WHI. This is a US helium gas exploration and production company. They will be acquiring nearly 21% stake in the company for $12 million. Fine Organic is another counter we will be watching out for, and that is because they've resumed manufacturing operations at their plant situated in Badlapur from November 28th onwards, after it was earlier disrupted on account of a fire incident that took place a couple of months ago. They are actively working on fully restoring all other plant activities to normalcy, and in addition to that, they also mentioned that they received an on-account partial claim amount from the insurance company. PCL, watch out for this one as well. That is because they've commissioned second and final phase of specialty chemical capacity at their plant in Mundra, Gujarat. With this, the combined manufacturing capacity of the company stands at 7.9 lakh MTPA. Lastly, let's watch out for Newgen Software as well, because they've received an order worth 37 crores from the RBI, and this is for regulatory application management system. So overall, these are the stocks that we will be watching out for.
Okay, and thank you very much for that, Vamakshi. In that list, might I add this NCC order win? It's huge for the Ken-Betwa link project. It just flashed on the screen right now. Just pulling up the details from the exchange. So there's a dam and all kinds of related construction work. 3,389 crores. I mean, almost 3,390 crores is the value of this project. It's a big one for NCC. So perhaps need to look out for this one as well. All right, with that, let's quickly move on and go across to Manisha for all the currency and commodity market action. Manisha, good morning. So what's top of mind?
Well, after days of conversation between Israel and Lebanon coming to a ceasefire agreement, what we hear in the overnight reports is that Israel and Lebanon are now accusing each other of ceasefire violation. And that's exactly the reason you have seen the crude oil prices gain up a bit. The other thing is the OPEC and allies have delayed their 1st December meeting now to 5th of December to avoid conflict with another event. OPEC and allies, in any case, are likely to extend production cuts. So that's what the markets are factoring in at this point in time. In the metals as a sector, we'll see some support come back in in case of gold and silver. Remember, the trading is thin with the U.S. Thanksgiving week going on. In the metal space, we've seen good comeback for zinc, which is trading at a 4-week highs. Lead is trading at a 5-week highs as well at this point.
All right, Manisha, thank you very much for that. So that's precious metals and commodities in focus. We take a very quick commercial break here. We're going to come back. Siddharth Khemka, Head of Research, B&D at Motilal Oswal Financial Services, is going to be with us. We'll put some stocks to him on the other side. Stay with us.
Also give an assurance to all the customers who are actually looking for a trust and reliable product in the market, which currently is not available as of now. So keeping that in mind, we will bundle the entire price accordingly, keeping in mind all the aspects of our product as well as the services which we will render from our rendering setups.
FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution, and we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27 we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding which will be at the most optimum price.
As far as resources are concerned, I think we have an extensive R&D facility which is working in Japan, and the entire R&D really works in terms of creating a product which is really good for the Indian market. And we have done extensive research not only from the customer's perspective but even from the suppliers, from the dealers' perspective as well, in terms of what kind of product they are looking at. And based on that research only, we have created these two nice products today, for which we are introducing today in Activa E as well as QC1.
Just spoke with Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah.
Welcome back. Hope you're having a good morning. Well, we start off a new series today, which is the December series. So let's discuss a few stocks with Sid Khemka, Head Retail Research at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning and good to see you. Well, we've got some news that just flashed for our viewers on the screen. NCC, they won a big order, 3,300 crore rupees, which is large enough in size. What's your view on the stock? And if you have a view on any other stock from the sector, or you prefer to play it via NCC?
Yeah, good morning, Nigel. So thanks for inviting me here for the show on Friday morning. If you look at the expectations post the Maharashtra election was that the construction activity or the spending capex activity will increase going forward, because H1 we had not seen much of activity, and especially from the government side, NHI orders have not been there. So the activity would go for sure increase going forward. NCC, somehow we don't have coverage, but I think it's a very positive development. Some of the other companies in the space, if you look at on an overall capex theme, KEC International is something that has been consistently getting orders in the transmission and distribution side. That is something that we kind of like a lot. Larsen is a preferred pick to play the entire capex theme, be it on the construction side, be it on the capital goods side. We believe that with the increasing capex spend, both from the government as well as from the private capex cycle, so that should be positive for Larsen. What has also helped Larsen is that the global order book has been pretty strong. Global business has been strong, and the domestic business should now see some recovery. And that is something that should drive growth for Larsen going forward.
No, absolutely. I get that. Just a quick word on, two areas, Siddharth, where we saw a fair bit of price action. One is all these defense names. Even yesterday, if you look at the PSU defense, the index, it ended higher within in a market which was actually down sharply. Cochin Shipyard, BEL, of course, has been outperforming, and a bunch more, BDL, etc. What do you like there, Siddharth?
Yeah, so Prashant, if you look at the overall defense space, fundamentally things have not changed much. What happened over the last couple of months is that valuation-wise, things had gone a little bit over the roof, and that is what kind of consolidated, and we saw the correction mainly on the valuation front. In terms of results, we see consistent delivery from most of the defense players, be it the Bharat Electronics, HAL, Mazagon. So what we believe is that, again, H2 is generally a better quarter for the overall capital goods defense space. Q4 is the strongest quarter that we see for most of the defense players. Within that space, we like Bharat Electronics, which is our preferred pick. We have a buy and a target price of 360 over there. We also like HAL, which is a market leader in the aeronautic space. Plus, Mazagon, I think valuation-wise is now very comfortable. It's a leader in the defense shipyard. And if you look at the results, Q2 has been very strong numbers. Valuation-wise, also on a forward earnings basis, we see 30-35 times price to earnings, which is much comfortable compared to some of the smaller names, which we believe are trading at a higher valuation. So in terms of comfort, growth, as well as valuation and earnings growth, we like BEL, HAL, and Mazagon.
Got it. All right. Sid, what about the Swiggy versus Zomato argument? Both seem to be doing well. Swiggy, in the IPO, not too much interest. They left some money on the table. Kudos to the promoters as well as the bankers for that one. And the stock has given you a quick fire, 20%. Your view and the choice between both of them?
Yeah, I think, Nigel, it's an interesting debate once both the companies are listed. So earlier we only had a choice of Zomato, which was doing well. The only difference that I see is that while Zomato has already turned profitable, the path for profitability for Swiggy is still some time away. Based on our estimates, we are expecting the company to turn profitable only by FY27. Nonetheless, growth in this segment is pretty strong. Both have raised capital, Swiggy through the IPO, Zomato through the recent QIP. It has raised 8,500 crores. Blinkit has been doing very well. Swiggy has regained some market share, but if you look at the entire space is heating up. Zepto has also raised money. Some of the other large players, Big Basket, Amazon, Flipkart, they have all getting into the quick commerce space. So exciting times ahead. But for now, we believe that Zomato is our preferred pick in the between Swiggy and Zomato. We will go with Zomato. We have a buy rating, target price of 330. They have also unveiled the District app, which is the one-stop destination for the going out theme for them, which we believe again could play out in a big way over the next few years. The 8,500 crores QIP that will help them in aggressively expanding the Blinkit operations, adding new stores, warehouses. So overall, we see it's a full package of growth, and current valuations are still comfortable given the growth and the company which is already turned profitable. So Blinkit would also turn profitable. Cash generation is pretty strong. So we'll go with Zomato with a target price of 330.
Okay, so Zomato over Swiggy. Got it. Siddharth, stay on. We'll come back to you for some more questions. But in the meantime, let's get to an exclusive conversation. Air India CEO Campbell Wilson says the revival of the airline will be the Everest of corporate turnarounds. Speaking exclusively to CNBC-TV18, Wilson also sought patience, saying that the management will need 5 years to get the airline back in shape. He also said that the ambitious plan to upgrade the legacy fleet will take more time and cost than the budgeted $400 million. Take a look.
The investment that we're making in turning around Air India is significant. It will take some time to turn around the airline from a financial perspective, but I think if you look at our reports, we are making very, very good progress. And so I think we always said that this would be at least a 5-year turnaround. There was a reason why we said that it would be a 5-year turnaround. There was a reason why the economists said that it was the Everest of corporate turnarounds. I think what we've achieved in a little over 2 years is significant. It's certainly not finished. We are as impatient as anyone to bring it to closure, but I think progress is occurring. We committed more than $400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. The 787 aircraft, the first of the retrofit ship sets will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that $400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. And that was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India, but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
All right, that is Air India and its turnaround plan. We'll take a quick break on that note. Up next, we have our technical experts joining in, Mitesh Thakkar and Shrikant Chauhan, to help us understand the trade setup for today and some trading ideas as well.
הערב אביא לאישור הקבינט מתווה להפסקת אש בלבנון. משך הפסקת האש תלוי במה שיתרחש בלבנון. בהבנה מלאה עם ארצות הברית, אנחנו שומרים על חופש פעולה צבאי מלא. אם חיזבאללה יפר את ההסכם וינסה להתחמש, אנחנו נתקוף. אם הוא ינסה לחדש תשתיות טרור בסמוך לגבול, אנחנו נתקוף.
just spoke with the Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah. I want to thank President Macron of France for his partnership in reaching this moment. Effective at 4 a.m. tomorrow local time, the fighting across the Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy and take control of their own territory once again. Hezbollah terrorist infrastructure in southern Lebanon will not be allowed to be rebuilt. And over the next 60 days, Israel will gradually withdraw its remaining forces. And civilians on both sides will soon be able to safely return to their communities.
Welcome back. Well, yesterday we saw a downtick. It could be expiry related, and maybe the probability of us seeing a bounce back from lower levels could be rather high actually. But let's get in our technical guest. We have Mitesh and Shrikant who join us. Good morning, gentlemen. It's a Friday. Get through today and then get into a good weekend. But for the time being, our viewers will want to know, Mitesh, how do you trade the index? Buy into that dip we saw yesterday or stay away?
Nigel. The weekend would have been good except for the last 2 hours yesterday, which kind of changed the... So I think, one, getting below 24, 150, 120 zone was a slight negative. You've kind of, violated the pivot which was holding this bounce back. And therefore now capturing it becomes very important, and therefore any fresh long bias should be taken once we see the Nifty stabilize about 24, 150. What could happen negative on the downside is if we see the Nifty break 23,950, then there's a good chance that the index might actually, head towards levels of 23,800 and in the worst case scenario, even 23,500. So we'll keep a watch on the index that way, hoping that this 23,950 pivot holds. It was, actually Nifty just managed to close below that, but the opening gap up, should be good and should provide some support. So yesterday's low can be taken as a fresh pivot. Having said that, I think, the other important factor was that on the upside, 24,350 on the last, for the last 4 days, which is the entire week, has been registering intraday highs. So I think a bigger trend change will happen once we see 24,350 being taken out. Till then, I think it will be a slightly choppy market with a mild negative bias.
Okay, all right, Mitesh, got that. Let's bring in Shrikant as well. Shrikant, what is your sense? Big scare yesterday, but we've been speaking to a lot of experts, technical experts, F&O experts. They're all saying that it was expiry related. Don't get worried. Anyway, levels and index strategies for you?
Good morning, Surbi. Good morning, Nigel. Yeah, it was like scary because it was not expected that the market can break the level of 24,000 so easily, but it has broken that. Also, on the other side, if we see the overall trend of the market, which was like lot of under pressure, and the rally of 1,000 points was like just a pullback. So we were expecting some correction, but it was not expected to the line. Yes, there is a possibility that we may see the levels of 23,800 or 850 in today's date, and I am of the view that close to this 23,800, the market should find some support and again rebound. So broadly, I am of the view that we should look for taking some contra bets of going long close to 23,800 with a stop loss at 23,700 on the downside. Excuse me. Also, Bank Nifty is also around its important supports of 51,800 and 700. So there we can see some support, but broadly, I am of the view that we need to focus more on the Nifty around 23,800 for taking contra bets. And again, we can expect 24,050 or 24,150 on the higher side.
Okay. Well, let's just get the trading specific ideas out as well. Gentlemen, morning. Mitesh, what do you have?
Yeah. Good morning, Prashant. I have a mix of buys and sells today. On the buying side is Exide, keep a stop below 450 here, look for target of 470. And is L&T Finance, buy here with a stop at 142 for targets of 150. And both these sells are conditional. I think, if they see continuation below yesterday's low, then Tech Mahindra will be a sell. So sell below 1705, look for targets of 1665 and keep a stop at 1722. And similarly, HDFC AMC, sell below 4180 with a stop at 4225 for targets of around 4080.
Okay, and Shrikant, stock ideas?
Yeah, I think in this uncertain sort of trend, we should look for adding or taking bets on those stocks where there is like some event or something like related to the news flow. We like Zomato, which is around some 285, 284 levels. There we are expecting further more upside in the near term. It is around 286, 284, but if we see any upward activity in the stock, then the stock can easily cross the levels of 300 or 315. So it's a buy at current levels around 286 with a stop loss close to 277. And we also like DMart, which is around 3700 levels, and multiple times the stock has taken support close to these 3750, 3650 levels in last 1.5 years. So it is very close to its long-term support levels, and today's inclusion in the FNO may add some more momentum in the stock. Broadly, I am of the view that we should look for taking some positional view on DMart at current levels with a stop loss close to 3600, and we can expect 4000 sort of level in next few days or weeks.
All right, gentlemen, we'll leave it there. Thank you very much for joining us with that perspective as far as markets go. We'll take a quick commercial break here. We'll be coming back on the other side. We put the focus on the insurance space. The CNBC-TV18 exclusive yesterday. And we'll get Manas Agarwal of Bernstein to put the focus on what he made of it on the other side. Stay with us.
We don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table, and whether there's going to be any change in regulation or not. But you're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got...
Nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, I think that it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock. And that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? Tens of billions of dollars without having to be an Amazon or a Walmart, right? To get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government, but even by the market, shareholders, and the public at large, right? People trust you more. So, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country, and we're just a small part of that today, and so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps again, as I'm pointing out, we don't know. There's been no official comment from Zomato, but HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and what we're building, which is commerce, right? We're employing. Obviously, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But that's the feedback that we've gotten, right? In general, if you look at companies, in the Nifty 50, right? Most of them are, Indian owned, and most of them have,
The pre-open rates are just trickling in, so we'll get more concrete numbers just in the next few minutes or so. For the time being, let's welcome Avni Bhatt, the Senior VP Equity Derivatives Research at JM Financial Services, who joins in. Hi Avni, good morning and good to see you. And as always, we're kickstarting a new series, and we're just making this point earlier. The bulls are longing for Santa to come along. And last year, he did arrive. 7% rally is what we saw. Do you think a relief rally is on the cards? I think that was on the cards. The problem is yesterday's close was a bit iffy. Your take?
Good morning, Nigel. Yes, I believe the Santa is going to come in this particular month, and probably in the second half of the month. So just going by the time series analysis, I think we still have 1 week to about 8 to 10 days still left for the time correction to happen within the range of 23,750 on the downside and 24,350 on the upside. So post that, I think we need to give around 7 to 8 days to the market. And post that, we should be seeing a good short covering rally. And by later half of the month, we should see long build-up also coming in. So Nifty is heading towards around 24,800, 25,000 in this month. Bias has to be on the positive side. Similarly, for Bank Nifty, 52,600 is the resistance level. Once that is crossed, and Bank Nifty gives a close above that, then we are heading straight towards around 54,000 to 54,500 mark. The supports to be watched out for 23,750 on Nifty and 51,300 on Bank Nifty.
Got it. All right. What about top picks?
So just going by the rollover figures and some of the expectation of being a dark horse, I have 3 stocks on radar. First is Chambal Fertilizer. All these 3 stocks have held on very well in yesterday's fall also. So Chambal Fertilizer is a buy around 495 level for a target of 518 and a stop loss of 482. Next is from the banking sector, City Union Bank, a buy around 178 for a target of 190 and a stop loss of 173. And the dark horse that I'm talking about is NMDC. I believe that it may rally up to around 238, 242 in December series. It's trading around 227. One can go long in the stock with a stop loss of 222.
All right. Okay. Got it. Thank you very much for that, Avni. By the way, the pre-open has kicked off. Let's wait for it to settle, because right now there's some red flashing on the screen. We'll see how it plays out. Right now, about 60 to 70 points lower on the Nifty in the pre-open session. Right. Let's, however, move on to a CNBC-TV18 exclusive. We told you earlier that Aster DM Healthcare is in advanced talks with Blackstone-owned care hospitals. Now we understand that a deal is imminent. Rachna has been tracking the story. She's joining in with the details. Rachna, so what's at play here?
A deal is imminent between Aster DM Healthcare and Blackstone-owned care hospitals, marking a major consolidation in India's healthcare sector. CNBC-TV18 had exclusively reported in August that Aster DM was in talks to expand their hospital network through care hospitals. Blackstone, which owns about 72.5% stake in Care, and Mopin Family, holding about 42% in Aster DM Healthcare, will be doing a share swap agreement to finalize this transaction. The deal will create a new entity in turn with a leadership team comprising of executives from both Blackstone as well as the Mopin Family. family. And ownership stakes in the new entity will see Blackstone holding about 34%, TPG at 11%, and the Mopin family about 23%. With each partner, that's Aster and Care, bringing in about 5,000 bed capacity to the table, this collaboration is poised to significantly enhance the scale and operations across India's healthcare landscape. And this will make the newly created entity second biggest hospital chain in the country. CNBC-TV18 has reached out to Aster DM Healthcare and Care Hospitals for an official response, but is yet to hear back.
Okay, well, deal imminent, and we'll tell you when it happens. Rajna, thank you very much for that. Remember, we'd reported this first in August of this year, and now, of course, we're putting it out there that perhaps a deal is very, very likely very, very soon. Let's put the focus on the insurance sector now. Now, stocks were under pressure yesterday. CNBC-TV18 via sources said yesterday that the insurance regulator, the IRDAI, is worried about insurers' dependence on bank assurance, banks basically, to sell insurance products. The dependence on bank assurance as a channel. And the IRDAI has also said that they will monitor the insurers' dependence on the bank assurance channel. And they've also advised insurers to reduce this dependence on bank assurance as a channel to sell these insurance products. Remember, you also, of course, had the finance minister making the same point. You also earlier had the IRDA chairman, both on record, making the same point. We had some comments from some of the top insurance companies like HDFC Life, Max Life, SBI Life, post-close, essentially saying that they've not got any directive in this regard. But that wasn't our story. Our story, of course, was that IRDAI, the regulator, has advised these companies to reduce their dependence on bank assurance. Manas Agarwal is Vice President and Research Analyst at Bernstein, who's joining us now to take some questions. Manas, good morning. Great to have you with us here. Prashant this side. You wrote a note post that story as well, taking note of that story. Just your first thoughts, Manas. How do you read the situation?
Thanks for having me today. I think the proposal, rumor or report that you guys put out, there was a counter proposal as well, and then companies have come out and made some clarifications. Very early days, but if this was to be implemented, this will be a major challenge for the private insurers on the life insurance side, simply because banca is around 60% plus of their total sales. So the first part of the proposal to control it to a lower than 50% number, that will be painful but possible. The other part is capping the share of the parent bank within total banca, which I think is more difficult to implement and which would be a bigger pain point if that is happening. Now, companies have said, and there are other reports also suggesting that this is not something that has been implemented or being proposed. So we'll have to see, but I think given the clarifications came in, I think stocks should open in the positive today, but I don't expect them to cover up all the losses from where they were at the point where the news broke out on CNBC.
Manas, so that is exactly the point. There are two things here, right? One is total dependence on banca. The second is, the dependence on respective parent banks and what happens there. So the story, I just want to clarify for our viewers, the story, of course, which we put out yesterday is the former, which is that, they've sort of asked and advised insurers to limit total dependence on bank assurance as a channel to under 50%. That is essentially the story. As far as they've also asked dependence on insurers to reduce dependence on their private parent banks, but there is no limit. That 50% is for bank assurance as a total channel. Do you think if it is the former which gets and there'll be a timeline, glide path, and there are other details which we put out, as you must have seen, the damage perhaps is going to be limited if it's just the former and done in a incremental way?
Yeah, if it's just the former, then the damage will be much smaller than it is proposed under the second alternative. There will be a long glide path that will be required. So today where people are at 60-65% banca, getting them down to less than 50 will basically mean they will need to invest in agency, which is a good thing in the long run, but near term there will be pain because you will ask your bank channel to stop growing. to achieve this within a time frame, which whatever is proposed. So I think there will be pain either ways. The first proposal, lesser pain than the second proposal, more achievable as well, the first proposal than the second proposal. We'll have to see how this pans out. It's very clear, at least, that the government and the IRDA are thinking towards these things, the modalities of it, now with the pushback and probably the efforts by the companies to streamline these ideas. That will come out in due course, but there is some effort being made.
Okay, and that is, again, an important point that the finance minister and the IRDAI, I mean, as you said, sort of it's coming from the top, right? The finance minister on record mentioned this recently as well. In terms of individual, you said, there are close to about 60% or so, the dependence on bank assurances, and then we should put that table up. We have the numbers for H1 of FY25. For players like SBI Life, over the last 1 year, they've already reduced. I don't know if you've tracked those numbers, dependence on bank assurance. And that kind of ties in with the fact that these nudges, this advice has been communicated to the industry over the last 6 months. So it's not sudden in that sense. Have you noticed that trend as well? Dependence on bank assurance, especially for players like SBI Life coming off.
Yeah, I think SBI Life was slower than the private sector bank dependence or sales in that channel. I think the comments you saw from the finance minister a few weeks back, probably they were given up to public sector banks earlier, and that started to reflect in SBI. That is one hypothesis. The company has not really commented or clarified on that aspect in their con calls, so we'll have to wait and watch. Irrespective, anyways, everyone was aggressively investing in agency. So agency channel has grown faster than bank channel for everyone. And that's a function of capacity addition over the last couple of years and in this year as well. So I think this is going to become a theme where agency becomes more important. Non-bank distribution channels like agency and Policy Bazar stand to benefit. Players who have, for different reasons, already lower exposure to the bank channel, the parent bank channel, will stand to benefit. And that's broadly also going to open up space for players who don't have a bank backing. So there is a possible introduction of geo-financials into the fray. So that all will level out the field to some extent for new entrants or foreign investors looking to start up under proposed 100% FDI. So that, I think, is the broad direction for the sector.
Manas, I'm looking at your current ratings, and you have outperformed on a lot of the stocks. You do like life insurance space, right? There's an outperform on SBI Life, on HDFC Life, Maxfin. You have an underperform on iPru and an outperform on Policy Bazar as well. So now, going back to what you just said, that how it happens, what is the specific glide path, what are the specific levels, I think we'll get the answers in due course. But it seems to be clear, if you work with the intelligent assumption that in the coming weeks and months, the banca channel will have to be curbed, right? And you'll probably have to build agency or some other format of pushing the policies or, the sales. Any back of the envelope calculations in terms of the cost, in terms of the additional capital needed? How should we start assessing the impact? Because this is coming from the finance minister herself, no less. So if we work with the intelligent assumption that there could be some pressure on the banca channel, what's the calculation we need to start looking at?
I think before answering your question, what we need to understand is 60% of private volumes come from the bank channel. So it's not going to be a hack and slash today. I think we are probably reading a lot into the pace of implementation. I think there will need to be a long glide path. Having said that, what this will mean is more agency additions. Agency does not entail a lot of capital, but what it does have is a longer gestation to get to a stable cost kind of a scenario. So that will be a drag if and when the companies decide to go down the path of investing in agency relative to banca. And that will need to happen. I think that will play out. In terms of the names that you mentioned, yes, the view will have to evolve. We'll see how details come out. One from the regulator, other is from the companies. I think players in the non-bank distribution model will stand to benefit if and when this gets implemented.
Absolutely. LIC, ICICI Pro, etc. Thank you very much for joining us, and good speaking with you here, Manas. Clear conversation and some insights as well. Now, microfinance companies have been under pressure. Goldman has downgraded their rating on CreditAccess. Abhishek is here to tell us that. Abhishek, morning.
Morning, Prashant. So Goldman Sachs has downgraded CreditAccess Grameen to sell from buy. They have cut the target price by 60% to 564 from 1,426 that was there earlier. They say that earnings visibility is clouded amidst asset quality concerns that is there, and derating structural in nature now for CredAc. So they have been negatively surprised by the acceleration seen in the decline in asset quality in Q2 of FY25. So they expect deterioration in asset quality to accelerate further, and also the impact from MFIN regulations will be felt in CredAc book. So they cut the EPS by 40 to 50% over the next two fiscals, that is FY25 to FY27. They expect credit costs to remain elevated over the next 2 years, and valuations don't adequately reflect the underlying stress in the book that is there. Back to you.
All right. Thanks very much, Abhishek, for that. Market open coming up, and you'll see the CreditAccess stock also in a bit. But as always, we start with indices about 0.25% higher, 23,984. You got the Nifty Bank, which is up about 1/3% up, so 52,073. And mid-cap index, I saw some green, but now some red as well. It's kind of flattish at this point in time. 60 points on the Nifty. You've got the IT index, which is down about 1/3%. I can see that 2:1, but this is just too early for making any conclusions about the broader market. The Nifty heat map is telling you that you've got 39 odd names in the green, and a minority of stocks which are starting up in the red. But it's about stocks. Survi.
And let's start with insurance right there. And there is recovery after yesterday's big drubbing on these stocks. HDFC Life, SBI Life are up about 2%, about 1.5%. Even the non-Nifty names. Look at ICICI Pru, 1.5% up. Max is up about 1.5%. So even LIC, almost 2% higher. Recovery on life insurance, that's theme number one. Let's come back to the Nifty and see what else is moving. Some of the gainers include Adani Enterprises, Sun Pharma, Adani Ports. So some of the Adani stocks are also recovering from the looks of it. There's buying on Lever, Reliance. Some of these heavyweights are doing well. HDFC Bank can be counted in that list as well. So these are some of the early movers. Titan, Tata Consumer. These are some of the consumer names that have started off positive. What isn't doing too well is technology. TCS, Tech Mahindra, HCL Tech, all those stocks are lower. Infosys is also down, and Power Grid is cooling off. So actually Nifty is quite okay. Barring tech, almost everything is either flat or positive. And life insurance stocks are definitely on the mend, at least for now.
All right, well, let's take a look at a few stocks. Easy Trip, that stock is up, in today's trading session, so big volumes on that one. Adani Green continues to chug along. That's up close to 9%. Z Enterprises, I think you've spotted that one out. That's up close to around 8% now. Honasa yesterday was up, I think, close to around 10-15% in the last couple of trading sessions. Honasa today as well is up close to around 7% or thereabouts. So big move is what we're seeing. In terms of top, volume movers, you also have Mart India. Don't normally spot that stock, but it's one of the top volume gainers in today's trading session. CreditAccess Grameen continues to move lower. That's down close to around 11%. You have Kochi Shipyard as well. That's seen some profit taking. Now down close to around 3%. And Bharat Dynamics, that one as well, on the losing end. So the headline index bounces back. It underperformed yesterday. Today it's doing a relative outperformance, up 60 points. Well, the mid-cap index, well, it's mildly in the red, but the breadth of the market, you have three stocks that are advancing for one stock that's declining in today's trading session. Looking at the top movers as well, let's pull up a few stocks that are eligible for the F&O trading from today itself. Geo Financial, I think that stock had opened up with a green tick, so that's up close to around 1% or thereabouts. Zomato should come up for you on the screen. That is making fresh 52-week highs, as well as Swiggy. Yesterday, I think Swiggy as well did quite well. Zomato for the timing mildly flattish to a bit of a negative bias, while Swiggy as well, I think yesterday it went all the way to around 520, and from there it's pulled back a little bit. But a good start. Let's hope that the bulls can build on to this. NCC, that one is moving higher on very, very large volumes. And I was looking at granules as well. It appeared there is some long addition on that stock. So keep an eye out on that stock for the next few trading sessions. December could be a crucial month for this one. Granules should come up for you on the screen as well.
Yeah, NCC moving because of this large order win that they've announced, over 3,000 crores, this Ken Betwa link. By the way, Honasa, look at it. I mean, the fall was dramatic and the recovery seems to be equally dramatic. Yesterday, 10%. Today, you've got 7% on Honasa. This week's winnings for Honasa already 20%. So pretty dramatic moves over there. And Sagility is the recent listing, has put on 28% this week. And Friday's only just begun. 3% on Sagility as well. The Adani group of stocks, like Nigel mentioned, all the gains are pretty much intact. I mean, Adani Power, Green, Total Gas, all of these stocks are up and about as we look at them. Let's just check some of the PSUs. Yesterday, the PSUs managed to buck the otherwise weak market trend. This morning, let's pull up NMDC and the likes. NBCC and Hudco. These were the stocks that announced order wins yesterday. They were up and about. Union Bank is up about 2%. IOB, so some of the PSU banks are still carrying on, but the other stocks, Hudco, IRFC, RVNL, NBCC, they've come in for a bit of profit taking.
CreditAccess, right? That is the one which is selling off hard, and it's a big knock. It had come up a little bit from the lows recently, but guess what? All of that basically it recovered 10% from the lows, and it's giving back those the 10% once again. So we're pretty much, I think, in the lows of the cycle so far as this one is concerned. The thing is, CreditAccess is widely considered as the best in the industry. I mean, it's like the highest quality microfinance name. And if Goldman's view is this with CreditAccess, I mean, I'm also wondering what the view is. If they have coverage on other microfinance companies, what the view is there. But we'll see if this comes to fruition in terms of their view and whether there is more pressure. Well, I think we rushed Abhishek through into market open. He was getting us that view from Goldman Sachs. Abhishek, you left off saying 40-50% cuts to their earnings estimates for the next 2 financial years. I mean, that's steep.
That's very steep, and the stress in the MFI sector that we highlighted to our viewers in May of 24 has panned out over the 2 quarters, that is Q1 and Q2. And now we are seeing brokerages downgrade, stock price as well as recommendation on lenders with MFI exposure. So Goldman Sachs is the first one, and this is one of the biggest downgrade that you are seeing in the MFI lending space. On CreditAccess, Gramin, they have downgraded to sell from buy, cut the target price by as much as 60% to 564 from 1,426 that it was earlier. And they say that earnings visibility is clouded given the fact that asset quality hiccups are seen, and there are concerns with respect to asset quality in the near future as well. De-rating structural is in nature right now, and they expect further de-rating of CreditAccess, Gramin. They have been, the deterioration in asset quality, which they expect it will accelerate further, given the fact that there are new guardrails which have been put by MFIN. So MFIN has actually reduced the number of lenders to a single borrower to be at 3 from 4 that they had earlier. So they have cut the EPS by 40 to 50% over the next few fiscal, that is FY25, 26 and FY27 as well. They expect credit costs to remain elevated at 6.5% or 6.6% to be precise for FY25 and about 4.5% for FY26. So valuations as per them don't adequately reflect the underlying stress that is there in the sector as well as the book. Also, they have written on financials, that is Goldman Sachs has written, they say that, sizing the microfinance stress could be as high as $4 billion to $18 billion, which is like almost 1.5 lakh crore of, stress that they anticipate in the microfinance segment, which is, potentially on the higher side if you take a look. So they have a sell rating on CreditAccess, Gramin. They say that you should, or one investor can buy, AU Small Finance Bank, L&T Finance and IndusInd Bank as diversified players are better placed than only microfinance lenders. Back to you.
All right, Abhishek, thank you very much for that. So that's a more detailed kind of explanation of what Goldman is saying. CreditAccess, by the way, from the opening lows, it's up about 4% or so. But this is still very, very early days. It's a still big 7.5% cut that you have on your hands. The other thing, of course, is that if you look at microfinance lenders across the board, CreditAccess maybe has the lowest rate of lending. So, that's the other thing to consider. And it takes me back to the earlier point that what about the others? I mean, only MFI players. What happens to them if this is the state, as Goldman puts it, for CreditAccess. Devina Mehra is our market master of the day, founder, chairperson and managing director at First Global. Devina, great to have you with us here. Thank you very much for your time. Prashant this side. you know, I don't want to talk about microfinance and what stocks, etc., will do, but just use that as an example to ask you whether it does show stress in the system, the consumer stress at the lower end. And how would you read it? What are the implications, not just for MFIs per se, but for the broader ecosystem?
Good morning, Prashant. So you talked about the stress at the kind of bottom end of the market, and that is something which most people have discovered only after the market corrected. But this is something I have been speaking about for many quarters, that there has been a consumption slowdown, and that's not happened just in the last quarter. If you look at the last financial year, 23-24, and you look at just the consumption number out of the GDP, that was the lowest it has been in 21 years. So, that was very much visible. Your GDP was essentially running on the single engine of government expenditure. If you look little broader term, there's this book called Lilliput Land by Rama Bijapurkar, and that showed how for the bottom 60% of the Indians, their real income has fallen from 2016 onwards. That for them, the income minus even routine expenditure, I'm not even talking medical or marriage or anything, is already negative. So if you parse it out into what you see in corporates, once again, if you see entry-level cars, the numbers have actually been dropping. So people have not been going up the income ladder. I sometimes see some talking heads on your TV, on your channel, a few months ago saying, oh, all of my friends are buying luxury homes. They're all buying luxury SUVs. The economy is booming. But people like us are not the only people who are there in the economy. So yes, there's stress. If you talk of credit in particular, I was a speaker at this business summit, and one of the things which was like a light bulb moment for me was when Mr. Kamath said, I mean, these two stresses I had talked about separately, I had not put it together, that you think about all the losses in the F&O markets, and those are mostly made by individuals. So I think the figure is something like 1.5 lakh crores or something like that. And Mr. Kamath said, just think about how they have been financed, and almost all of them would have been financed through unsecured credit of this kind. So that's another, direct market related point that goes into credit. And many of the fintechs and all the smaller players have been going down the credit score. The credit score at which banks wouldn't lend is where these guys come in. So there are many stresses in the economy, but they have been there, as I said, for a while.
The thing is that I think the RBI has been quick to tell a lot of the lenders to go a little easy on things like unsecured, etc. Right? They raised the alarm bells a good year in advance almost. I remember when the risk weights went up. So hopefully, I mean, I guess that's the hope, Devina, that this is not going to spill over beyond microfinance. Actually, let me ask you that first. Do you think this will be contained? And what are you doing in financials? And let me throw in the whole insurance question as well. We spend the better part of the morning on that debate as well, because it seems that this banca channel, in some format or the other, there will be some regulation on how much of insurance sales can be pushed through banks. So tell us more about financials, both on MFI, stress, whether you think it will be contained or not, and a word on insurance.
So banks, we are underweight as usual. I would say the only time we were market weight to slightly overweight was 2022, which was the only year in the last 5 years that the bank Nifty has outperformed the Nifty. I mean, right now, if you just look at pure technically, the banks might do actually a bit better. But these medium to long-term concerns are what give me sleepless nights if I was invested a lot in that sector. As I always say, the problem with the banks and all lenders is that you only get negative surprises. It is not as if the borrowers do very well, they will get some supernormal profits. But if there is a problem, there is a hit. So that is the concern always with banks and lenders. So that's why as somebody was saying that you repeated in every interview of yours that I'm a nervous investor in banks and lenders. Very few times that you are comfortable being there. And a banker was recently telling me, I have not studied that myself, that gold loans have been going up. And he says that's another source of, indicator of stress in the system, because the jewelry is kind of the last thing people mortgage to get money. So those are things. Insurance, yes, there have been a lot of now changes being announced. We are still studying it. It's not a sector we have a big exposure to, so we didn't need to react immediately. So
no, got your point. They've been beyond the banks, and you've articulated the concerns over there. Financials elsewhere, and we're saying insurance, you don't have an exposure. But capital markets has been doing really well. People seem to be really gung-ho on the wealth management business as well. Just trying to get the overall picture on financials, even the non-lenders. If there's anything that you've bought in this recent correction or anything that you like.
We haven't bought much. We used to hold a number of capital market related stocks earlier. So the stock exchanges and players in the market and AMCs for that matter. But in our July rebalance, our system stopped liking them. I mean, or rather you can say that liked other things much better. So we actually exited most of them a few months ago.
Hi, Devina. Good morning and good to see you. And let's talk about the consumption theme then. Staples as well as discretionary. You have some allocation, I think 13 to 14% of the total portfolio. Could you tell us, as of now, where is the preference?
So I'll tell you overall which sectors, because this is a very broad level classifications. For example, autos go into consumption and so on. So so let me tell you where, in terms of the sectors that you and I understand, where we are overweight. So we would be overweight pharma and healthcare. That would be probably our biggest overweight in terms of just the percentages beyond where the benchmark is. IT, we would be overweight now. Auto components, we continue to be overweight. Where we have added, I'm not sure whether we are overweight or not, in the last couple of rebalances has been chemicals, which after 2022, we were basically mostly out of, and then our systems have started liking them again. And of course, chemicals is a very broad sector, so the winners, the losers, depending on where in the chain you are. But that's one sector where we would have added. FMCG also, we have added some. I mean, we had a very low allocation, and we've added in the last two rebalances. But not so much of the very large companies.
Yeah, got that. Devina, the other thing, of course, which you track closely is global markets and global macro, etc. Now, Mr. Trump has put together his economic team. They all seem like they all dislike China. No particular views about India in that sense, which is I guess silver lining and good news. So they all train their guns on China. But for the market here, is it going to be a little tricky? It's a minority view as I remember Christopher Wood of Jefferies saying that Mr. Trump is inherently, he's transactional, and of course he's unpredictable. So we don't know how much of how should one view this from an overall perspective as we head into 25.
So I wrote a whole article yesterday on this, on that only thing you can say for sure with the Trump Sarkar coming in is that uncertainty has gone up because a number of things he said during the election campaign are inherently contradictory. So, for example, he said that the U.S. The average worker the income has not kept pace with the inflation, and there's been loss of purchasing power. Now, if you put a 60% tariff on China, you put tariffs on everything from Mexico and Canada as well. So for good measure, he said that as well. So that means everything on the supermarket shelves, the prices go out through the roof and inflation goes through the roof. So, I mean, you are not even sure. I mean, that's only one contradiction. Defense stocks, for example, went up with his re-election, but he has also said that why should US spend on these overseas wars? So there have been so many things which are at loggerheads with each other. For example, if you really cut government expenditure drastically, government expenditure is 36-37% of US GDP. So that would be deeply recessionary. he says the US dollar should not be so strong in order for exports to be helped, but a lot of measures he's talking about would actually strengthen the US dollar. And to add uncertainty to the mix, his main advisor is Elon Musk. So if you wanted to compound uncertainty, you have a dream team there. So very difficult to predict even what he will do. Then what he does has an implication on inflation, on what Fed does, on interest rates, and the third order effect is on markets. The fourth order effect is on international markets. Then you have geopolitics, where you don't know what he will do, how the other players would respond. So they're like just infinite combinations if you go into game theory as to what would happen. But I don't think there's a lot of direct things which will impact India. I doubt it, unless he does something which impacts IT services or something, so that may be the only possible risk area which directly impacts India. So the rest of it, we'll have to wait and watch at least what he does before one can predict what will happen. Inflation already is little bit higher in the last print that came 2 days ago. So, that leaves again little less headroom for Fed to cut rates.
Sure. Yeah, I think we'll just have to wait and see. Direct impact could be whether we have Teslas on the road here in India, as well as Starlink, whether Mr. Musk manages to use his good friend's influence to open some doors here in India. I think we're in for interesting times on that one as well. Devina, always a pleasure having you on the show. Thank you very much for joining in, and we look forward to the next call. You have a great weekend, and thank you for joining us this morning. Okay, quick check on the market before we move to our next guest. The market's actually galloping along quite nice and steady. 100 points up on the Nifty, and 24,000 is back on the screen. So there's a nice large cap recovery that's in the works. Okay, we're putting the spotlight on the banking space, in specific Union Bank now. The second quarter was a slightly weak quarter for the bank. Loan growth has been weak if you compare it to peers. And obviously the fight for deposits remains a big talking point for banks across the board. So how is the second half likely to shape up? We have with us Mr. Srinivasan Varadarajan, Non-Executive Chairman at Union Bank of India. Sir, great to have you. Thank you very much for joining in. Before we talk about growth, I want to sort of start with the whole asset quality question, because not just for you, and you also saw a big rise in slippages. Your slippages in the second quarter were above 5,000. That was, I think, they almost doubled, more than doubled. But this is a larger question, right? We're looking at some Goldman Sachs notes right now. They're trying to estimate how big the MFI stress pool could be, and it's running into billions of dollars, those estimates. So first, you tell us whether is there any threat at all of a spillover of the MFI stress into other parts? Or maybe not, because anyway, MFI is very niche, and banks are anyway not lending to those kind of customers. And B, even without MFI, is there more stress building up? What are the trends that you're seeing in the third quarter, given the rise in slippages that you saw in the second quarter?
Good morning. Thanks for having me on your show. See, I think as far as asset quality is concerned, I think the central bank has been very proactive in terms of trying to guide the banks, as well as do some macro-prudential measures to ensure that the right actions are taken by all stakeholders. So banks, if you look at the products which to some extent stress was building up, I think those products have broadly slowed down, and you can see that over the last 2-3 quarters. So I would believe that, yeah, the asset quality thing, I think we hit a trough in terms of what exactly slippages would be for the system as a whole about in the last financial year. From there, it'll tick up, but the ticking up is not going to be something which is going to be anything large, and it's going to be anything systemic. On the whole, I think it'll be something which banks will be able to absorb and move on.
So can you quantify that? Maybe not for a system as a whole, which is a larger, bigger guess, but at least for Union Bank. When you say that overall stress will tick up, to what extent? I mean, what is the kind of GNPA movement that you're factoring in by the end of the year and next year as well?
I think it will be broadly around the same levels which you've seen over the last 2 quarters.
Which means gross NPAs would
If you look at the last quarter, I think some of the slippages were driven by some large asset slippages, single accounts in terms of large corporate. And I think if you look at outside of that, the slippages are fairly well contained. And I think that's how you look at it in terms of segments which you're talking of, which is basically small ticket lending.
Okay, so would that mean that your gross NPA levels would be contained at around 4.4% thereabouts for the end of the year?
Yeah, I think, yeah, it'll be on the same levels where we've seen.
Okay.
All right.
I think one thing you should understand is, I think,
Please go ahead, sir. Please go ahead, sir. Complete that point, please.
No, I'm just saying that the broad level of slippages as well as asset quality ratios would not be very different from what you've seen over the last couple of quarters.
Got it. All right. Hi, Mr. Varadarajan. Good morning and good to see you in. This is Nigel on this side. I'm looking at your advances as well as deposits. You know, out there, the growth has been slower than what we're seeing in the industry, which could, the read-through could be that you're losing market share. Could you tell us if this is strategic in nature? And what is the outlook on both these two fronts for this fiscal and the next?
Now, if you look at what's happening for the system as a whole, clearly deposit growth has been lackluster and has been lagging credit growth for the last many quarters. And that wedge is sort of right now contracting. And I think that is coming on the back of credit growth coming down. Credit demand has been reasonably low, and it's important to make sure that you do credit where it is remunerative for the bank. And then to that extent, I think the bank has been judicious in terms of what sort of credit it undertakes. And the resultant thing is that deposit growth has been marginally lower than what the system is, because credit growth pickup has been fairly muted for the system as a whole.
So what's the outlook? I mean, I guess this is also a function of banks trying to shore up deposits, also focusing on asset quality, which is why credit growth has come off a little bit. But if you could just elaborate, I mean, for Union Bank, how do you think you'll end the year? Last quarter, year on year, you were up about 10%. So how will you end the year on credit growth?
Broadly in the range of 10 to 12%, 10 to 11% range. I think that's the idea. But broadly, what you should look at, I think I'd like to stick to what the system would do over the next couple of quarters, is that if you look at the one thing which has not bothered the market is currency, and that is what is top of mind today. And whether it is the dollar index or whether it's what's happening in terms of the rupee. So clearly, from a point of view of liquidity and in terms of how exactly currency moves are going to be there, I think that's going to be broadly driving deposit growth. And liquidity, in my view, rate cuts as of now keep getting postponed. Liquidity continues to remain fairly tight. So therefore, to that extent, I think deposit growth is going to be not galloping away. It's not going to be much higher than where we are today, with the result that credit growth will be where we see it here or slightly marginally lower for the system as a whole.
10 to 11%. Before we wind up, Mr. Varadarajan, wanted your view on the NIMS outlook. It came in at a multi-quarter low in the past quarter. So what's the range we should work with from here on? If you want to give us a guidance on the return ratios that you can achieve in the coming year.
Now, I think the management was on air post the last quarter results, and I think I would just like you to refer to the guidance given by them, and I think that's broadly, as I said, around current levels.
Srini, hi, morning. Prashant here. I don't know if you heard Devina Mehra, who was with us from First Global earlier before you, and she was quoting Mr. K.V. Kamath and what he said at a recent event. And this is a broader industry question, not about Union Bank. She said Mr. Kamath essentially said that a lot of the, and this is his thinking, I mean, he was I think, throwing that thought out. He was saying that maybe a lot of the capital market losses, especially on the F&O side, over the last couple of years, perhaps could be being funded by unsecured loans. I don't know if you have any thoughts at a general level.
I think that's been a concern in terms of end user funds, and that's why RBI sort of acted in terms of putting in place some microprudential measures. And I would think some of those losses have not happened on a single day. It's been happening day on day over the last couple of years, and therefore whatever things need to happen in terms of the asset quality, I think is already taken place. And incrementally, I think the amount of exposure which people are taking in F&O is going to come down on the back of SEBI's measures on F&O. And therefore, I don't think this is a problem which has grown larger day on day. I think the problems whichever have happened, I think have been taken in by the banks and NBFCs. And I don't think so this is something which will linger on going forward. The problem is in terms of some of these end users on consumption, which broadly, whether cash flows of borrowers match the liabilities which they have to undertake. And I think that's the broader question. I think the capital market thing for banks is a much smaller question in my view.
All right, we leave it there. Thank you very much for joining us, and it's a pleasure. Have a good conference at Trust. Thank you indeed for being here on CNBC TV18. We'll take a quick commercial break here. Saurabh Gupta of Dixon Technologies will be joining in. It's one stock which has done phenomenally well. Motilal Oswal recently came out with another sort of report, buy rating, suggesting further upsides. That conversation comes up.
Broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think you're right to say that why has it become an issue suddenly? I think we're expecting that we will scale, we will create value.
So, is this a preemptive move? Is my question.
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so we are, we will own. By the time we go public, we'll own about 20-ish%, right? And there are a couple of pieces that we're making, a couple of things that we're closing. This flipped from Singapore to India, and just getting that even just from a team.
Welcome back. 100-point triple-digit gains on the Nifty. So there'll be a nice way to wrap up the week. 24,000 plus is where the Nifty finally is ending at. Is in the first hour, the end of the first hour, not the end of the... It's a Friday, Surabhi.
Yeah. Counting down. The countdown is on.
The countdown is early in the countdown, let me put it that way. The Adani Group stocks, by the way, are doing well. Power, Green, Adani Total, Adani Energy Solutions, so this is the third day of recovery and repair that we're seeing out there on this particular space. Honasa is the other one. Honasa is up 6.5. Again, completely got smashed up, ended about 10% higher yesterday. It was the first day of recovery. It's up another 6.5. So just some additional names which were not there in the mix at 9:15. Well, let's talk about the EMS space, and the leader there, of course, is Dixon Technologies. Motilal is bullish on the stock. It's been a huge outperformer. And there is more coming if you go by Motilal. Saurabh Gupta is Chief Financial Officer at Dixon Technologies. Saurabh, it's always great to see you. Thank you very much. Good morning. Prashant this side. It's always, whenever we chat, Saurabh, what's the latest and what's the new thing at Dixon, which I want to know? Because you guys are always tying up, bringing in new partners. I believe there is work going on sort of getting a couple of more Android players to partner with you. Those talks are on. So tell us, what's incremental, what's new, and in terms of meaningful stuff?
Yeah, so clearly, Prashant, the mobile is the largest addressable opportunity. And within a short span of last 2 years, we have been able to get almost all the brands on the Android ecosystem. Some more brands are in discussion, and hopefully we should be able to conclude with them in the next couple of quarters. Apart from that, the focus in mobiles is also on the backward integration, deepening the level of manufacturing. So there is a component PLI which is expected hopefully before the end of this financial year. And we as a company, we think we'll make significant investments in displays where we have already tied up with HKC. We'll be looking at doing investments on precision components, mechanicals, die cuts. So there we are pursuing partnerships. So we think we have an opportunity to take the value addition in mobiles from 17-18% today to almost 35-36% in the next 24 to 36 months. And we'll be making significant investments. So that adds to our strength, moat, and also reduces the cost of manufacturing in India, which makes us more export competitive as well. Apart from that, IT, I think, so is the next trigger for a growth.
Saurabh, sorry, we'll just come to IT in a bit. And that should improve margins meaningfully as well, wouldn't it?
Yeah.
On the component side, taking the share from 17 to 35%?
Yeah, significantly. We think it will start reflecting from Q2 of next financial year because that's where we start manufacturing displays. And then over the next 24 to 28 months, I think, so the margin profile, which is presently around 3.3%, can increase by 100-120 bips over the next 24-28 months.
Okay, so and these precision elements, components that you're speaking of, this would include things like camera modules, because I think in our earlier conversations, we've kind of picked up that interest in getting into camera modules. So all of these kind of components will lead to this margin expansion, right?
That's right. So camera modules, mechanicals, precision components, and die cuts. So these are the 4 things that we are working on.
So just to understand, mobiles continues to be the largest segment for the company. Just give us a targeted mix, because then there's sort of IT components also picking up. Say FY26 end, what is the contribution that you'll still get from mobiles? How is the sales mix going to change as some of the other segments also kick in?
So my sense is it will still continue to be around 60 to 70% of our revenues, anywhere between 60 to 65, because clearly we have a strong order book also in our telecom business and also in IT hardware business. So definitely I see some percentage contribution of mobiles coming down from 70% to broadly 60-65% as the other 2 verticals also start firing.
Okay, so let's actually talk about some of those other verticals. IT hardware. So where are the plans right now, and when do you fully come to market? What are the timelines that you're working with? And I think a lot of types have already happened with some of the major hardware companies. Any more in the pipeline?
Yeah, so I think so. We have already acquired 4 large customers, which is HP, Asus, Lenovo, and Acer. For most of them, we will start manufacturing by Q4 or Q1 of next financial year. We're also pursuing partnerships on servers. So servers can be a very large opportunity for India, and we are pursuing some kind of partnerships. Hopefully, we should be able to announce something in the next couple of quarters. So IT hardware looks very promising for next financial year. And we think the overall addressable opportunity at a manufacturing level is almost $8 billion, almost 60,000 crores. And like the way we acquire a large share in each of the categories, similarly, we feel that over the next 2-3 years, we should have a large play in this category as well.
Okay, all right. Hi, Saurav. Good morning and good to see you. Well, display manufacturing, what's the kind of volume we can look at? I think in FY26, we'll be guiding for something like 20 million, which goes much higher in FY27. If you could help us out with a couple of numbers, display manufacturing.
Yeah, Nigel, so in the first phase, you're putting up a capacity of 25 million mobile displays and almost 12 million IT hardware displays. IT hardware displays is already part of the PLI scheme for IT hardware. And in the next phase, we will take this 25 million to 45 million displays because we already have a large customer base on the Android ecosystem. So yeah, next year, broadly, it will start from Q2. So the first year, anywhere, we are hopeful that we should be doing somewhere around 14 to 18 million kind of displays. And then year on year, those numbers will increase because clearly there's a big business case. There's a big duty arbitrage on importing a display, so versus Indian manufacturing. And also, clearly, the component PLI will further add to the overall advantage in that.
All right, so 14 to 18 million for next year, right?
That should be the broad numbers, yeah.
And since your capacity is going to go from 25 to 45, the following year we should work with a number of 30-35 million at least?
Broadly, it has the potential to double from there, those levels, yeah.
Okay.
Saurabh, just a couple of more questions. Just to, as we come closer and come to the fag end of the, not fag end, but yeah, I mean, the last month of the third quarter, you'll have better visibility of FY25 numbers overall. Closer to between 35 and 40,000 crores in revenues this year?
I think so. That should be doable, Prashant. We have done, I think so, broadly 18,600 crores in the first half. Definitely, I feel the second half should be better than the first half because the Q1 was slightly slower for us. A lot of customer ramp up happened during Q2. So yeah, I think so. That H2 should be better than H1.
Okay. One more thing from my side. You know, this entire we talk about Make in India, but now there is Make in America. Make America Great, right? That is going to be the talking point, etc., over the next couple of years with Mr. Trump. So, you know, one view is that he's going to use tariffs as a threat to essentially force companies to make in the US. As the largest EMS player in the country, Saurabh, do you think it's viable to make in the US? I mean, shift what is happening in countries like India, China, Vietnam, etc. I mean, to move supply chains onshore in the US? Do you think it's just too expensive and it's all just rhetoric?
I absolutely feel the same way, Prashant. US can be a consumption economy, but as far as manufacturing is concerned, the cost of manufacturing in US is very high. So my sense is there can be shift in supply chains in the Asian countries. I think so India can be a big beneficiary. Clearly, I see that tariffs, if they are put, the increase in tariffs on a neighboring country will be far higher. And I think so India is well positioned because of the advantages that India enjoys on large labor pool, low labor costs, strong government policy framework, companies like us having a scale and size. So clearly, I think so India, should gain out of this overall thing. But yeah, one has to wait and watch. But definitely, I feel that manufacturing in US is that tough, I would say. It's not so easy.
Got it. All right, Saurabh, you've helped us out with the business aspects. Just one factor I wanted to ask you. The promoter entity, they had around 34.5% stake in the company. And as of the September quarter, that's come down to a little south of 33%, to be precise, 32.89%. So very, very small selling is what we're seeing out there. Could you clarify about what's the outlook from here on? Because in the last year and a half or so, it's down by close to around 1.5%.
So Nigel, it's a small selling. It's basically he's a first generation entrepreneur. I think so he wants some liquidity for his personal needs, but I don't see he's completely invested in the company, and we clearly have a long way to go. So yeah, this is just a small selling. I don't anticipate any further selling broadly from this.
All right, thanks for that clarity, Saurabh, and do communicate to Mr. Lal and the family. I believe there's a family wedding, one of his children. So best wishes from all of us here on CNBC TV18, and all the best to the entire Lal family.
Thank you, Nigel. Thank you, Prashant. Thank you, Surbhi. Thank you.
Thanks a lot for joining in. Well, let's take stock of the market yet again, Surbhi.
Okay, well, things are looking up, looking good, 128 points higher on the Nifty. And if we talk about some of the key movers and shakers, so there is a Cipla, which is the biggest gainer right now, 2% higher. Actually, even Dr. Reddy, some of the pharma names are doing well. And a couple of the biggies, HUL, L&T, these stocks are fired up, even Reliance for that matter. So it's sort of all hands on deck today.
Just one stock, Surbhi, a Mazagon stock. When we started, we were talking about one of the stocks that were lower. That stock has done a complete U-turn. It's now at the high point of the day, up close to around 3%. So a few of these names have done quite well. PP Fintech as well, that's the other one. And Edelweiss Financial, these are some of the stocks that have moved up quite well from the low point of the day. So just trying to follow.
There's one more name is LIC. LIC is up 5%.
Because they don't
know banker.
So, and guess which were the other name yesterday, which was higher? Well, all insurance names were lower. ICICI Pru. ICICI Pru does not use ICICI Bank as a bank assurance partner, the parent. ICICI Pru is kind of flattish, but yesterday it ended higher. I think it was down substantially. LIC is up about 4.5%. So 780 coming through there. So there is a lot happening, and we'll continue to track individual names. Mitesh is with us with what he's making of the sort of trade and the setup so far. Mitesh, early days, or you trust this 100-point up move and bet on more? What would you do?
Prashant, not much, honestly. I think, as I said, 24,120, 24,150 is the zone. So we might actually see some more points added on the upside, but till we cross and capture those levels, I would not be trading long on the index. On a stock-specific basis, yes, we have identified some trades which are looking good. Bata is something, which did not fall much in the decline yesterday and has bounced back immediately. And the structure is also improved dramatically here. So keep a stop at 1360. Look for a target of around 1410, 1420 on the upside. And the other stock which I like is Crompton, which can be bought with a stop below 400 for targets of 410.
Okay, all right, got it. Amitesh, thank you very much for that. So those are some of the calls coming through. Let's just go back to CreditAccess and see what the stock is doing. It's still down about 7.5%. And this is after, of course, CreditAccess having lost a lot of ground in the last couple of months. That's today's decline. Let's pull up a one-year chart as well on CreditAccess. Stock's down about 40% this year. A lot of, there you go. So big decline through the year, but then this fresh sort of messaging that's come in from Goldman Sachs, that's leading to another round of selling today. Abhishek is joining in, and he's been flagging off the stress in the MFI space for several months now. So Abhishek, what's the latest on MFIs and of course on CreditAccess?
Goldman Sachs has written on CreditAccess, Grameen. They have downgraded the stock to sell from buy. Target price has been cut as much as by 60% to 564 from 1,426 that they had earlier. They say that earnings visibility has clouded given the fact that there is asset quality worries that they see for the entity going ahead. And derating is structural in nature for CreditAccess, Grameen, from here onwards. So they have been negatively surprised by deterioration in asset quality in Q2 FY25. They expect a deterioration in asset quality to accelerate further given the fact that MFIN has come out with new set of guidelines wherein you have to reduce the number of borrowers, the number of lenders to a single borrower to 3 from 4 that they had earlier. This can mean slowdown in growth as well. So they have cut the EPS estimate by 40 to 50% over the next few fiscals, that is FY25, 26 as well as 27. They expect credit costs to remain elevated at 6.6% for FY25 and about 4.5% for FY27. So they say that valuations don't adequately reflect the underlying stress that is there in the portfolio. Now, Goldman Sachs has also written on financials. They say that the microfinance stress that could be as much as $4 billion to about $18 billion. That's a huge number that they have put in with respect to stress in the MFI portfolio in India. So they have a sell on CreditAccess, Grameen, while they say that diversified players look better placed right now, like AU Small Finance Bank, L&T Finance, as well as IndusInd Bank. Back to you.
All right, Abhishek, thank you very much for that. So those are some of the names up on your screen as well, with that Goldman call coming in on MFIs and the downgrade on CreditAccess. Z is the other one we want to focus on. Stock is higher. Vamakshi is here to tell us why. Vamakshi, morning.
Well, good morning, Prashant. Well, Z is definitely trading higher in the trading session today. Keep in mind that, the shareholders rejected proposal to reappoint Puneet Goenka as the director of the company at its AGM on November 28th. Now, this proposal was defeated by a 50.4% vote against this. In fact, earlier on, proxy advisors like InGovern and IIAS both had recommended shareholders to vote against his reappointment. And in fact, largely, when we look at the overall picture, nothing much changes for Puneet Goenka, because he had earlier on November 18th as well stepped down from his position as the MD of the company and had said that he would like to concentrate on operational responsibilities as the CEO of the company, and therefore that still continues for him. So that is the news flow around Z. The stock as of now is up in trade.
All right, Vamakshi, thank you very much for that. So it's Z about 5.5% higher. Well, we'll take a quick commercial break here. Manisha Gupta is going to be with us, and we put the focus on commodities on the other side. Stay tuned.
Legal perspective to go public in a couple of quarters, but yeah, we'll own around 20%, right, which I think is decent, right? So like if you build a large company, that'd be great. But back to answering the key question, right? Is it, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when, I don't know if it's 3 years, 2 years, or maybe longer, but it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large scale value to accrue to Indian shareholders. And now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time we have that opportunity, and so all of us are taking that option.
So I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's huge kudos to what Shriyasha and the team pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time.
Welcome back. Okay, so the equity market's holding up quite nice and steady. Let's figure out what's the latest in the commodity markets. We have Manisha joining in. Manisha, so what are you tracking right now?
Well, I'm looking at metals as a sector because more metals than other seem to be heading for a strong week on this one. One, you've seen a bit of a pullback in US dollar index, and that has been supportive. The other thing really is about the rising cost at mines, underinvestments, declining inventories. All of that has been supporting metals as well. And the street is awaiting details on the US plans on tariffs. I mean, that detail would come in the first quarter of 2025. That is when you will see the markets settle down a bit. But until then, it continues to be volatile and slightly on the higher side as well. Also, there are yet again expectations that China could be coming out with some major stimulus before this year ends, and that has been keeping markets or other metals in happy favor there. I want to start with zinc because we're trading at a 4-week highs onto this one. Zinc seems to be outperforming many of these metals. One, the latest news coming in from Trafigura Group, which is ordered big withdrawals from LME. When you look at the last couple of days itself, the kind of withdrawals that we've seen in sense of LME are the highest in a decade, more than 97,000 tons. If this gets out of LME, then the kind of remainder inventories that we are looking at on LME are much on the lower side at just about 154,000 there. So this will keep the zinc prices under support. Other is aluminum, where we have seen prices continue to gain up. We did see 5-month highs in the early part of this week itself, while the prices have come off those kind of numbers, but the kind of fundamentals we are dealing with are still on the supportive side. Russia's Rusal is going to slash 6% of output. You have alumina costs, which have doubled to $700 a ton, and then alumina supply disruptions from major producers like Guyana, Brazil and Australia will continue to support prices. You have lead as well, which is trading at a 5-week high, so more metals are actually trading at multi-week highs. I want to take you through a table which shows you on what we've done in sense of metals in last 1 week and in this year until now. So on a week-on-week basis, the best of gains coming in from zinc. We've told you on what really has led that rally. Aluminum has seen a 1% decline, but on an annual basis, we are 9.5% on the higher side. So two metals which have done the best really are aluminum and zinc. Copper from the higher side has seen a decline, and we've seen the net longs kind of continue to decline last couple of weeks. So that is what is putting pressure on the prices. But overall, yet another year where we would be closing it in the positive for many of these metals.
All right, Manisha, thank you very much for that. So that is commodities in focus there. Well, FMCG major HUL has outlined its growth and category targets as part of its Capital Markets Day. Mangalam is here with highlights. Mangalam, morning.
Morning. So the meet starts at 11:30. The company has uploaded its 270-slide presentation on the exchanges already. And these are, important ones to look at, not just for HUL, but the entire consumer sector itself. And what's promised actually happens, then it's a crazy look into what HUL 2.0 for this decade looks like. The key highlights, 2 to 4 times potential is what they see in terms of increase across categories. What has happened over the last 3 years is there has been a 200 basis points market share gain with nearly 1.3x jump in revenue as well as profitability. They also see about 100 basis points savings through efficiencies, and they've identified a bunch of brands, the likes of Surf Excel, Vim, Dove, Ponds, etc., at the sweet spot of premiumization. They are seeding a lot of premiumization in the beauty and wellness category, as well as food and refreshments. They've also spoken about 6 long-term opportunities, which is 1 in premium face care, premium healthcare, body wash, home care, condiments, as well as prestige and well-being. What's interesting, and this media analysts would be, very importantly tracking, their share of advertising on TV is actually down from 60% earlier to now 39%. A large part of their advertising goes on social media, so we'll keep an eye out on that one. They've onboarded 1.4 million retailers, and 50% of their revenue share is now generated from their Shikhar app itself. And to my mind, the most important development that the company has announced is that they've announced winning in many Indias 2.0. Remember, WIMI 1.0, when it was first announced in 2014, was a transformative exercise to classify India into 16 socio-economic clusters. Now they've gone ahead and further classified these clusters into affluent agglomerations as well. So earlier you were talking about 16 spots in India. Now you are also, talking about that affluent market, which a lot of people are ceding share to a lot of these new digital brands as well. So if HUL goes ahead and does that over the next few years, we can see accelerated growth. The strategy is laid out. The important part is executing them.
Okay, all right, Mangalam, got it. Thanks very much. So that is the takeaway from the analyst day at HUL. Markets holding up 100 points higher. If you look at some of the stocks on the move, the insurers are still trying to recover most of the ground, but it's turning out to be a good day for pharma, by the way. Even Sun Pharma has now joined the bandwagon. So Reddy's, Cipla was always the nifty gainer. And then there is Sun Pharma that's rising to the top now. That's pretty much how it is. But Prashant, you were looking at CreditAccess once again?
No, I was just saying that, if you measure the total movement, it is up more than it is down. It is about 7%. Sorry, it's
what?
Basically, it's recovered 7% from the day's low.
Okay.
And now it's only
down. So up more than down. Okay.
That's a new one, right? But 50 points lower on 50 rupees lower on CreditAccess, and it's come up very nicely. Well, see, it's just still, I think, the first hour, under the first hour, as far as open is concerned. We'll see where it goes from here. New entrants in F&O at the bottom of the screen, and we'll continue to highlight that as we go along. It's a wrap from all of us here on Bazar, but don't go anywhere. Our special segment, it's the economy on the other side. My colleague Lata will be in conversation with Pranjul Bhandari of HSBC to discuss their expectation from second quarter GDP, which is due today evening. Stay tuned, that's coming up.
With our team, and when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that semiconductors have now gone from something that was kind of behind the scenes, under the covers, to today. Everybody's talking about semiconductors, and semiconductors are essential to every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of taking our business from what was in 2015, we were about a $4 billion company, and this year we'll be north of $25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team, and with the investments this, nothing comes overnight. It comes after literally 20 years. I think 20 years ago we started with, maybe 100 people.
Yeah.
Now we have 8,000 people in India across all of our product portfolio. And I think the bet has really, paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board. And I'm very happy to say that this is our largest team outside of the U.S. This is our largest design center here in Bangalore. So it is a very special place.
Well, I'm glad to hear that from you, Disa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very, very high regard for Prime Minister Modi and his strong vision on technology across.
Welcome to It's the Economy. The big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th, but that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex, or gross fixed capital formation as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May. But first, let's concentrate on the number that's coming later today, the second quarter GDP. We are joined by the Chief India Economist and Economist for ASEAN at HSBC, Pranjul Bhandari, who's joined us in our studio. Pranjul, first up, I want to ask your estimate. Do you think we will even make it to 6.5? Because I had quite a few people saying 6.3, 6.4 for Q2.
Right. So we are at the 6.5% ballpark. That's our forecast. And fingers crossed, we'll know in a few hours. But I think the details are important. I think what we've seen really is urban consumption slow in this quarter. A bit of it has also come from the fact that, we don't have very strong consumer loans anymore. Some of the salary and wage growth at high-end sectors has softened a little bit. And rural consumption hasn't yet picked up. We're all hoping it picks up, but it hasn't yet picked up. And then there was government expenditure, at least in the first 2 months of the quarter. It was quite weak. We were coming out of the elections. It only picked up in the September month, but we haven't really seen all of its growth impact yet. So putting all of it together, the September quarter will not look very good.
Okay. So what about the rebound? I mean, okay, that is done and dusted. We saw the Nifty earnings also was just about 2%. The performance of companies was also not, a little underwhelming. What about second half? I have a wide range with some people expecting lower than 6.5 also for the second half, and of course Reserve Bank standing at 7.4.
Right. I'm a little more constructive on the second half, and I think for me the big change could be rural India. Already I'm seeing agriculture data picking up. My sense is we've come from a very bad agriculture year. The money farmers made in the summer crop, Kharif crop, they didn't use it for spending. They used it to build back savings. And I can actually see it in the Jan Dhan cash balances that, rural Indians have. But I think the money they make from the winter crop, which we see in February, March, I think that will be spent more on consumption. And then we can see an uptick, in consumer staples, two-wheelers, the kind of things rural Indians buy. Also on the side, we have government which has given out a lot more money for capex over the last couple of weeks. Once that starts and that construction boom begins, we'll see remittances go back from urban to rural India. Something that had stopped in the last couple of quarters. So my sense is, and I'm looking for a rural rebound, not immediately, but around February, March.
Oh, okay, that far. So Q3 is still a bit of a question mark. The other question marks which other economists are putting is that, for instance, I think yesterday India Ratings put out that report that government can't spend all its money on capex, and we had, I think, the DEA secretary admitting that they may not reach the target. The problem could be that, in the last 3 months, there is only that much that can be pushed because the government becomes busy with budget, etc. The other reason is that the absorptive capacity of the economy is only that much. You can't push, 11.2 lakh crore that you think should be put in, that many engineers, that many ability to draw up plans, and the ability of the economy to absorb. Are you worried that capex also may not grow so much?
So look, I hear what you're saying and I agree with you. We lost 4 or 5 months because we were in the election process in which a lot of new capex, files getting approved doesn't really happen. So we've lost that. But I'm going to only focus on the upcoming months, and I think that things can look better than it was in the past, because I think the first half of the year the government focused on current expenditure, subsidies, revenue expenditure. Second half, that money is going to be put more on capex, and I'm seeing that in the data I track. Also, some of the data we track on NHAI projects coming up, I think they all show that things will look good. But for the year as a whole, Lata, I don't think we are a 7.5% plus economy, which is what we had gotten used to in the last couple of years. I think we are more like a 6.5 to 7, which is a percentage point lower than 7.5 to 8. And I think this is the realization which all of us, the equity markets, corporates, are going through. Maybe 7.5, 8 came from low base. Some new sectors like GCCs coming off a very low base, growing very fast, but you can't sustain that. I think we'll now be more a 6.5 to 7% economy in the next few years, which in itself is very good.
Okay. No, I'm throwing, kind of the devil's advocate questions at you. I think the Reserve Bank got it right last year, much more than the street. They were positive about growth, and it turned out. So maybe they have a trick or two, which we don't know. I'm just looking at the doubts the market has, and one of them is cost of capital. See, the Reserve Bank may not have that much scope to cut. You tell me, what are your expectations? And secondly, even liquidity. They were generous with liquidity earlier this year, but now, since they have forced to sell dollars, they are obviously draining liquidity. There is a dearth. I mean, there is a chance that liquidity will not be plentiful. Equally, for both reasons, do you think credit offtake may not be gangbusters?
Well, look, I think easing monetary policy, RBI is looking at two things. One is inflation, and the other is what happens to the dollar, like the FX markets generally. The good news is I think that inflation is coming off. Even in the last week, we finally started seeing vegetable prices come down. My sense is inflation will fall from 6.2 in the last month to 5.5 in November, which is a pretty substantial fall and could fall even more in the next couple of months. So inflation is not my number one worry. What I'm really looking at is what happens to the overall dollar index. If at some point we realize that it has overreacted and it stabilizes or weakens, I think the RBI will get its chance both to cut the repo rate and also to rebuild its FX reserves, which in a way is how you can infuse domestic rupee liquidity back in the system, and things will be fine. Except that I don't see this dollar retracement right away. So I think the December policy meeting, the RBI will not be able to do very much. And our best hope is that something comes up in February in terms of monetary policy easing.
Okay, you expect a rate cut in Feb?
That is our forecast for now, but a lot depends on the dollar environment, and in a way, I think it's a toss-up between February and April. But our call is for a Feb right now.
Okay. Now, what's the sense that since now you handle ASEAN and a much larger part of the world, what's your sense about global economic growth in calendar 2025? There will be this US exceptionalism, there will be this threat of tariffs. And there is generally a feeling that business investments fall at a time when there is policy churn. It happened in 2018 when Trump raised tariffs and business confidence or business investments fell. So do you think global will be a headwind for us and not a help?
Well, look, at an environment of rising tariffs and policy uncertainty, things like FDI flows, all of them slow. So yes, from that perspective, we need to brace for lower growth. But I'm going to take go a level deeper. There can be winners and losers, right? And I think India has its task cut out. My sense is that in the last decade, we haven't really been able to gain from supply manufacturing chains getting rejigged in a major way, particularly for mid-tech manufacturing, like textiles, clothing, footwear. A lot of the business actually has gone to, like, say, Vietnam or to Mexico. But over the next couple of years, I think India has been given a second chance to actually grow its manufacturing base, attract some of this mid-tech FDI, and which, by the way, is also like jobs accretive, and this is our chance. So I'm going to be positive that yes, the environment is not great, but within that, if India plays its cards correctly, it could actually come out on the right side.
Okay, so you have a FY26 GDP number?
My midterm GDP growth number is 6.5%.
Okay.
Which I think is a good number in the current global environment.
I had at least half a dozen economists telling me that. They have between 6.3 and 6.5 for next year, which is far slower than what we have got used to in India in the past 4 years. But they keep saying that in this environment, 6.5 is a damn good number if we can make it. Just a final word on, inflation itself. Not all economists are that confident. There are a couple of people who are, forecasting 6% even for November. And there is a fear that, going forward as well, we may not be able to see that much of a fall because of stickiness in food prices. But do you think we are at 4% inflation for the coming year, FY26?
Look, I worry about a lot of things, but inflation is right now not my number one. And I'll tell you why. I think with, excess capacity, Chinese excess capacity, with a fairly hawkish central bank, which is keeping second round inflation expectations quite contained, I think core inflation will remain range bound over the foreseeable future. And then it comes to commodity prices. My sense is if global growth is going to weaken, commodity price will actually fall. And then the third is food prices. Impossible to predict given all the climate change events. But right now, because temperatures have normalized, reservoirs are full, I think the next 4 to 5 months, we can see food prices come off. Oh. So I do think that by March, we will get to inflation, which is less than 5%. Over the medium term, I think we will come at about 4.5%.
Okay. No, if that is a problem, less to worry, so much the better, because that impacts everyone, and it's a big, good, positive takeaway that we don't have to worry about inflation around the 4 handle. What about dollar rupee? Is there an internal HSBC range? Does it go to 85? Does it cross 85? How do the next 6 months look?
Look, our sense is that we will have to brace for a gradually weakening rupee versus the dollar, and we have a call for about 86 over the next 2 to 3 quarters, so gradual depreciation.
Okay, so FY26, let's prepare for, or whatever, calendar 2025, let us prepare for an 86 handle on the currency, but the positive would be inflation. And perhaps growth, with a bit of luck, should make it to 6.5%. Thank you very much, Pranjal Bhandari, for joining us. Just one final question. What is the big number you will watch out for when the GDP numbers come out today? Just help us train our eyes.
I'm going to look at this gap between GDP and GVA, which has bothered us a lot. We've had like a quarter in which GDP is way higher than GVA, then we have GVA way higher than GDP.
What about private final consumption and expenditure, consumption and capital formation? Consumption and investment, is not that a big worry that...
Yeah, so look, the thing is, I would love to look at what's happening to private consumption, because the slowdown that we are seeing, I think it's coming from consumption, right? Rural and urban. The only problem is, whatever data will come out today, in a couple of months' time, it's going to be revised. Because in a way, it's the balancing item when Mospeak comes out with its GDP on the expenditure side. But surely I'm going to take a look at that. And it'll be very interesting to see that is it very clear that we are more an investment economy than consumption. I do think we need a couple of quarters of consumption being high so that a new round of investment can come on the back of that.
Fair point. I mean, I would watch very closely for that. Of course, it's lagged data. It's data up to September, and we are all hoping that the festival season has improved consumption. Thank you very much, Pranjal Bhandari. We will remember all that you told us to look for when the GDP number comes out today. That's it on this edition of It's the Economy. See you at 4 or 4:30 when we will have the GDP numbers.
The Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to both attract global companies here, as well as building the local infrastructure and ecosystem. And I think the one thing is these ecosystems take time. They don't come overnight, but I would say lots of very strong progress. And we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years
CreditAccess is down over 7% right now, 8% after Goldman Sachs downgrades the stock to sell from buy and cut its target price from 1426 to 564 rupees, citing a structural derating in earnings expectations.
Zee Entertainment shareholders reject the proposal to reappoint Puneet Goenka as director. The company, however, says that Goenka will continue to serve as the CEO. The stock is up more than 5%.
45 new companies enter the F&O segment as the December series gets underway. Adani Green, Angel One, NCC Deliveries, Zomato are some of the big inclusions.
Travel aggregator Easy Trip Planners rises 10% as the stock goes ex-bonus today.
Enviro Infra Engineers lists at a premium of nearly 50% at 220 rupees versus issue price of 148. In fact, if you stay tuned, the management will join us in a very short while to discuss the company's post-listing strategies.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. Well, yesterday we had a very weak end to the November series. Though for today's trading session, the markets were holding in the green. As we speak, though, the Nifty Bank had briefly moved into the red. I think that's recovered as well. But good to see all the frontline indices now trading well in the green. I'll tell you what, Mangalam, in the last few minutes, there's been a bazooka shot that's come in on the Nifty. Just pull up the intraday chart. It was showing some signs of weakness and just, I think we should pull up the chart. We'll see that it suddenly spiked up. Bit of a dip, which got bought into.
3 missiles that fired in that bazooka, you spoke about. One is Reliance. Just pull up the intraday chart of Reliance. That stock has moved to the high point of trade. A big surge is what we've seen. The stock is at the high point here. Second one is the IT index. Again, a big weight. So you have Infosys, TCS, all of them doing extremely well. So the IT index comes up for you. And the third one is ITC. So you have Reliance, which has moved to the high point of trade. IT index is doing extremely well. And add to that, we have ITC, which also is a fair weight on the index. That stock too has seen a bit of a spike, currently at the high point of trade. So that has actually negated the decline that we saw in the Nifty Bank and has taken the index to the high point of trade. Good time to get in Soni Patnaik of JM Financial Services then for a quick technical check on the market. Soni, yesterday was a down day on expiry. Do you think December has good news in terms of gains for bulls, or maybe volatility continues?
Hi, good morning, Mangalam, Nigel. Thank you for having me on your show. So I think if we talk about Nifty for December series, rollovers have been more than the average. There's a possibility that if it sustains and holds on to 24,000 as a weekly closing basis, there's a possibility that Nifty may attempt to break above the resistance again. So resistances are at 24,350. Above that, you can see 24,500. Until and unless the 24,500 mark is not broken on a closing basis, there cannot be any trend reversal confirmation. But all hopes up because Bank Nifty has shown very aggressive long rollovers for December series. So there's a possibility that if Bank Nifty leads, the Nifty may also show the way and break above the resistance. On closing basis, we'll watch out for 24,000 as a support, and for Bank Nifty, we'll watch out for 52,500, which is a resistance, and above 52,500 for Bank Nifty, you can see it heading towards 53,500 for December series. Both are very crucial levels to watch out for, and there could be a possibility in the later half of December, we can see the resistances breaking and the indices moving forward as a short covering rally.
Okay, all right. Soni, in particular, I want to ask you about Reliance Industries. I'll just request my director, they're going to be pulling up the chart with the 20 DMA, and that's where it is at. Now, we had a data point earlier today that the shorts in the system are the highest you've seen in multiple years. What's your view on the stock? Where is it headed? Because it's a large constituent on the Nifty, needs to perform to take us higher.
Certainly. So, Nigel, in the last 2 months, cumulative basis, the shorts have been very high. And if you have to compare it with the last decade, definitely, I think the shorts have been quite high. Any positive trigger can see the move. However, it is also, when we look at the charts, Reliance has already tested the 1220 support. It bounced back. So there's a possibility that if it crosses and sustains above 30, the short covering move is going to be very aggressive for Reliance. You can see it heading towards 1400 levels, 1400 levels for the rest of December series. One can actually accumulate and continue to hold the longs. We feel that the short covering trigger may happen in the first half of December series itself. The stock is looking good. It just has to cross the 1320 resistance. Above that, you can see the bazooka move towards 1400 on a positional basis.
All right. And what are the other stocks that you have on your radar today?
The pick would be in Bharat Electronics, BEL, which has seen a 96% long rollovers in December series, so it's looking quite strong. It has given a very strong close above a 300 mark. One can buy on small declines up to 305, keep a stop loss of 295, and a target of 325 can be seen for December series. The second pick would be in Container Corporation Concord, which has again seen good rollovers of 94%. There were a lot of shorts until last series. There's a possibility of the short squeeze happening in December. Concord has given a strong close above 820 mark as a series closing yesterday. One can buy Container Corporation with a stop loss of 800 and a higher target of 860 to 880 for the series can be seen.
All right, take that point. Thank you so much for joining in, Shilpa. With that, we'll move on and talk about ideas of profit coming in from our colleagues at Money Control Pro. Today, we have Anubhav Sahu joining in.
Well, we believe hospital segment is one pocket to look at in terms of earnings resilience, given significant demand-supply gap. In fact, if you look at some of the metros like Delhi, NCR and Mumbai, bed densities average or below average versus the level recommended by the WHO. In addition, there is a better insurance penetration and higher per capita income, which help us stock pick today Max Healthcare with a better earnings visibility. So what makes us constructive about the business is the quick turnaround in acquired assets. Recent assets like that of Sahara Hospital in Lucknow and Alexis Hospital in Nagpur have witnessed a strong ramp up, and now EBITDA of these units have almost doubled in last 1 year. Further, capacity addition plan is amongst the most aggressive one, and in next 3 years, bed capacity is expected to increase by 80%. Capex per bed is close to 1.3 CR per bed. As the current EBITDA per bed is more than 70 lakhs, it implies a decent payback period if the company is able to wrap up operations swiftly. So while the valuation is ahead of the sector, superior execution and lean balance sheet makes it a worthy pick in our view.
All right, with that, we'll take a short break. On the other side, we'll get in touch with the management of Enviro Infra on the back of their listing. We'll have the company's chairman and managing director, both of them joining in to discuss their post-listing plans. It's been a stellar listing, up nearly 40% from its issue price right now.
We invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Welcome back. You're tuned into Chartbusters. You're on CNBC TV18. Well, let's focus on the new kid on the block, wastewater treatment solutions company, Enviro Infra. Well, that's just listed on the bourses at nearly a 40% premium in comparison to its issue price. We're currently joined by the chairman, Mr. Sanjay Jain, as well as the MD, Mr. Manish Jain, of the company, who joins us. Happy visuals coming in from there. Good morning, Manish, as well as Sanjay. Congratulations. Solid listing, and now in fact the responsibility goes up, because all those shareholders will want to know what should we do from here on post this bumper listing. Let's get a couple of numbers going. Could you tell us what is the growth trajectory we should be looking at from here on, and what kind of profitability or margins we should work with?
Good morning, and thanks a lot for having us on the show. I'm thankful to all the investors who have invested in our company and for such an overwhelming response, which confirms the confidence in the growth journey of the company. We are having a very good order book of 1,906 crore as on 30th of June. Our growth pattern for the past 3 years have been 80% CAGR on top line, 130% CAGR on EBITDA, 132% CAGR on PAT. Our EBITDA margins are to the tune of 24%, and PAT margins are somewhere around 15%. The order book is diverse. We are having the orders in 8 states presently. We are increasing our footprints in other states, and we are increasing the number of projects wherein we are already working. So with the order book which is available in hand, the diverse order book, the waste to energy initiatives and innovations, we expect that we will continue to maintain similar margins what we have been doing right now.
And what about the top line growth, sir? Will you all continue at the same pace? I think the last 3 years, you mentioned that top line growth has been very, very good. What is the rough range we should work with in the time to come?
The top line of the company, if you see in the last 3 years, it was around 30%, 80% on CAGR basis. Going forward, we expect a decent figure of around 30 to 35%. On the top line we will maintain, and in terms of margins, EBITDA margins, it will be in the range of 24 to 25%.
All right, 24 to 25% EBITDA margins with 30-35% top line growth. You have an order book of nearly 1,900 crores, and that is what brings me to my next question. And maybe Manish,
I would like to add one more thing.
Yes, please.
In this, what Manish has told, the order book is 1906 on 30th June. In July, we got one more project from NMCG. It is 267 crore project. So total order books gives us the visibility of around for the next 2 years. And further, this year, current year, it was being the election year. And very less projects were floated by the government departments. Going forward in the third quarter and fourth quarter, we are expecting a lot of schemes which the government has initiated. A number of projects will come up, and we are quite confident based on our success ratio which we have achieved in the last 3 years. We will bag good orders. That's all.
Right. So that is exactly what my next question was, because your order book that you gave was 1,900 crores, that after you won an order worth around 260 crores, in the next couple of quarters, what is the quantum of orders that you would be bidding for, and what has your traditional market share run rate been? So in that case, we'll understand, what are the orders that are likely to come in the pipeline over the next 2 quarters, and if you can give us an inkling into what FY26 looks like in terms of an annual order inflow as well.
There are various government initiatives under which the projects are coming up. These are basically 2 different segments. One is water and the other one is wastewater. The water segment for rural, it is Jal Jeevan Mission, and for water and wastewater it is Amrut for cities. So after these elections are over, after H1, a lot of projects are coming up. The budgetary outlay for JGM for current financial year has been to the tune of 76,000 crore, and for Amrut mission, this budgetary outlay from center has been 8,000 crore along with the state and ULB contribution, which is separate from this 8,000 crore. Further, NMCG is having its own budget outlay. So a number of projects are coming up in each state, and the success ratio of the company, which for last financial year has been 58% and 37% on an average basis for the past 3 years. So company is expecting a very healthy order book going forward as well. And the growth trajectory, what Sanjay has just confirmed, we are quite hopeful that we will be meeting those growth trajectory.
All right. And finally, before we let you go, there are two major segments. There's wastewater treatment and then there is waste to energy. If you could give us how this split of these two in terms of revenue will pan out over the next few years, and what is the margin differential between these two?
Basically, waste to energy initiative is what we are incorporating in our projects, in our wastewater treatment projects itself. That waste to energy initiative as well as sustainability. Being power intensive projects, a lot of power is required for the regular operation and maintenance of these plants, and these plants are 24/7 operations. So just to reduce on that recurring cost and the power to be drawn from the grid, we are providing solar power plants as a part of the project, so that the ultimate requirement and the power to be drawn from the grid that reduces, so it ultimately reduces the recurring cost and recurring cost of the end client as well. This is one initiative. Second, it is waste conversion of waste to useful resources. So we are taking this initiative forward by generating biogas from the sewage treatment plant that we are installing. This biogas can be purified and converted to CBG, or this biogas can be used for power generation. So basically these are waste to energy initiatives. These are reducing the carbon emissions, and these are making the project viable for carbon credits as well. So these are the initiatives we are building up as a part of our project itself.
All right. So it's not basically a separate revenue item, but an ancillary revenue over and above what you are doing in your business itself. Wish you good luck. We've got the key headline numbers for now for the next couple of quarters to work with, but looking forward to speaking with you post your quarterly earnings that you report to exchanges as well. Thanks a lot and congratulations once again. With that, we're into a short break. Come back on the other side. We get you more on the markets and a lot of stock specific action.
Welcome back. Well, a quick check on the markets before we wind down on the show. The Nifty is up 190 points. Bharti Airtel is the last big mover that we're seeing in the last few minutes. Reliance Industries holding above the 20-day MA. And you have the tech index. After seeing a sell-off yesterday, that's bouncing back today. Pretty good times. Your portfolio may not be feeling so good though, because for today's session, you have the mid-cap index that's doing a relative underperformance, though individual stocks are doing a thing of their own. We'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.
I am a big believer in the capability of the group. I am invested and I have bought more in this fall. I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
Good morning. It's a Friday morning. It's 11 o'clock and markets have got their Friday cheer. There's been a sudden step up in the markets. The Nifty's crossed 24,100. It's a 200-point up move. I am Reema Tendulkar. With me is Sonal Bhutra. Sonal, mid-caps are trailing today. Yeah. But, you know, for the last few days, they were outperforming. So despite just a, 0.1, 0.2% gain on the mid-cap index, for the week, the mid-cap index is still up 2.5%, outperforming the frontline indices. And today, the top spot in terms of gainers goes to pharma. The Nifty Pharma Index is higher with names like Cipla, Sun Pharma leading gains, but even other heavyweights like Reliance Industries, Bharti has been a big mover, L&T, these are stocks on the way up. On the way down, not too many, but a Shriram Finance is correcting and SBI Life in the red for the second day.
Oh, yeah. So those are some stocks which are on our radar, and it's the start of a new series, right? December series. So that also means we are towards the end of the calendar year, Reema. The time's flown and how. But yes, if we talk about the new series, it has started with a bang for sure. Mid caps, as you said, are lagging, but we do have a lot of stock-specific action that we are looking at as well. We have a new listing, Enviro Infra. It's been a strong listing, and that stock is up around 53% as we speak. The top gainers today include Nifty Pharma, Nifty Energy space, that continues to do well. So we'll watch out for those names. Nifty IT is the one which is lending support as well. Reliance Industries is the other one, which has been in focus. A lot of brokerage notes which are coming by for this particular name. So watch out for that one. The stock up around 2%. It's a heavyweight, so it makes a lot of difference to the moves that we see on the index as well. But since we are getting stock-specific, CreditAccess, that is a stock under pressure after Goldman Sachs has downgraded it to a sell from a buy on the stock. Abhishek is here with more details.
Well, 6 months after we highlighted the pain in microfinance sector, this is the first time that we are seeing a brokerage house downgrading the biggest lender in the MFI space, that is CreditAccess. So Goldman Sachs has downgraded the stock to sell from buy that they had earlier. They have cut the target price by 60% to 564 per share from 1,426 per share that they had earlier. They say that earnings visibility is clouded given the fact that asset quality will deteriorate going ahead. So they believe that there is derating structure in nature which is in place for the stock. They have been negatively surprised by the deterioration in asset quality in Q2 FY25 from CreditAccess Grameen. So they expect the deterioration in asset quality to continue, and also the fact that MFIN regulations have come in wherein you have per lender per customer 3 lenders from the earlier 4 lenders. That will also weigh in on the performance of MFI players. So they have cut the EPS by 40 to 50% over FY25 to FY27, and they expect the credit cost to be at 6.6% for FY25 and about 4.5% for FY26. The valuations don't adequately reflect the underlying stress that is there in the system of microfinance sector. They also have written on financials wherein they say that sizing the microfinance stress, they have sized anywhere between $4 billion to as high as $18 billion of potential stress pool in the microfinance sector alone. So that is why they have downgraded CreditAccess Grameen to sell, and they have a buy on AU Small Finance Bank LT, that is L&T Finance, as well as IndusInd Bank. They say that diversified players are better placed than microfinance lenders. Back to you.
Thank you very much for that. And talking about Friday cheer, you can see it in Allied Blenders. There's a bullish note coming in from ICICI Securities. Mangalam is here to tell us more. Mangalam.
Well, yesterday it was Tilak Nagar Industries. Today it's Allied Blenders. ICICI Securities has initiated coverage of the buy rating, target at 400 rupees. What they're expecting going forward is a revenue CAGR of 10% over the next 3 years, but importantly, the net profit grows at around 30%. Why is it that it happens so? One, because they believe that the company will do premiumization well in the alcobev industries. The iconic white whiskey that the company is selling will double its volume in FY25 itself. And even in Officer's Choice, which is basically the mass-end whiskey, they will see improved state mix, and that itself would aid profitability. But over and above everything else, the company is looking at backward integrating their ENA sourcing, and this is something that the management has been talking about here on CNBC-TV18 as well. That would lead to margin expansion of nearly 170 basis points over the next couple of years. Their target for the long term is industry-leading margins, which is close to around mid-teens itself. The key risks, as it is with all the alcohol stocks, potential ban or regulatory change in key states, and in their case in particular, failure to scale up in prestige and above segment, largely because the positioning of Officer's Choice is that of a mass brand. Can the company go ahead of that and get reasonable success in the premium brand is something that we'll be looking at. For now, the stock doing well.
Yes, it is 3% higher on that one. Thank you so much, Maglam, for joining us with all those details. With that, it's time for a short break now. On the other side, we'll be joined by the management of Gulf Oil Lubricants to discuss the company's Piaggio partnership renewal and a lot more. Stay tuned. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's time to talk about the commodity space. Manisha Gupta is joining us now, and today we are going to be focusing on crude oil prices. What's happening here, Manisha?
Well, if you look at this week, Sonal, we've seen the crude oil prices continue to decline. 3.5% on the downside until this week. Up till now is how we are trading. This is quite opposite or contrary to what we saw the crude oil prices in the previous week when we saw 5% of gains come in for that one. A bit of an uptick on your screens for the crude oil prices, and that comes in on the back of Israel and Lebanon accusing each other of ceasefire violations there. It was after many conversations, various debates that we did reach that agreement, but there are violations being accused from both sides, and that is where a bit of a premium seems to be coming back. The markets, though, are looking at weaker demand that we've seen from US and China in much of this year. Now that we have the 10 and 11 months of data in 2024, those numbers are not in the positive as compared to previous year, and that would continue to weigh onto the markets. Apart from that, there also is a gasoline stock surge that we've seen in the US markets on a week-on-week basis. So even as we are approaching holidays here, the number there continues to decline, and that's worrying. The next important thing to watch out would be the OPEC and allies meeting. Well, that was supposed to happen on 1st of December. Now it's postponed to 5th of December because there were some other events as well. So to avoid conflict, there has been a date change there. But even with that, it continues to be a virtual meeting, this one. And the expectation is that at this meeting, this would be a third straight time that OPEC and allies will just push ahead furthermore the output increases that they were anticipated to do. OPEC and allies have said that they will increase 2.2 million barrels sometime in 2025, but their final verdict or statement will now come in on 5th of December.
Thank you, Manisha, for spotlighting that. Moving on now to the first corporate on the show. Gulf Oil Lubricants is in focus after the company renewed its partnership with Piaggio Vehicles till 2030 to deliver lubricants to the company's Piaggio's commercial vehicles. This partnership will cover lubricants including advanced BS6 oils and EV fluids. To discuss this, we have with us Ravi Chawla, Managing Director and CEO of the company. Mr. Chawla, thank you very much for joining in. So first, how is this renewed agreement with Piaggio different compared to what you had in the past? So as we were saying, I think EV fluids are added. What else, and what would be the incremental revenues?
Well, you see, we have been having a relationship with Piaggio for, in the past also. So the renewal is obviously up to 2030. They have a full range of commercial vehicles, as we know. We've also been supplying them EV fluids for their three-wheelers, which are electric three-wheelers. And what we have now is obviously grow with them as they grow in the market in various segments. And it is obviously an area where we are going to supply a complete range of lubricants across all their channels. So it is a continued partnership, and we're happy to share that we have renewed it up to 2030. As our strategy has been to work with the OEMs, we have over 40 OEMs in automotive, industrial, construction, EV fluids, and AdBlue. So this is part of the strategy, and I think this renewal, of course, Piaggio being one of our top 5 customers. So the incremental will be the growth that Piaggio gets, and of course, how we can penetrate the market. So in line with our 2 to 3x market growth rate, I think this is another, I would say, area where we can continue doing that.
So, Mr. Chawla, how much of your revenues right now is coming in from Piaggio, and would that continue to be the number as well going forward? Now that you're saying Piaggio is growing, the market is growing, what kind of incremental revenues would you see on the existing number?
So you see, Piaggio has been a partner with us for the last 5-6 years, and this is a renewal. So as they grow, we grow with them. So OEMs for us, obviously, we have certain OEMs where we have a relationship across their channels. Some we have in various, like the franchisee workshop or aftermarket. So OEMs do make up, more than 20% of our business. In fact, some segments higher. So I think this is part of that. And as we see the vehicle penetration go up, and of course, the EV vehicles go up for Piaggio, we will continue to grow. So usually our target has been 2 to 3x the industry growth. Similarly, in this area, if industry of commercial vehicle oils is growing, and overall growth is 3 to 4%, we expect to grow at 2 times that at least.
Is Piaggio one of your top 10 clients? How much did it contribute in terms of revenues? What was it growing at? Just want to understand the significance. And just to understand, so it's just purely an extension. It's the same things that you were supplying to them. It's just now extended for an additional 5 years till 2030.
You see, with the OEMs, it is a long-term relationship because we do a lot of product development, and then it goes into a contracted 3 to 4 years, 5 years contracts. So yes, it is part of the earlier, but I would say that as we look at India growing, definitely three-wheelers transportation, last mile transportation is higher. So as I told you, total OEMs for us is about 20% plus, in some cases, some segments even higher. So we continue to be the leader in the franchisee workshop in the private sector. So I would say that, we don't, the exact figures, the growth that we have got with Piaggio has again been positive. I would say it's been positive the last many years. COVID, of course, we saw a bit of, lull at that time. So we continue to try to grow at least, as I said, 2 to 3x the market growth rate, which is currently 3 to 4%, even for our OEMs.
Got it. So let's talk about quarter three now, because quarter two did see a lot of impact of elections. We did see, some slowdown in terms of volume growth, which has been strong so far, of course. What does the quarter three look like so far? You saw double-digit growth in PCO, DEO. There was good performance in B2B as well. Can you give us a sense of whether quarter three or the second half will be better than the first half?
Usually the second half is better than the first half. You're right, because H2 is October, November, December, and then you have the closing in Jan, Feb, March, where a lot of push happens. But if you take consumption point of view, the monsoons, which is July, August, September, is generally a low quarter. But this time with the elections, we saw that there were, and the festivals coming together, we did see a slight challenge in quarter two. I think now H2 is certainly going to be better for the industry in terms of overall demand. For Gulf, we are focused on our segments. So most of our segments, we are clocking in good, high single digit, close to double digit, as we mentioned. But obviously one segment, which is factory fill, where we supply majorly to the commercial vehicles, that is about 7-8% of our business. And that is down 15-20%. So that, I hope it picks up in H2. So I think all the feedback we are getting from the market is that, yes, things will look better in H2. And definitely November, December, we hope that we'll see a sort of, increase in terms of demand. And in our strategy, we have been growing well. And I think what we shared also on quarter two, a lot of our segments have done well, except factory fill, which I mentioned is slightly down. But even that is expected to pick up going forward.
Tell us if this is a fair assessment. So some in the market believe that the company, despite growing much faster, 2x of the industry, 2 to 3x, your core volume growth will still be in high single digits, say from FY24 to FY27, 8-9%. Is that a fair assessment? And you'd spoken about margins of 12 to 14%. What about over the longer term, say in the next 3 or 4 years? Is there scope for you to expand margins given the premiumization efforts, dedicated marketing initiatives, cost management? Can we push up margins over the medium term?
Yeah, absolutely. I think, margin is, we have said that this is the 12 to 14% band rightly by you. And we are focusing a lot on our premium products. So the focus internally is to try to double the growth rate for premium products, which we also mentioned in quarter two. So the focus is there. But you see, the segments that we are in today, we are growing in all the segments we are. So obviously, we will not say no to growth. The volume growth, definitely, if you take our 15 years average, is also about 9% where the industry is gone. And recently, last 2 years, the growth has been double digit in volume for lubricants. So I think we would like to go to definitely that 2 to 3x. And many segments, we have less than 5% market share: passenger car, motor oils, industrials, tractor, scooter. So we see in the infrastructure segment. So we see that we can, in fact, grow a bit faster. So our endeavor is to do that, but definitely to give a commitment on margin and what is going to be, there is competitive pricing, there is raw material inputs, and some of the things do have a lag time in terms of the B2B segments also. So our endeavor and our objective has always been try to go to the next band. And I think with if things work well across the input cost, premiumization, and of course competitive pricing, we should be able to see our band improve.
Okay, all right. So you are adding a lot new products as well. The EV value chain is something that you're focusing on. We'd like to discuss more on that, but today we are completely out of time, Mr. Chawla. So that discussion for some other time. Well, thank you so much for joining in today and giving us all those details. Okay, well, that's the word coming in from Gulf Oil Lubricants. With that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ, सत्यनिष्ठा से प्रतिज्ञा करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी।
श्रीमती प्रियंका गांधी वाड्रा।
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ, सत्यनिष्ठा से प्रतिज्ञा करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी। मैं भारत की प्रभुता और अखंडता अक्षुण्ण रखूंगी तथा जिस पद को मैं ग्रहण करने वाली हूँ उसके कर्तव्यों का श्रद्धापूर्वक निर्वहन करूंगी। जय हिंद।
I'm very happy.
Each company has their own strategy, so I cannot comment into what others are doing in. But we are very sure that after the launch, we will definitely take again the feedback of the customers who gave the feedback initially in terms of what kind of product they are looking at from us. And after the, not only the product, but even the service aspect which we have mentioned today, will also give an assurance to all the customers who are actually looking for a trust and reliable product in the market, which currently is not available as of now. So keeping that in mind, we will bundle the entire price accordingly, keeping in mind all the aspects of our product as well as the services which we will render from our rendering setups.
FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is.
Welcome back. So HUL held its Capital Markets Day, and one of the key focus areas is going to be growth and category targets that they've set out. So Mangalam is here to give us the highlights. Mangalam.
Well, HUL's Capital Markets Day is very well sought after not only by HUL shareholders but all consumer sector analysts and enthusiasts, largely because of the large macro trends that HUL usually speaks about. Remember, the last 3-4 years hasn't been much in terms of revenue and profit growth. It's just about 30%, whereas market share gain has been about 200 basis points as well. They have seen better performance in hair care, and they've also seen the highest share that they've had in hair care in the last 10 years. But the company's spoken about growth opportunities in premiumization, in beauty and wellness, as well as food and refreshments. Both those categories have been disappointing when it comes to growth. There has been muted top-line growth for Horlicks as well. So what's the strategy going forward? The underlying macro suggests the opportunity is near 2 to 4 times growth in the next decade itself, of which more than 80% coming in from internal core, core brands and market makers as well, for which they've identified 10 brands. They also see 100 basis points plus savings coming in through efficiencies. The 6 long-term market opportunities for them: premium face care, premium health care, premium hair care, body wash, prestige well-being, as well as condiments. Remember, they very recently launched the Hellman's Mayo in India itself. As far as digital is concerned, they have 1.4 million retailers onboarded. More than 50% of their traditional trade revenue now comes in from their own proprietary Shikhar app. And more importantly, share of TV in advertising has come down from 60% all the way down to 39%, telling you more than 40% of their ad spends are going towards social media itself. The most important announcement so far, as per me, is them having spoken about winning in many Indias 2.0. Remember, the WIMI strategy, when it first came in 2014, actually classified India into 16 socio-economic clusters. And now we've been talking about the emergence of an affluent category in India as well, right? So WIMI 2.0 will further target sales to this affluent cluster, and as a result of which they are looking at hyper premiumization in the categories that I just spoke about. The premiumization which was earlier taken away in terms of market share from a lot of these D2C brands. So the strategy is laid out. It is all about the execution, whether they can do it or not.
It is all about the execution and the fact that TV spends are going down. It's all about social media as well. So watching out for that. Thank you so much, Mangalam, for bringing out all those trends for us. That's the outlook on HUL, but we'll slip into another break. When we come back, we'll discuss market fundamentals with Jyoti Vardhan Jaipuria from Valentis Advisors.
An idea is all you need to start a business. For you to succeed and scale in that business, what you need are a series of boring, non-glamorous, repetitive daily decisions. And that's exactly what this series is all about. The nuts and bolts of business success.
And going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution. And we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27, we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding, which will be at the most optimum price.
As far as resources are concerned, I think we have an extensive R&D facility which is working in Japan, and the entire R&D really works in terms of creating a product which is really good for the Indian market. And we have done extensive research not only from the customer's perspective but even from the suppliers, from the dealers' perspective as well in terms of what kind of product they are looking at. And basis on that research only, we have created these two nice products today for which we are introducing today in Activa E as well as QC1.
Just spoke with Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah.
הערב אביא לאישור הקבינט מתווה להפסקת אש בלבנון. משך הפסקת האש תלוי במה שיתרחש בלבנון. בהבנה מלאה עם ארצות הברית, אנחנו שומרים על חופש פעולה צבאי מלא. אם חיזבאללה יפר את ההסכם וינסה להתחמש, אנחנו נתקוף. אם הוא ינסה לחדש תשתיות טרור בסמוך לגבול, אנחנו נתקוף.
just spoke with the Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah. I want to thank President Macron of France for his partnership in reaching this moment. Effective at 4 a.m. tomorrow local time,
Welcome back. You're still tuned into Trading Hour. The markets continue their up move. It's a 200-point uptick on the Nifty. The mid-caps are lagging a bit, but this week has been a good week for the mid-caps as well. But we have to discuss market fundamentals. Jyoti Vardhan Jaipuria, founder and managing director of Valentis Advisors, is joining us now. Jyoti Vardhan, good morning. Thank you for joining in. Well, how are you looking at the markets currently? There's been a lot of volatility, 2 days of FI buying, then there's a big sell number. What's the mood now?
Yeah, so, the good thing is that we've had a correction. So at least valuations have become a little better than what they were earlier. From here, I think, we still will have some sort of more time correction than a price correction. We're entering December, of course, which is a seasonally strong month. So I think over the next few months, we'll probably be range bound in this range. And given that earnings are growing, we'll probably see, valuations becoming cheaper 3 months, 6 months down the road. And that will set the stage for the next run in the market.
Jyoti, hi, morning. What about the global setup? Lots of moving parts here. What is your base case?
Rima, I think the good thing is Trump will finally come in January. He's made a lot of announcements before, but with politicians, what they say before the elections may not turn out to be true after the elections. So in the worst case, I guess, there are two things we are looking at. One is that he's going to put tariffs all across the board. And there'll be tariffs on China, there'll be tariffs on, like he's announced, Mexico and Canada also, which in some sense is good for India indirectly because, it makes Indian goods cheaper relative to Chinese goods. But I think, there are two things you have to watch out there. Once he puts tariffs, then, there may be a lot of other countries starting to put tariffs. The second is, my guess is if he does this tariffs, China will go and devalue their currency to, offset the impact of the tariff. If that happens, then, every country in the emerging market space will probably have to devalue their currency, which is not great. You don't want a competitive devaluation across the board. The third is what this does for US is this whole inflation coming under control narrative may go away because the moment he puts tariffs, then, goods become more expensive, then inflation will start going up again. So to that extent, the view that next year we'll have Fed cutting rates and, rates are headed much lower may not work out to be true, which may, spook the market for some time. But my guess is we should wait till he comes because very often he says all this as a bargaining position. In the end, he may not do most of what he's talking about also.
But, Jyoti, and if we do get those tariffs on China, one impact, as you said, would be perhaps the yuan depreciates. Also, the risk is that what if China starts dumping all their excess capacity into India, and that will hurt the domestic growth if we do have that scenario also play out, that there's dumping from China because US as a market is not viable.
And the dumping from China, we've seen what has happened in the chemicals industry. They have been lagging because of that. So there are a lot of moving parts that we've been talking about as well. So, you are saying there is some correction in valuations that has happened because the market's corrected from the top. But the fear that everyone has is there more to go? What has the conversation been like with companies for Q3? Because first half did see some impact on demand. Do you think now we'll see recovery, maybe some improvement in earnings?
Yeah, so Sonal, my views, we had 2 bad quarters. Probably the market ignored the June bad quarter because the markets were good at that time. It was ignoring all the bad news. And it hit us a lot in the September quarter because the market was going down also. So I think, somewhere we are close to a bottom of the earnings. Earnings will start to improve. There are 2 reasons I think earnings will improve. One is if you see the government capex and the government spending. In the first half, it's been very low, partly because of the model code of conduct and the elections which are being. I think second half, the spending will be much more. I think, for example, on capex, they'll do an average 1 lakh crores every month relative to, so which will be like up 50% relative to what they did in the first half. So that will help growth improve. The second is rural income will pick up because we had a good monsoon, good crops. The farmers will start getting this money by, the next month. And so that will start kicking into rural demand. So I think, maybe that impact will be felt more in the March quarter than in the December quarter. December quarter may be slightly better than what we saw in the September quarter. But I think the March quarter will be much better than what we've seen in the December quarter. I think we go back to a, close to 10% sort of earnings growth, and which I think FY26 again should be 10 to 11% sort of earnings growth. So I think from the low we've seen, we're probably going to see an improvement in earnings coming through.
Financials, has been attractive for a long time, but it's not given the returns. Tell us why one should still continue to keep the faith on financials.
So, it's valuation, Deepa. So for us, it is...
But it's been cheap for a while, right? And the whole market went up and it still didn't perform.
Yeah, so, there are problems there just now. There are two problems with the financials currently. One is the NIMs are under pressure, right? Because, you've seen basically a repricing of the deposits going up. The second problem which you have is basically, everybody's worried that, okay, the NPLs are more or less bottomed out and from here things can only get worse. We've seen some of that stress come in the MFI book, in the unsecured loan book. So going forward, two things will change. So one is, the NIMs will start to improve because already you started seeing deposit growth pick up. And, one key reason why deposit growth was under pressure was that the government was not spending. So, the reserve money growth in India has been very low. So as the government spends, you'll have, more reserve money, you'll have more liquidity in the system, and that will help to improve the deposit scenario. And so slowly, you'll start to see NIM stabilizing and starting to move up. Credit demand, just remember, is still decent. So it's not been like lagging. The other is the valuation. So, we have this classic thesis which we always look at when we buy stocks or sectors. And so just now it's undervalued. So banks are the only space where, on a 10-year basis, if you look at the valuation and look at them currently, current valuations are at a discount to a 10-year. So banks is, one of the only probably large sectors where this is happening. Second is it's underowned, and third is it's underperformed quite a bit. So, it may take time because if the rate cuts happen, then probably NIMs come under pressure very short term. So, but, over the next 12, 18 months, this is one space where you'll make a lot of money and your risk on the downside is quite limited in the banks.
Okay, all right. We take that point. So keep an eye out on financials, the credit growth update going forward. That'll be very important to track. The sector hasn't done so well versus the other sectors that we have seen. But Jyothiwardhan, thank you so much for joining in as always with your views on the markets and sector-specific queries as well. Well, that's all about markets, but it's time for another break. Tanvi Gupta-Jain, the economist at UBS, will join in on the other side to discuss their India outlook, Trump 2.0 impact on India, and a lot more.
Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy to take control of their own territory once again. Hezbollah terrorist infrastructure in southern Lebanon will not be allowed to be rebuilt. And over the next 60 days, Israel will gradually withdraw its remaining forces. And civilians on both sides will soon be able to safely return to their communities.
we don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table, and whether there's going to be any change in regulation or not. But you're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got... See,
nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, you know, I think that, you know, it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, you know, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock. And that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? You know, tens of billions of dollars without having to, you know, be an Amazon or a Walmart, right? You know, to get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government.
Welcome back. The second quarter GDP number is due today at 4 p.m. Lata is here with the expectations. Lata.
Big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th, but that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex, or gross fixed capital formation as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May.
Okay, all right. Thank you, Lata, for joining in with what to expect from the GDP data. In fact, let's also invite in Tanvi Gupta-Jain, the economist at UBS, to understand what are their projections. Remember, UBS has lowered India's FY26 growth forecast by 50 basis points to 6.3%. They believe softer domestic growth and a Trump tariff on China will impact India. Tanvi, good morning. Thank you so much for joining in. Well, just wanted you to elaborate on the rationale that you have for lowering the GDP forecast, because some believe that maybe if there are tariffs in China, that would be positive for India. What's your take, and why are you factoring in lower growth?
Sure. Thank you for having me on the show. So yes, you're right. We are expecting a lower GDP growth for India in FY26. In fact, we have actually lowered our forecast by 50 basis points to 6.3% right now. And this is largely taking account two factors. One is Trump 2 and what it means for India. And the second is the softening in growth momentum, which we are already seeing on the ground. While we expect a cyclical recovery in second half of FY25, we think that there are more concerns on the growth softening, partly because of the global uncertainties which are increasing. So let me elaborate a bit why we are downgrading India's growth forecast. So we think that Trump too can impact India through three channels. One is what happens to the global growth because of a slower US and the China's growth. So our UBS economics team has lowered global GDP growth forecast by 30 basis points for both 2025 and 2026. We think India is a low beta economy because unlike the Asians, more open economies, but I think India is not immune. So there is going to be an impact on India's growth as well because of a slowing global growth. Second is where I'm more worried about is a further delay in India's private corporate capex recovery due to risk of China's offloading excess capacity in the manufacturing sector. And we have seen so far that bulk of the heavy lifting on the India's investment cycle was either done by the government or the residential property market doing very well. The corporate sector yet, at least from the data of 4,500 companies that we track, has shown a recovery, but it is concentrated in a very narrow part of corporate India. And in case we do end up seeing Trump 2 related tariff hike on US and US imposing on China, I think that excess capacity will further delay the corporate capex recovery in India. And third, which is very interesting, and I think it should matter more from an FX policy point of view, is that any risk of a greater depreciation pressure on China's RMB could have implications on India's net good trade balance. And we saw it what happened in 2018-19. China's RMB depreciated by almost 13%. This time, my China economist is talking about a 5% weakness in RMB. We are expecting a 2.5-3% weakness in INR next year. So INR actually appreciates against RMB, which again makes it easier for the corporate to import from China rather than expanding domestic investment capacity. So I would say largely the growth slowdown risk is more because of US-China trade war and plus the softening we are already seeing. But as you rightly pointed out, I think India will see a strengthening of China plus one supply chain shifts. And we are already seeing a lot of supportive policy measures to boost manufacturing. So if I look at a year beyond 2025, we are actually saying India's GDP growth could actually recover to 6.6% in FY27 because of India gaining from in the medium term perspective.
So Tanvi, your base case assumes that Trump imposes a 60% tariff on China. That's the base case. And what about the other veiled threat about a 10% import tariff on the rest of the world? Is that baked in? And if it does come through, what will be the impact on India?
Sure. So the base case right now is that Trump imposed 60% tariff on 75% of China's goods starting from the September quarter of next year. And we are expecting that increase happens in tranches, lower the larger. So basically, initial tranches will be lesser taxes. And as you move up in the fourth tranche, the tax impact will be much higher. For most of our Asian economies, we're expecting a much sharper impact on their GDP forecast for 2026 versus 2025. And because India follows financial year, obviously, since we are expecting impact to start feeling into the numbers from the September quarter, India could see bulk of the impact in FY26 onwards. So we are not yet expecting tariff hike beyond that 60% or on other countries. But in case you end up seeing, because right now all the media reports are talking about what if Trump is imposing extra tariffs on countries beyond China, and in case there is a 10% tariff hike on rest of the world, I would see there is a downside of 30 basis points to my 2026 or FY27 GDP growth forecast, which I'm currently at 6.6.
Okay, all right, then we get that point. I would have liked to chat a little bit more, but completely out of time. But thank you so much for joining in and telling us what's your rationale for downgrading those GDP growth forecasts for the next fiscal. Time for a short break now. We'll get you more on the markets on the other side.
market, shareholders, and the public at large, right? People trust you more. So, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country. And we're just a small part of that today, and so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps again, as I'm pointing out, we don't know. There's been no official comment from Zomato, but HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and what we're building, which is commerce, right? We're employing. Obviously, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But that's the feedback that we've gotten, right? In general, if you look at companies, in the Nifty 50, right? Most of them are, Indian owned, and most of them have, that's been the broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think, you're right to say that, why has it become an issue suddenly? I think we're expecting that, we will scale, we will create value.
So is this a preemptive move, is my question?
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so, we are, we will own, by the time we go public, we'll own about 20-ish%, right? And there are a couple of, pieces that we're making, a couple of things that we're closing, this flip from Singapore to India, and just, getting ready even just from a legal perspective to go public in a couple of quarters. But yeah, we'll own around 20%, right? Which I think is decent, right? So, like, if you build a large company, that'd be great. But back to answering the key question, right? Is it, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when, I don't know if it's 3 years, 2 years, or maybe longer, but it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large-scale value to accrue to Indian shareholders, and now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time, we.
Welcome back. Well, there's a sharp fall from the highs. The mid-cap index is in the red as we speak. The Bank Nifty too is in the red, and that is leading to the fall in the Nifty also from the highs of the day. We were up around 220 points when we started the show. Now we are up just 165, and there you go. Nifty, Bank and mid-cap index, both of them are at the day's low. We'll keep tracking that for you, but we did have a listing, a new kid on the block. Enviro Infra Engineers had a bumper listing on the bosses at a near 50% premium of 220 versus an issue price of 148 rupees a share. The management of Enviro Infra spoke to CNBC-TV18 post listing. Let's listen into that conversation.
The top line of the company, if you see in the last 3 years, it was around 30%, 80% on CAGR basis. Going forward, we expect a decent figure of around 30 to 35% on the top line we will maintain. And in terms of margins, EBITDA margins, it will be in the range of 24 to 25%. The order book is 1906 on 30th June. In July, we got one more project from NMCG. It is 267 crore project. So total order books gives us the visibility of around for the next 2 years. And further, this year, current year, it was being the election year. and very less projects were floated by the government departments. Going forward in the third quarter and fourth quarter, we are expecting a lot of schemes which the government has initiated. Number of projects will come up, and we are quite confident based on our success ratio which we have achieved in the last 3 years, we will back good orders.
By the way, the markets are falling now. The mid-cap index, which was up in the green marginally, is now down about 0.25%, and there's fall in the last 10-15 minutes. The Nifty was at levels up 24,120, thereabout. So from that level, we've fallen close to about 40-50 points. And in the frontline pack, it's the Adani Group names which have come in for profit booking. So Adani Enterprises, Adani Ports. Enterprises is down 1%. Adani Ports has flattened out. So things are getting a bit weak. The banks too, the Nifty Banking Index, which was up just 70-80 points 15 minutes back, is now down 100 points. That's the Nifty Bank for you. We're going to wrap up on Trading Hour from the entire team. Thank you for watching.
All of us are taking that option.
So I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should. One of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO. I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say. It's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world, and it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers, to today. Everybody's talking about semiconductors, and semiconductors are essential to, every business, every country, every profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of, taking our business from what was, in 2015, we were about a $4 billion company, and this year we'll be north of $25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team. And with the investments, nothing comes overnight. It comes after literally 20 years, I think 20.
Stocks clock some early gains and hold on to the green ahead of the weekend. In a truncated US session after Thanksgiving, healthcare and utilities are prominent gainers, while realty drags mid-caps underperform.
Hindustan Unilever turns its focus on affluent agglomerations as part of its growth strategy that sees brands like Surf Excel, Dove and Ponds being in the sweet spot for premiumization.
A bunch of institutions and other shareholders of Zee Entertainment defeat a resolution to reappoint Puneet Goenka as director. Goenka, however, continues as CEO of the company. Stock cheers the news.
And Air India CEO Campbell Wilson says the airline's revival will be the Everest of corporate turnarounds, but seeks patience, says the ambitious plan to upgrade legacy fleet will take more time and cost more than the budgeted $400 million. He claims that airfares have gone down amidst the consolidation in the sector. That is a CNBC-TV18 exclusive. Good afternoon, you're watching Halftime Report here on CNBC-TV18 on the final trading day of the week. I'm Hormuz Fatakia. With me, as always, is Mangalam Malu. Mangalam, good afternoon. It's the good day for the Nifty, at least for now, considering courtesy Reliance Industries and ICICI Bank. The same can't be said, though, for the Nifty Bank. The index is off the highs of the day, slipped into the red, as have the broader markets today. But there is a lot to look forward to going into the weekend.
Lot to look forward to going into the weekend. I don't know whether it's market-related or personal
weekend-related.
But weekend-related. As far as, just the markets are concerned, portfolios may not be feeling very good today because we have, the advanced decline lines coming out very close to each other for the weekend as well. We have almost each stock declining for the stocks which are advancing. So there has been a bit of an intersection. How the second half plays out will be very crucial because the Nifty Bank is now below the 50-day moving average. Today, its first excursion to the 50-day moving average was defended. The Nifty Bank moved above from that and now has moved to the low point of trade. And what kind of bearing it has on the Nifty itself is something we'll watch out for. But speaking about the banking sector itself and in that the financial space, microfinance sector, that's in focus on the back of fresh brokerage commentaries coming in, which are cautious on the sector. Abhishek joins in with the details of that one. Abhishek.
Well, brokerages have turned cautious on the microfinance sector. Remember that CNBC-TV18 had alerted viewers about the rise in stress in microfinance sector 6 months ago. So UBS has written on microfinance. They say that, overdues in October continued to see an upward trajectory with PAR, that is portfolio at risk of 0 days and above, has risen by 130 basis point month on month to about 17.5%. So they expect slippages of formation of bad loans to be higher in H2 FY25. The MFI industry portfolio outstanding is down 8% from March to October. So loan growth momentum is also slowing down over there. Jefferies has written on MFI sector. Again, they are saying that MFI loans of 16 lenders who form 60% of the industry points at 18% CAGR in 2 years with rise in customers as well as exposures. So loan growth may fall in H2 FY25. Leverage is up with rise in share of more than or equal to 4 loans per customer. That has risen from 4% of the portfolio to 6% in the last 2 years, and which forms about 19% of the overall industry loans, and that is leading to higher overdues. So Utkarsh as well as Spandana and CreditAccess have higher share of customers who are leveraged on the higher side, that is more than 4 dues per customer, while Bandhan Bank actually can fare better as per them. Now Goldman Sachs has also written written on MFI sector. They say that the stress pool could be around $4 billion to about $18 billion is the potential stress pool that they have identified. So loss rates in MFI segment have worsened over the last 2 quarters. They believe that the sector will continue to face headwinds and could see a further spike in loan losses in H2 FY25. So they have baked in 12% to 17% of the loan losses from these test pools that they have pointed out. Back to you.
Thanks a lot for that, Abhishek. It's showing up in the stock price, particularly in CreditAccess Grameen after that big downgrade that came in from Goldman Sachs this morning. It has 60% cut in its price target for CreditAccess Grameen now to 564 from 1400 levels plus earlier. But moving on, then the other one is the stock in focus is Allied Blenders, and that is because of a brokerage report from ICICI Securities. And Mangalam, it's become a trend, right? Talking about all these distillery companies and being teetotalers, on that too on a Friday.
That too on a Friday. You know, we're talking about these companies while we have our glasses of water when we talk about this. Yesterday was Tilak Nagar Industries, where we give you an insight edge into what the management had to say. Today, Allied Blenders is holding up with about 2% in terms of gains at a time when the mid-cap index is actually underperforming. ICICI Securities has gone ahead and initiated coverage on the stock with a target price of 400 odd rupees. What is it that they're expecting? They're expecting just about 10% in terms of revenue CAGR over the next 3 years, but EBITDA actually grows at around 30% compounding for next 3 years. Why is that? Because one, they believe that this company is well positioned to capture premiumization trend in the alcohol beverages industry. Remember, this is a word that a lot of these alcohol bev companies are talking about. They have a brand called the Iconic White Whiskey. They expect the volume contribution of that to double in FY25, and growth will come by in the next few years as well. And their mass premium whiskey, which is Officer's Choice, which is a fair amount of market share in that segment itself, they will be a lot more profitable if they improve the state brand mix. So there are some states which give you better realizations, some states which don't give you better realizations. So mixing that or adjusting that mix could actually, lead to improvement. But the biggest improvement will come in from backward integration, where they expect, margins to improve by almost 170 basis points over the next couple of years, where ENA, which is an important raw material, which was earlier outsourced, will now be entirely made in-house by the company itself. And that's something that the management has been telling us on CNBC-TV18 as well. What are the key risks to their call? No different from the risks that would be for any other alcohol company. Potential ban or regulatory change in key states and failure in scale-up of prestige and above segment. Typically, for a brand that is known, a company that is known for a brand like Officer's Choice, which is mass premium, going above for every brand in terms of positioning becomes a lot more difficult, as we've seen with a lot of the other consumer companies as well, which try to premiumize on the same brand. So that's something we'll watch out for.
Interesting. The stock remains above its IPO price, though, of 281, still trading with gains of around 2%, although off the highs of the day is Allied Blenders. But moving on then, a bunch of institutions and other shareholders of Zee Entertainment defeated a resolution to reappoint Puneet Goenka as its director. Vamakshi is joining in with more details on that. Vamakshi.
Well, Hormaz, yes, that's right. The shareholders rejected a proposal to reappoint Puneet Goenka as the director of the company in its AGM that was held on November 28th. This proposal was defeated by a 50.4% vote. Now, keep in mind that earlier on, there were some proxy advisors like InGovern as well as IIAS. Both of these proxy advisory firms had actually recommended the shareholders to to vote against his reappointment. And a few days ago, in fact, Puneet Goenka had already stepped down as the managing director of the company. He said that he wanted to concentrate on his operational responsibilities as the CEO of the company. So therefore, materially, largely nothing changes for Puneet Goenka as a whole, because he will still continue to run the company as the CEO. So that is the news flow around Zee. As of now, the stock is up in trade.
Stock is up in trade, almost 5% higher is Zee Entertainment. Puneet Goenka remains as the CEO of the company. Time for a short break. Up next, the management of Electronic Mart India joins in to discuss the business momentum going ahead. Stay tuned, we'll be right back.
with, maybe 100 people.
Yeah.
Now we have 8,000 people in India across all of our product portfolio. And I think the bet has really, paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board. And I'm very happy to say that this is our largest team outside of the U.S. This is our largest design center here in Bangalore. So it is a very special place.
Well, I'm glad to hear that from you, Disa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very, very high regard for Prime Minister Modi and his strong vision on technology across semiconductors, both the Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to both attract global companies here, as well as building the local infrastructure and ecosystem. And I think the one thing is these ecosystems take time. They don't come overnight. But I would say lots of very strong progress. And we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powerfully.
Welcome back. As promised, let's get chatting with the management of Electronic Marts India. Electronics Mart, the stock currently under a wee bit of pressure, but no real worries. It was a big mover in yesterday's trading session, and a large part of that could be attributed to the Edelweiss note, or erstwhile Edelweiss, now Nuvama note, that came in, initiating coverage on the stock with a target price of 237, indicating an upside of nearly 36-37% from current levels itself, where they expect the robust cash flow coming in from Telangana to support expansion into NCR. And that exactly has been the story that we've been discussing with the management of the company in the past few interactions that we've had as well, expanding into NCR itself. Premchand Devarakonda, who's the Chief Financial Officer at Electronics Mart India, now joins us. Thanks a lot, Mr. Devarakonda, for joining in. We've had this conversation about you expanding your presence into NCR, increasing your per store revenue out there as well. But, for now, just wanted to understand,
how the third quarter has been for you, largely because one, it is a significant chunk of your revenues that comes in, festive season, etc. And secondly, we've also seen, post Andhra elections, has there been any sort of optimism? What can we expect in the second half of this year?
First of all, thank you for having me on your show. See, this festive season is quite promising. So there has been a double-digit growth as compared to last year. So season to season. And also this quarter is on the track. We have seen decent growth coming in from the clusters like Andhra Pradesh and rest of Telangana. Since in Hyderabad, if you look at Hyderabad as a cluster, so since the base is very high, so the growth is in single digit, whereas in other clusters, the growth has been quite significant. That means it was more than 20% during the festive period, that means 1 month period. And in fact, Delhi is also on the growth path. So there we could see more than 40% growth during the festive period.
Mr. Devarakonda, good afternoon. Thank you for joining in. Since you mentioned this, now how do you expect the second half of the year to be? Because your first half saw your same-store sales growth at 6%, revenue growth at 13%. Do you expect to remain on a similar trajectory, considering the fact that the third quarter accounts for a larger chunk of the revenue along with the first quarter? So do you expect to do better numbers than what you did in the first half or around similar lines?
It will be more or less in the similar lines. And also it is subject to that summer setting in. Like normally in the clusters in Hyderabad and Telangana, Andhra Pradesh clusters. So if summer starts sometime in the second half of the March, so definitely there will be much better growth we are expecting. But if the summer is delayed, it will be more or less in the same lines like the first half year.
It'll be very interesting to, find out what kind of sales you are seeing in New Delhi, especially when it comes to air purifiers, given the sort of AQI that there is there. But, from a sustainable revenue, EBITDA and net profit growth parameters, what is it that one should work with? Because, this note that I'm alluding to coming in from Nuvama, they expect revenue compounding of over 21% for the next 3 years. The first half of this year, your revenue growth has been just around 13%. You expect the second half to be similar to the first half itself. So obviously this revenue growth will be back-ended. Do you think this 21% growth is sustainable and achievable? And if you can break that down, how much of that will come in via SSSG and how much of that will come in via new store addition?
See, our target is actually, let us be conservative. So we are expecting around 15% year-on-year top-line growth. So out of which about 6 to 8% will be coming in from as a same-store growth. Because we opened almost 60 stores in the last couple of years, which are maturing currently, and there is decent growth coming in from those stores. So that's why the blended at the company level, the SSG will be around 6 to 8%, and overall top line growth will be around 15%.
That is for this year. And the next couple of years?
Yeah, that is going to be the scenario. So if Delhi, that cluster does exceedingly well, so it might improve by another 3 percentage points. That means it might go up to 18%. So that is our target, like between 15 and 18%.
What is your target for adding more stores this time around, Mr. Devarakonda, in the second half of the year? And maybe if you could share a number for the next year as well. And how do you plan on doing that when it comes to geographical diversity? You want to do it more in metros? You want to do it more in tier 2 cities? And how do you plan on doing it? More company-owned stores, or do you even aspire to do the franchise route as well?
First of all, we are not looking at franchising model. That is ruled out. Coming to that store addition, so before end of this financial year, we will be adding at least 12 to 15 stores, out of which about 6 stores will be in Delhi cluster, and the remaining will be the existing clusters, that means AP Telangana. In AP Telangana, now we are looking at the tier 3 and 4 cities as well. So there we have a lot of scope for, there is a decent market, as well as we can see decent, economy is also growing in those smaller towns. So because they're predominantly agriculture dependent places. So that's why out of 10 to 12 stores which are going to be added this year, 6 will be in metro and the remaining will be in the tier 3 and 4 cities. And for the next year, we are targeting another 25 stores, of which about 6 to 8 stores will be in NCR and the balance will be in the existing clusters. And we have been exploring the other markets. So peripherals of Delhi, like Western UP, Haryana, Punjab, and our teams are aggressively working and gathering the market information. So maybe we will take a call in the first quarter of the next year. So to expand our operations beyond NCR and AP Telangana.
All right, then before we let you go, one final question, and this is a two-part question. One is on NCR itself. You had earlier said that you are expecting NCR to scale up to the same metrics when it comes to revenues as South India. I wanted to know, where does that number stand at right now, and by when do you expect NCR, at least on a revenue front, to be similar to the South? And the second part is margins, because NCR is a lot more competitive. Obviously, the margins in NCR will be a lot lower than what it is in the South. And increasingly, your revenue share from smaller appliances, mobiles, etc., low margin products is increasing as well. So what is a sustainable margin target that one should look at? Two-part question, one on NCR scaling up, secondly, sustainable margins.
Yeah. NCR definitely on the growth path. So there has been year-on-year 50% growth. Not exactly 50%, it is about 45% till now. And the same trend would continue next year also. So because we are planning the new stores which are coming up in the bigger markets in NCR. So we are expecting at least, the trend would continue in the next year also, around 40% growth coming in from the NCR. Coming to that economies of scale, definitely NCR is little expensive as compared to the South cluster, but we were prepared for it. So the blend, we always look at the company level blended EBITDA, which should be maintained around above 7%. So that could be, as long as we achieve that, so we are comfortably positioned. So if you look at NCR as standalone business, the EBITDA levels will be little lesser. This year, it might be around 4-5%. So I'm a little optimistic. So if it is above 4, we are comfortably positioned in NCR. And there is definitely, NCR is, since it is a bigger market, like the market size is twice the size of Hyderabad. So if the store throughput improves, like if it comes, if it reaches the level as we have been operating in Hyderabad cluster, which is on an average, we are getting about 70 crores throughput per store. So once we reach that level, NCR will be on par with the rest of the clusters.
All right, Mr. Devarakonda, thank you so much for sparing time, joining us to talk about your road ahead as well. Wish you good luck for the second half of the year. The street likes what you said because the stock has moved into the green as the conversation went around from the lows of the day, currently at 180. Time for a short break. Up next, Ashish Kyal of Wave Strategy Advisors joins in with some trading strategies and a chart check on the market. Stay tuned, we'll be right back.
That are shaping the new world order, setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. It's a strong start to the December series as far as the Nifty as well as, the mid-cap, Nifty as well as Sensex is concerned. The front cap indices is what I'm talking about. The Nifty is actually led well by the IT index as well as Reliance. So if you look at, the strong start for the series plate that comes up for you on the screen, you have the Nifty IT index, Reliance, both of them supporting the cause of the frontline index. What's not supporting the cause of the frontline index is Nifty Bank, so is the mid-cap index. So the mid-cap index has been underperforming, as is the Nifty Bank. The Nifty Bank is very close to the 50-day moving average, so that's something we'll keep an eye out on. For the Nifty itself, just below 24,000 is strong support coming in the form of the 20-day moving average. Too early in the series to talk about, levels, what option writers are positioning themselves for. But it's the start of a new series and a lot of new F&O entrants. 45 stocks. We have Adani Green, APL Apollo, BSE, a good outing on day one of their F&O. Whereas on the other side, obverse side, we have a decline coming in for Delivery as well as Zomato. Both those stocks under pressure as they enter the F&O space as well. The key triggers for December series will be the RBI policy outcome on December 6th. Geopolitical news and global news is something we'll watch out for. Low global liquidity in holiday season typically leads to a big move in the second half of December, which a phenomena a lot of people call as the Santa Claus rally. Whether that comes by this time or not, is something we'll watch out for.
They would definitely expect some Santa Claus rally to come in towards the end of the year. Mangalam, thanks for that. We'll get some more chart checks on the market then. Ashish Khyal of Wave Strategy Advisors is joining in. Ashish, good afternoon. Thank you for joining in. It's a good start, at least for the Nifty, for the new series. What do you do in such a scenario? You use this bounce to reduce positions, or do you add to them? What are the charts indicating? And couple that up with your stock recommendations as well for the afternoon.
Hi, afternoon to you and all the viewers. If you look at Nifty, yes, there has been a lot of volatility since yesterday. You can see that when Nifty crashed in just 5 minutes, nearly 5 to 8 minutes, by 200 points on the downside, reversed sharply on the upside, and there is a lot of chaos. I think it has to digest this volatility. So expecting a range-bound movement right now over a broad period of around 24,350 on the upside, and on the downside 23,890. So that's the range in which Nifty can move. Having said that, over short term, I think it's a buy market right now over the near term. We can expect a bounce back from here towards the upper end of the range, which is 24,350. As long as on the downside, the support, which is around 23,980, which is an intraday low around that area, is intact. And also very interestingly, if you look at the derivatives data, 24,000 is showing very sharp rise on the put side, which is indicating that there is the conviction back into the market where the put sellers are getting active at 24,000 levels. And that's a little positive and comforting sign. So I think we might be seeing a upside thrust in the second half, and towards the level of 24,250, 300 levels. Having said that, the first stock pick on the buy side is going to be FACT, Fertilizers and Chemicals Travancore Limited. We can clearly see a very strong move in today's session. The chemical stock, the fertilizer stocks since yesterday are doing exceptionally well. And this stock is breaking out after quite some time. We can expect it to move towards the level of around 1,020 on the upside. And one can maintain a stop loss of 900 on the downside. The next stock pick is going to be CAMS. We can see CAMS is trading at 52-week high. The stock has bucked the trend. There is absolutely positive candles past 4 days consecutively, and the overall trend remains bullish. Any dips can be used as a buying opportunity for the target of 5380 on the upside, and we can maintain a stop loss of 4840 on the downside.
All right, CAMS is another of those 45 names which have entered the F&O space today. Ashish, thank you so much for joining in. Would have loved your views on Reliance, but we'll leave that for another day, largely because we're out of time. Speak to you very soon. Let's slip into a short break. On the other side, we get you the preview of India's second quarter GDP number. What is the street expecting this time around? We'll tell you.
An idea is all you need to start a business. For you to succeed and scale in that business, what you need are a series of boring, non-glamorous, repetitive daily decisions. And that's exactly what this series is all about. The nuts and bolts of business success.
I am a big believer in the capability of the group. I am invested and I have bought more.
Back with us here on Halftime Report. Now, the second quarter GDP numbers are due later this evening at 4 p.m. Lata is now joining in with the key expectations from these numbers. Lata, over to you.
Big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th, but that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex, or gross fixed capital formation as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May.
Right, Lata, thanks a lot for that. We'll keep an eye out on all the developments out there. Take a short break. On the other side, we get you also the key expectations coming in from the November auto sales months that are due next week. And that's an important one because the GDP is a lag indicator, the auto sales a lead indicator.
I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
Welcome back. Let's talk about the auto sales that are due next week. November auto sales, which are due next week, tells you that the overall demand picture will be fairly mixed. Volume growth will be impacted by the earlier timing of the festive season this time around. So Darshan joins in with all the details. Darshan obviously gave us a peek into how sales were through the retail Vahan data, but wholesale data is what the companies record as well, and he's going to tell us more about that. Sudarshan.
That's correct. So wholesale growth for the month of November is expected to be mixed, while rural demand is going to support the growth, but slowing urban demand and higher base may keep that growth in the check. Also, volume growth is likely to be impacted by earlier timing of festive season this year. Starting with two-wheelers, service indicates slowing demand trends, and on year-on-year, growth is seen somewhere in the range of 2 to 6%, while month-on-month, sales are expected to decline up to 30%. But as far as Vahan registration data is concerned, for the month of November, growth is seen healthy, and it's likely to come somewhere in the range of 19 to 20%. For passenger vehicle segment, here, weak demand conditions continue to persist. We are seeing higher discounts even after the festive season sales and inventory reduction. As far as Vahan registration data is concerned for this segment, retail sales will likely decline 14% YOY, but for the wholesales, which will be impacted by the higher base of November 2023, we may see an average growth of 6 to 7% YOY, but month on month, there can be a decline up to 15%. For commercial vehicle, this segment is expected to be supported by a low base, and analysts are expecting here a gradual recovery with an increased government spend in H2 FY25. Wholesales for this segment may see a minor growth YOY, but on month-on-month may see a decline in the range of 5 to 10%. For this segment, Vahan registration data is expected to decline 7%. Last is tractor. This segment is going to be supported by 4 to 5 factors. First, good rainfall. Second, good reservoir levels. Third, crop prices. And fourth is improved rural sentiment. And on the back of all these factors, this segment is seen rising 5% year on year. So overall, we are expected to see a mixed picture. But historically, if we talk about immediate month after the festive season, it has always been weak for this sector.
Keep an eye out on all important auto sales numbers. Sudarshan, thanks a lot for that estimate. Now, time for a short break. On the other side, Manisha Gupta joins in with Atul Ganatra, the president of the Cotton Association of India. Stay tuned.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ सत्यनिष्ठा से प्रतिज्ञान करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी।
श्रीमती प्रियंका गांधी वाड्रा।
Welcome back. Joining us on the show now is Atul Ganatra. He is President at Cotton Association of India. Mr. Ganatra, thank you for joining us. First things first, and we hear that the government has cut the cotton output numbers by nearly 9% as compared to the previous year. What are the CAI numbers and do they match with what the government numbers are?
Good afternoon, Manisha ji. Yes, yesterday's meeting of COCPC, government agency, they have cut the production of 9% from last year's 326 lakh bales to 299 lakh bales. And CI figure is very near to that, around 302 lakh bales. The main reason for cutting down the production was the sowing is reduced 10 lakh hectare, that is from the 327 lakh hectare of last year versus this year 313 lakh hectare. This was the main reason. Cotton farmers are shifting to other crops since the return in the cotton, sowing in the cotton is compared to other crop is lower side. Yes, Manisha ji.
Mr. Ganatra, also, how has been the demand in the light of this? Because we haven't seen the prices run up too much, even as the crop is seen slightly on the lower side. How has been the textile industry demand?
Yeah, in fact, even though production numbers are lower, Indian prices, cotton prices has been reduced from 62,000 2 months back to today 55,000 rupees. And this is very good for the textile mills. And most of the textile mills, spinning mills are making good profit from last 2 months since the raw cotton, raw material prices has been reduced, and it is a very good demand is picked up, and the time for the textile mills are, they now stop making losses and they are now in profit. So good time for textile, Manisha ji.
Oh, absolutely. So what is the kind of demand that the Indian textile mills are looking at right now? You've told us that this is profitable because the raw material prices have come down, but is the demand for cotton on the higher side? Are the textile mills asking for a lot of cotton?
Yeah, textile mills are asking a lot of cotton. In fact, even in export to our neighbor countries like Bangladesh, demand is picked up, and every day around 8 to 10,000 bales are exported to Bangladesh. Even local mills want to buy more cotton, but the daily arrival is around 2 lakh bales. And since the prices are lower side, CCI is buying 1.25, 1.4 lakh bales daily on MSP prices. So mills are not getting enough cotton, what they want, because cotton is going to CCI. But CCI is helping to the mills, and they have reduced the last year's cotton prices to 55,000. And in last 1 week, around 4 lakh bales of CCI has been sold to the mills. So this is very good price for mills also to buy cotton from the CCI. And also CCI is giving 2 months, 60 days time to lift the bales.
Okay. Mr. Ganatra, also, as we go ahead, we do understand that India doesn't produce all types of cotton. So there is some cotton categories that are imported as well. With 11% of import duty, how is that working?
Yeah. See, we need actually extra long staple, which is not available more in India in the quantity what our mills required. So definitely, but government has given a relief for the duty. If around 3 lakh bales of Australian cotton is available on duty free, and also they have given certain benefit on extra long staple if they are importing, there is a lot of concession in the duties available. Also, the mills who are doing export, they are also allowed to pay only 50% duty. So duty is 11%. Against export of yarn and material, they can buy the cotton on only 4% duty. So it is called against advance license. So there are a lot of relief to the mills, but anyhow mills are asking more relief and to remove the duty. But we have given from CI, we have given a proposal to government from 1st October to 30th March. This 6 months is a arrival time in India, and farmers are selling 90% of the cotton. So 6 months you may keep duty of 11%, and second half when the farmer sold 90% of their crop, and there will be no loss if government is reducing from 1st April to 30th September. If they are reducing or removing the duty, it will be very good for the mill. So no loss. It is a win-win situation to both farmer and the textile.
All right. We do hope that the government does listen to that and categorizes the duty in two different parts as per the year there. But Mr. Ganatra, thank you so much for joining us, giving us a sense on what the textile demand seems to be at this point in time. But with that, that's all the time that we have on the show. Well, we'll come back and Business Lunch will take all the action ahead.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ, सत्यनिष्ठा से प्रतिज्ञा करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी। मैं भारत की प्रभुता और अखंडता अक्षुण्ण रखूंगी तथा जिस पद को मैं ग्रहण करने वाली हूँ उसके कर्तव्यों का श्रद्धापूर्वक निर्वहन करूंगी। जय हिंद। I'm very happy.
Each company has their own strategy, so I cannot comment into what others are doing in. But we are very sure that after the launch, we will definitely take again the feedback of the customers who gave the feedback initially in terms of what kind of product they are looking at from us. And after the, not only the product, but even the service aspect which we have mentioned today, we'll also give an assurance to all the customers who are actually looking for a trust and reliable product in the market, which currently is not available as of now. So keeping that in mind, we will bundle the entire price accordingly, keeping in mind all the aspects of our product as well as the services which we will render from our rendering setups.
FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution, and we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27 we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage.
Stocks clock some early gains and hold in the green ahead of the weekend and the truncated US session after Thanksgiving. Healthcare and utilities are prominent gainers, while the realty drags. Mid-cap index slips in red. HUL turns in focus on affluent agglomerations as a part of a growth strategy that sees brands like Surf, Excel, Dove and Pond's being in the sweet spot for premiumization. A bunch of institutions and other shareholders of Zee Entertainment defeat a resolution to reappoint Puneet Goenka as director, however continues as CEO of the company. The stock cheers the news. Air India CEO Campbell Wilson says that airlines revival will be the Everest of corporate turnarounds, but seeks patience. Says the ambitious plans to upgrade legacy fleet will take more time and cost more than the budgeted $400 million. He claims airfares have gone down amidst consolidation in the sector. That's a CNBC-TV18 exclusive. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch and I'm Vinny Motiwala. A quick look at what the markets are doing this afternoon. We've seen a bit of a gain coming in. Nifty trading at the day's highest point, 24,125 as of now is what the Nifty is trading at. 0.9% of gain is what we're seeing for the Nifty 50. Sensex 2 is holding on to good gains of around 0.7 to 0.8% in trade. So keeping an eye on the benchmark indices, they are clearly outperforming today what we're seeing in terms of the broader markets. So let's pull up what the Nifty mid cap and small cap is doing. Nifty mid cap, that's the one that's trading in the red. Opened up in the green and then went down, trying to make a comeback to the green side again. But Nifty mid cap as of now in the red. Nifty small cap is also almost near the T's lowest point. It's up 0.15% in a trade as of now, like you can see. But yes, clear underperformance that is coming in versus the benchmark indices. Nifty Pharma, what's that doing? Because that's the top sectoral gainer today, any of the pharma names that you look at. So look at a Torrent Pharma, Sun Pharma, Divi's Lab, Cipla, Piramal Pharma, any of the pharma names today. All of them are managing to hold on to very, very strong gains. Seems like some buying is coming in the pharma names. PSU banks today, a different story coming in versus that's today what we're seeing. A bit of a decline that's coming for the Nifty PSU bank. Nifty bank also, when you're looking at it, that is also seeing some bit of a pressure. Now the stocks that you can see on the screen as well, that was Ease My Trip. We had Adani Green, Adani Energy Solutions, Honasa Consumers and Zee Entertainment. These are among the top Nifty 500 gainers that we've seen coming in. And Honasa Consumers, after that fall we had seen coming in the recent times, has started making a comeback in the last few trading sessions. So surely keeping an eye out on that. Pull up some of these chemicals and fertilizer stocks. You know, they are buzzing in trades. So Praj Industries, Fact, GSFC, among some of the names that are holding on to good gains. So watching out for that. There's not much any particular news flow that we're seeing, but chemicals and fertilizer stocks are also some of them which are gaining in trade. But let's begin today and focus on CreditAccess Grameen. Why is that stock in focus today? It's under pressure, and this is coming after Goldman Sachs has downgraded the stock to a sell from a buy. Abhishek is joining in with us to give us more details on that. Good afternoon, Abhishek.
Good afternoon, Vinny. So to begin with, you know, in May of 2024, CNBC-TV18 had highlighted that there is stress building up in the portfolio of microfinance lenders, and this is the first big accident or the first big downgrade coming in from a brokerage house. So Goldman Sachs has downgraded CreditAccess Grameen to sell from buy. They have cut the target price by 60% to 564 from 1,426 that they had earlier. They say that earnings visibility is now clouded given the fact that asset quality woes have begun to rise for them. So de-rating structural is in nature for CreditAccess Grameen. They have been negatively surprised by the acceleration seen in the deterioration of asset quality in Q2 FY25 of CreditAccess. So they expect deterioration in asset quality to accelerate further, and along with the fact that there is MFIN regulation with respect to, you know, lenders per borrower should be reduced to 3 from 4 earlier, which could keep pressure on the growth front as well. So they have cut the EPS estimate anywhere between between 40% to 51% over FY25-26 as well as FY27. They expect the credit cost to remain elevated at about 6.6% for FY25 and about 4.5% for FY26 as well. So valuations right now don't adequately reflect the stress that is there in the portfolio of CreditAccess, is what the brokerage house UBS is saying. Back to you.
Okay, surely keeping an eye out on that. CreditAccess today is down almost 8% in trade as of now. Let's move on. And as the pain increases in microfinance segment, Devina Mehra of Efforts Global says that there could be a possibility that the losses made by the retail traders were funded by unsecured credit, which could be a cause of worry. Listen into what more she had to say.
You think about all the losses in the FNO markets, and those are mostly made by individuals. So I think the figure is something like 1.5 lakh crores or something like that. And Mr. Kamath said, just think about how they have been financed, and almost all of them would have been financed through unsecured credit of this kind. So that's another, direct market related point that goes into credit. And many of the fintechs and all the smaller players have been going down the credit score. The credit score at which banks wouldn't lend is where these guys come in.
Okay, and let's move on and talk about Zee Entertainment. A bunch of institutions and other shareholders of Zee Entertainment defeat a resolution to reappoint Puneet Goenka as the director. Vamakshi is joining in with us to give us more details on this one. Good afternoon, Vamakshi.
Well, good afternoon, Vinny. Zee Entertainment definitely on our radar. Well, the shareholders have rejected the proposal to reappoint Puneet Goenka as the director in the AGM, which was held on 28th of November, that is yesterday. Keep in mind that the proposal was defeated by a 50.4% vote. Now, earlier on, proxy advisors like InGovern as well as IIAS had recommended the shareholders to vote against this reappointment. And, thereafter on November 18th, Puneet Goenka actually stepped down from his post as the MD of the company, and he said that this was done in order to concentrate on his operational responsibilities as the CEO of the company. So largely, when we look at this news flow, nothing much changes for Puneet Goenka because he will still be at the helm of the company. He will continue to remain the CEO. So that is the news flow surrounding Zee Entertainment. The stock as of now is up in trade.
Okay, Vamakshi, thank you so much for that update on Zee Entertainment. Let's move on and talk about the new kid on the block. We have Enviro Infra Engineers that has had a bumper listing today on the bourses at nearly 50% premium of rupees 220 versus the issue price of just rupees 148. Now, the management spoke to CNBC-TV18 and post a listing. Listen into what they had to say in terms of their growth plans.
The top line of the company, if you see in the last 3 years, it was around 80% on CAGR basis. Going forward, we expect a decent figure of around 30 to 35% on the top line we will maintain. And in terms of margins, EBITDA margins, it will be in the range of 24 to 25%. The order book is 1906 on 30th June. In July, we got one more project from NMCG. It is 267 crore project. So total order books gives us the visibility of around for the next 2 years. And further, this year, current year, it was being the election year, and very less projects were floated by the government departments. Going forward in the third quarter and fourth quarter, we are expecting a lot of schemes which the government has initiated. Number of projects will come up, and we are quite confident based on our success ratio which we have achieved in the last 3 years, we will bag good orders.
Okay, on that note, we're going to step into a very short break. But after the break, we'll get you the expectations from India's Q2 GDP numbers that are due today. Welcome back. You're tuned into Business Lunch on CNBC-TV18. And let's move on. The second quarter GDP number is due today at 4 p.m. Lata is joining in with us with the key expectations from the Q2 GDP data. Over to you, Lata.
Big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th, but that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex or gross fixed capital formation, as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May.
Okay, Lata, thank you so much for that update there. But we also spoke to HSBC's Pranjal Bhandari and Tanvi Gupta Jain of UBS to understand where the Indian economy is headed in the second half of FY25 and in FY26. Listen in.
Rural consumption hasn't yet picked up. We're all hoping it picks up, but it hasn't yet picked up. And then there was government expenditure, at least in the first 2 months of the quarter. It was quite weak. We were coming out of the elections. It only picked up in the September month, but we haven't really seen all of its growth impact yet. So putting all of it together, the September quarter will not look very good. We have government which has given out a lot more money for capex over the last couple of weeks. Once that starts and that construction boom begins, we'll see remittances go back from urban to rural India, something that had stopped in the last couple of quarters. So my sense is, and I'm looking for a rural rebound, not immediately, but around February, March.
We are expecting a lower GDP growth for India in FY26. In fact, we have actually lowered our forecast by 50 basis points to 6.3% right now. And this is largely taking account 2 factors. One is Trump 2 and what it means for India. And the second is a softening in growth momentum, which we are already seeing on the ground. While we expect a cyclical recovery in second half of FY25, we think that there are more concerns on the growth softening, partly because of the global uncertainty.
And the GDP numbers will be out today at 4 p.m. and in a change from the usual 5:30 release. Do stay tuned in to CNBC TV18 to watch our analysis of the numbers at 4:30 p.m. today. But on that note, let's just slip into a very short break. And after the break, we'll return and talk about the suspense over the next Chief Minister of Maharashtra that is still continuing. We'll get you more updates on that on the other side.
I am a big believer in the capability of the group. I am invested and I have bought more in this fall. I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
Thanks for staying tuned into Business Lunch on CNBC TV18. And let's move on and talk about who's going to be the next CM in Maharashtra. And in an effort to end the deadlock over the next Chief Minister in Maharashtra, the Union Home Minister Amit Shah held a marathon of meetings with the caretaker Chief Minister Eknath Shinde and his deputies Ajit Pawar and Devendra Fadnavis. However, now another round of Mayuti talks will take place before the Chief Minister is decided. We have Santya who's joining in with us to give us more details on this update on this front. Santya, good afternoon. What is the latest that you're picking up and when are we expecting any sort of an outcome coming in here in terms of the meetings that are going on?
See, Vinny, that's a question everybody's, looking at an answer to. And yet another day has passed and the decision or announcement regarding the next Chief Minister of Maharashtra is yet to be made. One thing is for sure that the next Chief Minister is going to be from the BJP. That's one thing all the three allies at present, as of now, they agree on. Now it's about the portfolio. So yesterday, the meeting which you referred to, the meeting between the Union Home Minister Amit Shah and all the three key leaders of Mahayuti, that meeting, the discussion was about the key portfolios. Now, Eknath Shinde, who day before yesterday addressed a press conference and he kind of, signaled that he is going to withdraw from the chief ministerial race. But one thing which he's not ready to let go is the home department. He wants to be appointed. He wants the portfolio for his party, and not just that, he also wants urban development. And as far as urban development is concerned, that's still not that big a problem, Vinny, but both BJP and Devendra Fadnavis, they don't want to let go of the home department either. Now, from 2014 to 2019, when Devendra Fadnavis was the chief minister of the state, he had the home ministry. In fact, even in the last 2.5 years, that's the term when Mahayuti was in the government. At that time also, Devendra Fadnavis held the charge of the home minister. So that's not something he would want to let go that easily. So that's where the matter is stuck. Now, on one hand, all this is happening, and on the other hand, BJP is pretty confident confident that the next CM is going to be from their party only. So they have actually started preparations for the swearing-in ceremony. They want it to be a grand swearing-in ceremony at a very grand level. Remember in 2019 when Uddhav Thackeray sworn in as the Chief Minister, so that particular ceremony was also grand. So that's the competition there. BJP sources tell us that the swearing-in ceremony can take place on 2nd December, but the Chief Minister is yet to be decided, Vinny.
Okay, Santhia, thank you so much for that update coming in. And let's move on now. We have some updates that's coming in on the international front. Australia has become the first ever country to ban social media for children under the age of 16. Now, under the law, platforms including TikTok, Facebook, Snapchat, Reddit, X and Instagram will have to take steps to ensure that children under the age of 16 cannot set up an account. NBC's Liz Cruz is bringing us more details on this one.
Australia taking an unprecedented step, becoming the first country in the world to ban the use of social media apps for anyone under the age of 16.
That's pretty huge.
The landmark law, which overwhelmingly passed with bipartisan support, drawing immediate reaction globally on the very apps expected to be the target of it, including TikTok, Facebook, Instagram, Snapchat, and X.
Do we all agree that this is good but bad at the same time?
Under the new law, tech companies will be required to take reasonable steps to verify a user's age and prohibit those under 16 from creating accounts, or else face millions in fines.
We have heard the cries of families who are suffering.
The controversial measure meant to help protect young people from the negative effects of social media. The American Psychological Association has warned about the addictive nature of these apps and the negative impact it can have on a child's mental health and body image. In Australia, Wayne Holdsworth says his son died by suicide after a sextortion scam.
Anyone that says that this is not a good idea has not lived through my life.
But the law is facing fierce opposition, including from the big tech companies and Elon Musk, who wrote on X, seems like a backdoor way to control access to the internet by all Australians. And others, including some teens, are questioning how a law like this will be enforced.
It will only create a generation of young people who will be more technologically literate in bypassing these walls.
On that note, we are going to wrap up this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. But as we are wrapping up this edition, we'll leave you with the visuals from the reopening preparations at the French monument, Notre Dame Cathedral, the symbol of Gothic architecture that Notre Dame Cathedral is prepping for a grand opening on December 7th. The cathedral has been restored to its former glory after months of reconstruction following the devastating fire that took place 5.5 years ago.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me, as always, is Vivek Iyer. We start the December series with a bang. The Nifty Bank and Midcaps, though they did fall from the high sharply, there's been a recovery from those levels, but not to the levels that we saw at the start. But I would say it's looking good for the bulls for now, but it's already December, Vivek.
It's already December. We started the December series, a couple of days to go as far as the calendar is concerned. But, for the F&O traders, it's December already, given the fact that today, and they have 45 new stocks to trade with. So quite a lot happening as far as, the F&O part of the market is concerned. We have quite a lot lined up on the show as well. Let's start off with the top headlines. Stocks clocked some early gains and hold in the green ahead of the weekend and a truncated US session after Thanksgiving. Pharma, healthcare and metals are the prominent gainers, while PSU banks and realty drag. Midcaps underperform.
A bunch of institutions and other shareholders of Zee Entertainment defeat a resolution to reappoint Puneet Goenka as director. Goenka, however, continues as CEO of the company. The stock cheers the news.
Enviro Infra Engineers lists as a premium of nearly 50% at 220 rupees per share versus its issue price of 148 rupees per share. Management tells CNBC-TV18 that top-line growth is expected at 30 to 35%.
Poonawalla FinCorp sees sharp sell-off in trade, becoming the top laggard on mid-cap index today. Stock also becomes a part of the 45 new F&O scripts introduced by NSE today.
CreditAccess Grameen is down over 8% after Goldman Sachs downgrades the stock to sell from a buy rating and cuts the target price to 564 rupees a share from 1,426 rupees earlier, citing a structural de-rating in earnings expectations.
Okay, those are some stocks that are on our radar. We'll discuss them in greater detail. But for the markets, as we've been pointing out, looking good on the Nifty. At least the benchmark is very steady, up above that 24,100 mark for now. The mid-caps are the one which are lagging. But remember, this week itself has been very good for mid-cap index. It's up around 2.5%. Bank Nifty is the one which is underperforming as well. But that's been the case for banks for a bit now. Most of the sectoral indices are in the green today. Nifty Pharma is the top gainer. The energy space continues to do well. IT is lending some support and a lot of stock-specific action. We'll go to Hormaz, who really seems to be in a Friday mood today.
Yeah, absolutely right. Hormaz has a smile on his face. Also something to do with the green on the screen. Well, especially in the last 10-15 minutes of the session, some of the sectors that have seen quite a bit of a leg up. Number one has been the metal pack. Like you mentioned, IT, Pharma lending support since morning. And also the fertilizer pack. So names like GNFC, Chambal, they are the ones actually trading near the day's highest point. But Hormaz, I'm sure, has a lot more stocks on the screen, from the broader end of the markets. Hormaz, over to you.
Well, it's Friday, so it is obvious the bulls are having a good day, at least on the Nifty for now. And there are certain things that don't change, right? It's already December, yes, but there's mid-cap index outperforming for the week is something that has not changed either. So we start off with the gainers from the broader markets, considering the fact that the mid-cap index has slipped into the green now. Piramal Pharma is the top gainer there. Zee Entertainment at the lowest point of the day, but still holding on to gains of around 4.5%. APL Apollo, one of the F&O inclusions, up 4.5%. And Aster DM was trading with healthy gains, still up around 2.5%. The new F&O inclusions, of course, there are 45 of them, but we'll highlight some. Adani Green having a good day, continuing to have a good day, actually 20% higher there. CDSL, an F&O inclusion here as well. But on the flip side, not a good beginning in the F&O space for stocks like Zomato and on HFCL. Two divergent brokerages just came in earlier today. One was CreditAccess Grameen, of course, the sharp downgrade that came in from Goldman Sachs, 8.5% lower there. And Divi's Laboratories, where Citi has highlighted the stock as its top Indian pharmaceutical pick, and 11 to 12% potential upside, so 4% higher there today. And another stocks that are doing well on the back of strong volumes, they'll come up on your screen. Easy Trip trading X bonus today, but 11% higher. Praj Industries, Honasa's rebound continues, but the stock remains oversold still after this rebound. Another 4.5% added there as well. And some underperformers, you mentioned Poonawalla FinCorp as one of them. Triveni Turbines, KPIT Tech and NHPC also not having a good day at the office. All of them at the lowest point of the day. Back to you guys.
Okay, all right. Some of those stocks which are not having a good day, but Hormaz wishing you a very good day and the weekend ahead. Thank you so much for joining in as always and giving us those stocks which are on your radar. It's a good time to welcome Himeen Kapadia from DR Choksi FinServ for a technical check on the markets. Himeen, good afternoon. Thank you for joining in. Do you think this is an up move which could continue for some days, or we'll see consolidation? What are you reading now?
A very good afternoon to you, Sonal. Thank you for having me on the show.
I think, like you said, a few days, it could be slightly more than a few days also, Sonal. The way I look at it, we fell 3,000 points, Sonal, from 26,277 to 23,263. So that's almost 3,000 points over 6-7 weeks. So even if you were to take a 50% retracement of this fall, Sonal, comes to 1,500 points. And the 3-day move, it saw almost 1,000-point move, okay, with some political events thrown in for good measure. But the 1,000-point move was too quick, too sharp. There was a gap on the daily chart, Sonal, which, I mean, markets have a tendency to at least try to cover gaps. So 10 times, 8 times, you would see the market, especially something like a Nifty, had a reasonably sizable gap. Now that gap was supposed to make an attempt to get covered. Now that's happened yesterday. Interestingly enough, the Bank Nifty gap hasn't been covered up. So without getting too technical, one gets the feeling that we saw a rise, we saw a retracement. Now it's getting ready to make a move on the upside. Time being, I believe the worst is over. I'm not saying this is a rally, but the recovery has some legs to go. And about 23,340, I have a feeling we'll be taking a shot at 24,492 in the next week. And yes, taking it a step further, if we take out 24,492, which I think is a distinct possibility, open the door for 24,800. So I believe at least the start of December, or at least the first half of December, with some hits and misses, should be slightly positive for the market than the last 1.5 months. So.
Good afternoon, Hemant. So you feel there are more legs to the current rally. What are your top picks for the day? What is it that you're recommending?
Very good afternoon, Vivek. Firstly, I mean, I'll repeat what I gave last week. I'd given a buy call on Hindustan Unilever. Target was hit, but once again, deeply oversold, 20 week of a decline, positive divergences, crossover buys on the short term. Simply put, it looks like a relatively safe buy in a market like this. So a buy call on Hindustan Unilever at 2,500. Stop loss of 2450, target of 2600. I believe this target might get overshot, but heavy stock, FMO stock, so can be a slightly slow mover. Second one remains a perennial favorite. Reliance Industries has been down for too long, Vivek. One cannot ignore it. It's fallen off a cliff from 1600 to 1220. At least for the time being, a relief rally is underway. Once again, crossover buys on the daily chart by the mechanical indicators. It's almost forming a high top, higher bottom. And the volumes at those lower levels have been significant. So we are playing for a decent, if not a good bounce. So one can buy Reliance Industries at around 1290. Stop loss of 1265. Target of 1340. Once again, stop loss risk reward ratio is 1:2. It's a modest target. I think it should get comfortably taken out and go further. Vivek.
Okay. All right, Hemant, thank you so much for joining in with those picks. With that, we'll slip into a short break. Management of ESFB Small Finance Bank will join us next to discuss the business outlook and more. Stay tuned.
An idea is all you need to start a business. For you to succeed and scale in that business, what you need are a series of boring, non-glamorous, repetitive daily decisions. And that's exactly what this series is all about. The nuts and bolts of business success.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ सत्यनिष्ठा से प्रतिज्ञान करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी।
श्रीमती प्रियंका गांधी वाड्रा।
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूँ सत्यनिष्ठा से प्रतिज्ञान करती हूँ कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी। मैं भारत की प्रभुता और अखंडता अक्षुण्ण रखूंगी तथा जिस पद को मैं ग्रहण करने वाली हूँ उसके कर्तव्यों का श्रद्धापूर्वक निर्वहन करूंगी। जय हिंद। I'm very happy.
Welcome back to Midcap Radar. Well, as promised, we have with us Mr. K. Paul Thomas, the MD and CEO of ISAF Small Finance Bank. Good afternoon, sir. Thank you so much for joining us. Mr. Thomas, first up, the business sentiment for players like yourself appears to be quite subdued at this point of time, appears to be significant amount of pain as far as the MFI space is concerned. Now, when we look at your Q2 numbers, significant deterioration as far as asset quality is concerned in the last 6 years amongst all of the lenders that you actually compared it to. What is causing so much pain, and was it something that was not identified earlier?
Yeah, thank you, Vivek, for having me on this show. Yes, you are right. This is one significant asset quality issues we are facing in our journey of last 7 years. This is there are multiple reasons. We have been facing this stress in one of the few of our major geographies, specifically in the West Coast, where we work with fishermen, and we have been and in Kerala and Tamil Nadu. So we have been facing since the COVID. We have been facing this stress, and specifically in Kerala market after the 2018 flood also, the rural stress we have been facing, but suddenly it is bloomed with various other reasons. One is that the over-indebtedness issue. So after in 22, so there are many new players came in, and people were having a lot of money available. So there are real over-indebtednesses started coming, and there are regulated entities and non-regulated entities operating in this space. So that is one major challenge which we have faced. And the other issues are very high attrition among the field staff of our business correspondent partners was also contributed, because this is a very high-touch business model. So when the staff leaves, the customer connect, we lose the customer connect. So that also impacted. The third point was third issue we have faced, that after the COVID, because microfinance operates more on mutual guarantee, the joint liability groups, and that's how microfinance has evolved in India. So after the COVID, the meetings got, the importance of meetings got affected, and technically there was no meeting. So that affected the mutual guarantee, mutual solidarity has been affected. So that
Mr. Thomas, yes, we get
Yeah.
that point. My colleague Abhishek, who tracks the space, will also be joining in for the interview. But now the idea is MFI sector doesn't see recovery. So how long will this pain continue for you, particularly? Because you've spoken about how things have been bad since COVID. Will this continue, or you're taking steps to improve this?
Yeah, we have already taken multiple steps to improve. Actually, from
Okay, yes, there is a snap line.
Yeah, we can hear you now.
Mr. Thomas, there is some audio issue. We'll just try reconnecting with you as well. But this is the word coming in from ESAF so far, the issues that they've been facing. We'll do one thing. We'll slip into a short break. When we come back, we'll get back Mr. Thomas online and try and understand what are the steps taken by ESAF to improve the problems that they're facing on ground.
Each company has their own strategy, so I cannot comment into what others are doing in. But we are very sure that after the launch, we will definitely take again the feedback of the customers who gave the feedback initially in terms of what kind of product they are looking at from us. And after the, not only the product, but even the service aspect which we have mentioned today, we'll also give an assurance to all the customers who are actually looking for a trust and reliable product in the market, which currently is not available as of now. So keeping that in mind, we will bundle the entire price accordingly, keeping in mind all the aspects of our product as well as the services which we will render from our rendering setups.
FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution, and we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27 we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding then, which will be at the most optimum then price.
As far as resources are concerned, I think we have an extensive R&D facility which is working in Japan, and the entire R&D really works in terms of creating a product which is really good for the Indian market. And we have done extensive research not only from the customer's perspective but even from the suppliers, from the dealers' perspective as well in terms of what kind of product they are looking at. And basis on that research only, we have created these two nice products today for which we are introducing today in Activa E as well as QC1.
Just spoke with Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah.
Welcome back. We have with us Mr. Paul Thomas of ESFB. Now, Mr. Paul, you did highlight about attrition. That's true. 60% is the attrition at lower end of the field employees that we are seeing amongst many of the microfinance lenders. Talking specifically about repayments, you have overdues to Aviom. So Aviom has an overdue to you. You are one of their bankers. What is the current status? Because as of now, we have the news that they have pushed down their, repayment to their lenders.
Mr. Thomas, can you hear us?
Yeah. I missed you last. Yes, we have you were asking about Avion. Yes, we have an exposure with Avion. Our leadership team is in constant touch with the management of Avion, and also we have taken steps to connect with the board and the leadership, and they promised that they are bringing additional equity, and they will be able to service us. So that's what the latest update on this.
So has it been pushed on for some time right now?
Pardon?
Has the loan repayment timeline been pushed on for a few quarters?
No, at the moment we have not taken any. We are also interacting with the other lenders. I think the company is calling a lenders meeting early the first week of December. So maybe collectively the lenders together will take a call on that.
So what is the repayment from your end to your lenders? Because some of your lenders are telling me that there are some hiccups in the repayments. They are trying to call you. They are unable to connect with you with respect to what is the repayment status. Any outlook due to the stress in the microfinance sector that we are seeing? Are you also facing difficulties with respect to repayment to your lenders?
No, we don't have any issue. We have a very sufficient liquidity position. Our LCR is 130 percentage, so we don't have any issues. Our asset quality issues is only on the microfinance portfolio, which now we have already taken this, steps to diversify our assets to secured book. Our secured disbursement within last year-on-year basis, it has grown to 92% has grown, and our gold loan book is growing at 59%. Our agri book is growing at 20%. MSME and mortgage book is also growing. So we brought down our microfinance from 72% to 62%, and we are also planning to bring down by financial year 26. It will be brought down to 40%. Our original plan was to keep it at 60% of by 27. So, but we have strategically taken a decision to increase our secured book, and also our geographical concentration on South. Also, we have taken steps to bring down our Kerala concentration. And we were having a concentration on our BC. 100% of our microfinance was operated through business correspondence. So we have taken over a major BC operations in July, so that we were able to bring down our BC. Now today, 50% of the microfinance book is managed by bank directly. So we are able to manage the attrition also that side.
So, sir, what is the second half outlook looking like in terms of your loan growth, the net interest margins, and also in terms of slippages and credit cost? Can you give us some numbers there?
Credit cost will continue to be the same level for the first half.
And the other numbers, net interest margins, and the outlook on the other numbers as well?
Net interest margin at September, it is 8.6. So it will be flat for the next 2 quarters.
Okay.
Thank you so much, Mr. Thomas, for joining us, and we wish you all the best for a much better and improved H2. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
הקבינט מתווה להפסקת אש בלבנון. משך הפסקת האש תלוי במה שהתרחש בלבנון. בהבנה מלאה עם ארצות הברית, אנחנו שומרים על חופש פעולה צבאי מלא. אם חיזבאללה יפר את ההסכם וינסה להתחמש, אנחנו נתקוף. אם הוא ינסה לחדש תשתיות טרור בסמוך לגבול, אנחנו נתקוף.
Just spoke with the Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah. I want to thank President Macron of France for his partnership in reaching this moment. Effective at 4 a.m. tomorrow local time, the fighting across the Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again. Over the next 60 days, the Lebanese army and state security forces will deploy and take control of their own territory once again. Hezbollah terrorist infrastructure in southern Lebanon will not be allowed to be rebuilt. And over the next 60 days, Israel will gradually withdraw its remaining forces. And civilians on both sides will soon be able to safely return to their communities.
We don't know what the government intends to do, whether the government acts, how it chooses to act, how it chooses to respond to the charges that Kate has put on the table.
Hello, good afternoon. You've tuned into Your Stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai News Studios. A quick look at what the market is doing as of now, because 24,000, we are comfortably above that mark is what the Nifty is trading at. 24,144, up almost 1% in trade. That's what the Nifty is trading at. Pull up the mid and small cap as well, because that's also made a recovery from the day's lowest point. So Nifty mid cap is back in the green, up 0.2% in trade. Nifty small cap too is trading with some bit of a gain and momentum there as well. So pick up that we've seen from the day's lowest point for the broader markets. Nifty Pharma, that continues to see a good performance coming in today as well. So Nifty Pharma seeing strong gains today in trade, some buying coming there, 2.5% uptick for the Nifty Pharma. But that's how we're looking at the market as of now. Recovered from the day's lowest point, and benchmark indices continue to see a good performance in trade today. But this is a show where we'll be solving all your stock related queries, and we do have our experts joining with us this afternoon. Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, head of technical research at Prabhudas Leeradhar, to solve all your stock queries. Good afternoon, ladies, and thank you so much for joining with us as always on CNBC TV18. I'm going to start by just looking at the market as of now. We've seen a bit of an up move coming in. Vaishali, what's your take on the market? What are we expiring? New series that has started today as well. December holiday cheer is what we're expecting on the street?
Very good afternoon, ladies, and thanks for having me on the show. So yes, I think market, we are hoping that it gets into the festivity itself. So technically speaking, Nifty has for now taken support at 23,200. And on near-term basis, I would say 23,800 should be the support. So as long as we are above these support levels, we would be seeing resistance at 24,350. So I would say it's right now a positive bias with a range-bound movement. Unless and until we move past 24,350 precisely and sustaining above that, I would say it's sideways. Otherwise, it would get into a strong trend.
Okay, keep an eye out on those important levels over there. Let's hope for some holiday cheer on the D Street then. But let's get started with all those stock-related queries. This first query we have is coming in from Sarath Kumar, who's writing to us from Tamil Nadu. He's holding 68 shares of Adani Energy Solutions at a price of 914 rupees. Wants to know whether to hold or sell this one. Shaina, let's start with Adani Energy Solutions with you. We have seen the stocks run up in the last couple of days, but before that, we've seen that fall coming in. So what's the word on Adani Energy Solutions?
Well, see, the impact of those allegations was not only on the stock price. Of course, now we are seeing some rebound, but it was also on the ability of the group to raise funds going forward, at least till this issue is clarified and till there is some clarity as to exactly how this is going to pan out. So I would believe that this is a negative. And also in terms of valuations, the stock is slightly expensive. Having said that, I think the performance is improving considerably. As we saw in the last quarter, they have doubled more than double their turnover. Profits is up sharply. So over the longer term, if these issues are sorted out, then you could see a continuing of the bounce that we've seen. But in my view, if an investor would not like to have risk in his portfolio, then he should exit.
Okay, should exit if you don't want to, hold on and you're worried about the risk, then you can look to exit as of now. That's a word from China. But on the technicals, Vaishali, how is Adani Energy Solutions looking? Last 6 months, we've seen a bit of a fall coming in there, 23% decline when I'm looking at it. Valuations, China was highlighting that it's expensive. But on the technicals, is it meriting anything good? And should the viewer continue to hold the stock?
I would say today is the first day that it's also got into the F&O sector. But I would say, yes, I agree. The trend has turned corrective. But right now, what we are seeing, some strength and some buyback reversals coming in. So at least now hold till 1,000 levels. That is a level where one could see a tough resistance. So right now, it is showing signs of reversal, but 1,000 would be a level to actually exit.
Okay, 1,000 would be a level to exit, maybe, so keep an eye out on that one as of now. That's the query out that we had on Adani Energy Solutions. But let's move on, and we have the next query, which is from Jyoti Suri, who's writing to us from Mumbai, holding 50 shares of Zomato at a price of 100 rupees per share. So clearly she's making a good amount of profit on this one. Wants to know whether she should remain invested, sell, or what should she be doing with this. China, Zomato, what's the word on this one? We have Swiggy also now that's come into the mix in the recent times for an investor to look at it. But what are you looking at in terms of Zomato?
Well, yeah, and that's too much of competition actually. Not on the ground so much, but in the equity markets where you just had one player and now you're having multiple players. That is one. Two is actually they are raising funds now. So maybe in the near term, there'll be more of consolidation on the stock price rather than any movement upward. So if you're looking at the shorter term, I doubt if you'll make too much money. And in terms of business, there's a lot of competition. You already mentioned that these guys are raising funds, the competitors. You also have Amazon, which is talking of entering the field. So these are large players. So you're going to see competition impacting the margins going forward. We saw this in the second quarter, but second quarter, the margins were impacted because of the investments that they are making in terms of the dark stores for Blinkit. So I think, things will move. It's, a very strong platform stock in the space, got a strong, brand recall, first mover advantage. Having said all this, I think if you're a medium-term investor, you can take some money off the table, hold a small quantity if you want for the longer term. But I don't see too much of price movement upside in the shorter term, medium term.
Short term, maybe not too much of an up move in terms of the price for Zomato. Can book out some bit of a profit. That's the word coming in from China. Vaishali, what's your take on Zomato?
Well, just today has been, the stock has been taking a breather, but for now, I don't see any weakness in the stock. So I would say keep a trailing stop loss. The nearest trailing stop loss, what one can see is at 270 levels. Chartically, I think if the trend still continues, this can go towards 300 to 320. So, and 300 nearly was the previous high also. And since the stock is already in the trend, it is very likely that it can retest these levels. So for shortest, I mean, depending on the time period that one wants to look at, 270 is the nearest time period, otherwise 250 as a positional trade. And since this person has bought at much lower levels, I think he can afford to keep a stop loss of 250. And that's the view.
Okay, that's the view coming in on Zomato from both our experts. The next query we have is on Nalco. We have Indira, who's writing to us from Vizag, and Vizag, I beg your pardon. She's holding 470 shares of Nalco at a price of 176 rupees per share. Wants to know whether to hold or exit this. What's the view on this one, Shaina? Obviously, the viewer is making some bit of a profit here right now, but could they continue to hold or maybe just book out the profits?
I would definitely say hold. In fact, I would also say add. If you want to, if you're looking at a 6-month type of or 6 to 1 year type of investment profile, see, basically you have a strong balance sheet. You have valuations which are pretty attractive. It's just about 2 times price to book and EV by EBITDA 7 times. So these things are in its favor. But the main thing that is driving the stock as of now, in my view, will be the alumina prices, which actually have moved up, are likely to remain stable. In fact, are moving up. And this is more related to the Chinese, economy, how they're trying to boost it, as well as some sort of changes in their duty structure. So to that extent, Nalco will benefit because it does produce alumina as well as aluminium. So being an integrated producer, it will definitely do better going forward in the next couple of months. So it is a hold or in fact add.
Okay, hold or in fact add. That's a word on Nalco from China. But on the charts, Vaishali, what is Nalco indicating? Can a viewer look to add? Because what I'm looking at it right now, YTD, the stock is up almost more than 70%. What would the chart be indicating for this?
The chart continues to show an upward trend. And if you go to see, of course, aluminium has outperformed the other metals in the whole of metal pack. The trend is very good, and I would say, well, add now, but there is a chance because since this stock has given a one-way rally, actually, if I look at the daily chart as well as the weekly chart, I mean, the rally has begun right from 170 and gradually now this is where we are at 240. We saw a good resistance at 270 to 75 levels. So it can retrace, in all likelihood, it can go towards 225. That would be an ideal level, according to me, to add more to the stock.
Okay, so still expecting up move here, Nalco, so viewers should continue to hold this one. Let's move on. Karthik is writing to us from Hyderabad, who's holding 920 shares of NHPC at a price of 114 rupees per share, currently making some bit of a loss here. NHPC is at 81 rupees per share. Wants to know what is the outlook of the stock in the near and long term. Shaina, let's take it to you first.
I would say this is a difficult stock to actually give a exit or switch call on, but still I would say that it is better to switch out, book your loss, considering that if you saw the last quarter, the company had to pay fines or some contractual obligations, which actually were pretty substantial and resulted in a PAT decline. Now, there are some projects that are coming on stream in December and next year. So they've got about 5 projects coming on over the next 2 to 3 years. So to that extent, if you're looking at the longer term, say 2 years, 3 years type of holding, yeah, you may see a rebound in the stock. You may see your cost price coming back. But I believe it would be better to switch currently because I see the stock moving in the same range for the next couple of months.
Okay, better to switch. But Vaishali, what's the technical chart indicating for NHPC?
I would say, well, it has shown a very good corrective move. And when I'm looking at a longer term chart also, I think it's pretty much close to the support levels. So purely on technical terms, I would say 76 acts as a double bottom. And from there, the stock is showing an up move. So So I would say hold the stock and exit at near 92 levels. So that would be the view if it is for short term. But if you have patience, I think it should be held on. And in fact, it should be added with the stop loss of 75.
Okay, that's the view on NHPC. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll be solving more of your stock-related queries.
Any change in regulation or not. But you're going to be filing your papers at some point, hopefully soon. This is going to be a significant risk factor, is it not? Was this a risk factor when you did this round of fundraise, when you did the domestic financing?
Look, not really. I mean, I think we've got... See,
nobody's asked you these questions?
No, people ask the questions, no doubt about it. But to give you a sense, you know, I think that, you know, it's really not about compliance in like the spirit or letter of the law that we are all trying to get to domestic ownership, right? We're realizing, and this is the first time that large internet companies are getting created at scale in India, which is a good thing, right? We should celebrate, you know, companies like Zomato and Swiggy that have created tens of billions of dollars of value, and most of that, especially in Zomato's case, has accrued to Indian shareholders over the past 2 years, right? There are people that, sorry, on a side note, but there are people that probably can retire earlier or can take care of their parents easier because they own Zomato stock, and that's how you build a middle class, right? You own Boeing stock for 30 years and you build a middle class like that. You don't touch it and you create wealth, right? So it's a good thing. But to give you a sense, what we're all realizing as an internet ecosystem is to build real value at scale, right? You know, tens of billions of dollars without having to, you know, be an Amazon or a Walmart, right? You know, to get to that scale, you want to be an Indian company, and it's looked at very positively, not just by the government, but even by the market, shareholders, and the public at large, right? People trust you more. So, you know, it's not really, to answer your question, it's not really about FDI compliance, FDI regulation, right? We've had a decade of e-commerce that's been built at scale in this country, and you know, we're just a small part of that today, and so are our competitors in this industry.
Now, I'm just trying to understand why it suddenly becomes such a big issue as far as companies like you, and perhaps again, as I'm pointing out, we don't know. There's been no official comment from Zomato, but you know, I mean, HDFC has foreign holding, and it's in the banking space. Why are you guys getting so concerned about this?
There's a difference between financial services and, you know, what we're building, which is commerce, right? We're employing, I mean, obviously, you know, HDFC is one big example. There are obviously lots of examples of large Indian companies, right? Like the Tatas and the Reliances of the world. But I mean, that's the feedback that we've gotten, right? In general, if you look at companies, you know, in the Nifty 50, right? Most of them are, you know, Indian owned, and most of them have, you know, that's been the broad example. Obviously, there are exceptions, no doubt about that. But yeah, look, I think, you know, you're right to say that, you know, why has it become an issue suddenly? I think we're expecting that, you know, we will scale, we will create value.
So is this a preemptive move, is my question?
Yeah, look, candidly speaking, I don't think raising this financing is going to change one thing or the other, right? I don't think that it's going to change something for tomorrow morning. It's more a long-term track, right, where over the next 6, 9, 12, 15 months, we keep building Indian ownership.
So what will be the ownership? How much do you dilute with this round? How much do you hold between you and Cavalier? What will the foreign shareholding be, and what will the domestic shareholding be?
Yeah, so, you know, we are, you know, we will own, you know, by the time we go public, we'll own about 20-ish%, right? And there are a couple of, you know, pieces that we're making, a couple of things that we're closing, you know, this flipped from Singapore to India, and just, you know, getting ready even just from a legal perspective to go public in a couple of quarters. But yeah, we'll own around 20%, right, which I think is decent, right? So like if you build a large company.
Fully.
Welcome back, and you're tuned into Your Stocks on CNBC TV18. We still have our experts with us, Shaina Mukaddam, independent market expert, as well as Vaishali Parekh of Prabhudas Lilladher, who's here to solve all your stock-related queries. Let's move on to the next query, and this one is from Korean John, who's writing to us from Mumbai. He's holding 1,000 shares of ESAF Small Finance, purchased at a price of 51 rupees per share, making a loss here. As of now, the stock is trading at 40 rupees per share. Wants to know whether they should continue to hold this or maybe just book out their losses now. Vaishali, what's your word on this one?
Well, I would say that now that this person has held on for so long, continue holding with a stop loss of 37 because the indicators are showing that it's just making an attempt to come back from its oversold zones. So I guess, well, the first hurdle would be at around 43, 44 levels. So those are the levels where one can have a look to exit. But because if this level is crossed, then there could be a further high targets of 50. So for now, it's absolutely in a corrective mode, but 37 should be taken as a stop loss.
Okay. And Shaina, fundamentally, are there any concerns coming in, or can the viewer look to hold this one?
And there are a lot of concerns. So I would say keep a strict stop loss. In fact, they came out, they reported a loss in the last quarter. And that was largely on basis of huge provisions that they had to make. Now, see, basically, they would have known this much ahead of time. This is not bad loans or stressed assets that have just come overnight. So they should have been providing, in a over a period of time. Now, having said that, I think going forward also valuations are not cheap. It's about one-time adjusted price to book. Two is that, for MFIs and other, there may be certain provisions that the RBI will bring certain changes in provision norms that RBI may bring about in the near term or medium term. That also will have an impact on the profitability of a lot of MFIs. And there is a lot of stress in MFIs, in the books of banks. So to that extent, I would say take any bounce, keep a stop loss, take any bounce to switch. There are other banks that are available at similar valuations, which look much better.
Okay, sure. Obviously, and like you were highlighting, also these MFI concerns have been highlighted for a while. My colleague Abhishek had also highlighted this similarly in May also this year. So yes, surely when a bounce comes in, time to move out. That's the word coming in there as well. Let's move on to the next query. We have Chinmay who's writing to us from Bangalore, who's holding 100 shares of Kaynes Technology at a price of 5,300 rupees per share. Wants to know whether to continue to hold this or look to sell this one. Stock trading at 5,940. Vaishali, what's your take on this one? On the technicals, how is Kaynes Technology looking?
So, well, it is going to be, it's continuing to be in an uptrend. There is no sign of any exhaustion. But I would say stock has really run one way. So I think continue holding with a trailing stop loss. The stop loss, what you can witness is 5,700 levels. Because if there is still further steam to it, this can go towards 63, 6,500. But 5,700 should act as a strict stop loss.
Okay. That's on Kaynes Technology, but on the fundamentals, China, Kaynes Technology, how is that looking? Is it a good one to play out in terms of the EMS side, or are there better players that you would be looking at?
Well, if you're looking at the very long term, maybe 3-year period, then yes, it looks like one of the best EMS players in the space, given the fact that they're talking of investing and getting something like a 4,000 crore revenue coming out of the semiconductor business, which is, of course, a hot sector to be in as of now. Of course, it will take them that time to actually start. They're starting to invest. They just got the approvals to set up the plant in Gujarat. So this is going to take that period of time, take a 2 to 3 year period. Having said that, I think valuations are extremely expensive. Though they came out with very strong numbers in the quarter, expected to do very well in terms of growth, even in the medium term. But even despite that strong growth, I think the valuations are extremely expensive if you're looking at a 1 to 2 year period. So I would say if you're a long-term investor, lazy investor, not wanting to look, buy, sell, then yeah, you continue holding. Otherwise, you keep a stop loss, book, and then relook at it after some couple of quarters.
Okay, that's the word coming in on Kaynes Technology. Let's move on. This next query is on Jupiter Wagons. Now, in this one, when you're looking at it, till July, we've seen a very sharp run-up coming in, and now we're seeing a fall in the last 6 months specifically. Raghvendra Rao is writing to us from Hyderabad, holding 200 shares of Jupiter Wagons at a price of 706 rupees per share. Currently, the stock is trading at around 486 rupees per share. Wants to know whether to hold or book losses. Vaishali, what's the word on this one?
In fact, this stock is, we are watching this quite closely, and I think overall full railway stocks have really shown a good, decent corrective move. Now, talking about Jupiter Wagon, we have seen one-way downslide, and now the stock seems to be stabilizing. Further conviction comes only, it's a long-term trend line breakout at around above 500 levels. So the clarity of a further strength will be once the stock sustains above 500 levels. So till then, wait and watch. And I guess above 500, he can average out also and get into the momentum for higher targets.
Okay, wait and watch till 500 levels and maybe then can look to average at least, but wait till 500. That's a word on technicals from Vaishali. But on the fundamentals, Jupiter Wagons, Shaina, what are you looking at here?
Well, it's likely to be a decent performer. It's got a good order book position. It's in an interesting segment that is growing. They grew about 15% in terms of revenue in the last quarter. Quarter revenues were about 118 crores. So that was decent. Having said that, in terms of valuation, Titagar is better. I would believe it's more attractive in terms of other factors like PE, price to book, compared to Jupiter. So if you would like to book some profits, then you could book and then shift to Titagar.
Okay, thank you so much, Shaina, as well as Vaishali, for joining in with us today, because that was the last query. Thank you so much for removing your time. But quick look at what the market is doing right now. Nifty is almost trading near the day's highest point. We have Bharti Airtel that's in focus among the top contributors coming in for the Nifty 50. And we have an upgrade that's coming from ICICI. They've upgraded the stock to a buy from a previous ad, target price of 1,875. So let's keep an eye on Bharti Airtel, ICICI Bank also among the top contributors coming in there, as well as Reliance Industries, which is supporting gains, L&T as well as M&M among the top movers and contributors for the Nifty 50. So keep an eye out on that. But with that, it's a goodbye from myself as well as the team who put this show together. Stay tuned in for more updates on the other side.
But back to answering the key question, right? Is it, I don't really look at it as a risk factor, right? We are today, like, we're not only FDI compliant, but we've got a long precedent of FDI compliance, right? Before us, well before in this industry, in e-commerce. We are anyway moving towards being a domestic company, but that doesn't mean that tomorrow we become a domestic company, business model will suddenly change, we're constrained. No, that's not the thought process. Business model will stay the same, even as a domestic company. But, today these large IPOs, hopefully if you become a large company, what does this preempt, right? This preempts us, I hope, right, and then maybe be optimistic, but in the next 12, 24, 36 months, I think we'll be like a 15, 20, $25 billion company. I don't know when, I don't know if it's 3 years, 2 years, or maybe longer, but it seems like that scale is going to come. And that's what we're preempting, right? We're preempting that, saying that we would like that large-scale value to accrue to Indian shareholders, and now we have an opportunity to do so. So I think that's true for Zomato as well. They started as like a largely foreign-owned company, and over time moved towards Indian ownership. A lot of that value scale happened there. Similar with I'm sure Swiggy over the next couple of quarters. But for the first time, we have that opportunity, and so all of us are taking that option.
So I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO, I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say, it's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world. And it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who is able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
It's a very special week for us this week. I'm here celebrating our 20th anniversary in India. India is such an important part of AMD. When we look across our, all of our, global portfolio, every aspect of our product line goes through our design center here in India. And so I had a great time this morning with our team. And when I look back at the last 10 years, it's kind of interesting that we had met each other 10 years ago. It's been a remarkable experience. I mean, if you think about all of the things that have changed over the last 10 years, I say that, semiconductors have now gone from, something that was, kind of behind the scenes, under the covers, to today, everybody's talking about semiconductors, and semiconductors are essential to, every business, every country.
Mostly a negative start for the Asian indices. The Hang Seng, though, is trying to be an outperformer.
Our CNBC-TV18 poll sees Q2 GDP at 6.5%.
The consensus is not to read too much into yesterday's price action, that this is not something new which we are starting. Indices about 0.25% higher, 23,984.
There has been a consumption slowdown, and that's not happened just in the last quarter.
The EBITDA margins, it will be in the range of 24 to 25%.
There's been a sudden step up in the markets. The Nifty's crossed 24,100.
They expect slippages of formation of bad loans to be higher in H2 FY25.
We are expecting around 15% year-on-year top-line growth.
The wholesale growth for the month of November is expected to be mixed.
The Nifty Bank and mid-caps, though they did fall from the highs sharply, there's been a recovery from those levels.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, it's a good day, and it's a Friday. It's a good day, so I don't think we can ask for more after especially the kind of sell-off that we had yesterday. And that's the point that we were making in the morning as well. Don't extrapolate what we saw yesterday. A bit of an aberration. And today, I think it's a bit of a cleaner picture. This is Closing Bell. We're coming to you as always from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleague Surabhi, Reema, Nigel joining in from the newsroom floor. Guys, hi. And I think, as always, Friday, 2:30s, slightly brighter smiles.
Yeah, fully charged up, which is why, for instance, life insurance stocks have gone back to falling. For instance, mid-caps are underperforming. We're not going to talk about any of the negatives. It's all positive on Friday afternoon.
Well, Friday afternoon, Surabhi, and you're talking about insurance stocks. I'll tell you what, in Editor's Roundtable today, I'm going to put a nice piece on the potential alcohol consumption here in India and what it means for the industry. So that sounds more like it. As you said,
that's the cue.
Yeah, pumped up for the end. But very, very good. 230 points higher today, and you like it. Prashant, come in.
Nigel, if you put a live cam between tonight and till Sunday evening, you can show the potential also.
It'll be something else.
All right. Well, it is something else, and we look forward to that piece. So that's coming up at 3:30.
Which
3:30
piece?
to 4.
The Editor's Roundtable piece. Yeah.
Okay, well, a cleaner picture, definitely a cleaner picture. And guess what? I mean, yesterday the market sort of broke below the 20-day moving average, and then it sort of filled the gap. The 20-day all gone, and today we are back up again. So 200 points higher for the week. There's not very much, I think, to show for it. And we're again, in weight of that elusive. The immediate resistance is about 24,350, but that's nowhere in sight. It's still 200, 250 points away from where we are right now. Pharma is doing well. Actually, pharma and healthcare as a pack. These are the two indices which are doing the best. Auto sold off yesterday. They're making a comeback. Sud has more on that. So these are the three indices which have got meaningful between 1% and 2% gains. As I said, near-term resistance for the Nifty, 24,350. Lows should not come into play. We'll see. Nifty Bank near-term resistance, again, is about 1.5% away. That is yesterday's high. So we'll see 52,760 is that number. Actually, 1%. That's it. So all within grasping distance, yet so close, yet so far. That's been the story for the market, at least on the Nifty and the Nifty Bank for the last many trading sessions. Rima.
It's been a good day and a good week. The Nifty is up 1% for the week and the mid-cap index is up 2.6%. And just a barometer of the sentiment, look at the Adani Group stocks. A 14-day chart of Adani Energy will show you that this week the stocks have rallied close to about 13%, but it's pretty much recovered all of the losses post the US indictment. So that's Adani Enterprises. Pull up an Adani Energy, for instance, or an Adani Green, and you would see the stocks are pretty much back to where they were before the fall began last week. Big moves. Adani Green, for instance, is now in the F&O, so you're seeing a 22% up move on that. But in pharma names, it's Cipla, Sun Pharma on top of the charts, and Bharti Airtel is your big mover, 4.5% gain.
Absolutely, and Rima is going to tell us why, because there are some positive brokerage notes that have come in. Some of them are sounding quite optimistic on Bharti, and that's helping the stock today. Just a word on some of the mid caps. Though the index is underperforming, if you're looking at it from an advanced decline perspective, then it's not bad at all. Because the mid-cap index is up only about 0.4%. So that means it's not doing as well as the Nifty. But look at the advanced decline ratio. And that's why the green lines have really taken over. And as we're getting in the last hour, this is a good-looking picture. Some examples, let's throw some names up on the screen. Sagility has been really the stock of the week, this recent listing, 33% higher, putting on another 6-7% today. Then there are names like Hudco, which are still doing well. Some of the fertilizer names like FACT, for instance, suddenly picking up today. There's about an 11% up move on FACT as well. So some of the PSU names are still looking at gains. There's NMDC, there is SAIL. So some rotation. The NMDC and the Hudcos of the world are perhaps Hudco's actually still up. NMDC is now not performing. IRFC, etc. are weak. But there are others that have taken over the baton. So the PSU party is on. Just have newer names today. Nigel.
Well, that's right. Let's get in Mitesh Thakkar to help us out with what do you do from here. If you bought yesterday and you were, adventurous enough, you would be making some money. And I think this morning the consensus was that today is going to be a good trading session, maybe a little bit better than anticipated. Mitesh, what's your view? 240 points higher in the Nifty, take some money off the table, or you believe you're good for more? And also the Nifty Bank, actually, that's underperforming today after outperforming in the past series. Your take?
So, Nigel, we didn't buy yesterday, we didn't buy today morning. I think on the index, while we were expecting a bounce back, the psychological impact of yesterday's fall was that let's get it very clear that there is, some crossover on the hourly and the 2-hourly charts, which has happened now. So if somebody wants to buy now, I think, your stop is about 24,040, which is roughly about 100 points lower. A test of 330, 350 zone could occur again. And once we clear that, then I think we will look at 24,500. So yeah, I think the market is better today. But again, the idea was to wait and watch because whenever the fall happens, it happens with such velocity that your stops get taken out. So I think this is slightly kind of a cautious affair from our side. But on the stocks are trading with long buys. I have a buy on ONGC with a stop at 254. Look for a target of roughly around 265 here. And the other one is PEL, Pyramid Enterprises, buy with a stop below 1170 for targets of 1220.
Okay, let's get to Divi's Laboratory. That's one of the big movers. A positive brokerage note from Citi. Vinny is here to tell us more. Vinny.
So we have a positive note that's coming in, and that's why the stock is buzzing away, because they actually attended the CPHI, where they had some key takeaways that came in from DVs and certain concerns that the street was worried about. So that has been highlighted here. Now, interest to API sales, that's an important one for DV's lab. That they're saying is expected to rather see an increase versus what the street was expecting, that maybe we would start seeing a fall coming in for the sales of these APIs. Because why is the reason that they're expecting an increase here? They expect DVs now to start supplying this to generic manufacturers as well, and especially this will come in post that patent that will be expiring as well. So that will include a lot of markets across the globe, as well as the US market will be included, which will be a positive for DV's Laboratories. Other than that, DVs themselves are already expanding and increasing the pipeline in terms of contrast media. Currently, the revenue from contrast media is around $70 to $90 million, and the company is expected to see a sharp increase coming in, and this is mainly from one of the products that they have. Now, there's additional clarity that the company company will be expanding this pipeline. There are 2 more products, and after that, which are already in the final stage of getting some approvals as well as commercialization. So that is a positive on that front. And lastly, let's not forget that revenues from contrast media can increase significantly for the company over the next couple of years, and that could be a big growth factor for the company going forward. That's why look at it, Citi is maintaining their buy rating, target price of 6,850 rupees per share for the share.
Thank you very much for that. Prakash Diwan is now with us. Prakash, just yesterday we had Madhu Kela, on the channel, and he was saying how the CDMO is the biggest theme according to him, and the sector itself, the CDMO sector, could grow 5-fold in the next decade. So one of the beneficiaries of that could be a Divi's laboratory. It was doing well ever since that Biosecure Act got passed. But from here on, do you see upside in the stock?
Oh, absolutely, absolutely. So, Divi's had such a brilliant consolidation in the last year and a half, 2 years, if you see. There were issues related to business expansion, them being able to kind of get into some of these new product launches, which did get delayed. And that led to this time correction of sorts, and of course the price correction to begin with. And then after that consolidation, now you'll probably see this news flow that's coming. Of course, what Vinny read out, all those tongue twisters of the names, there's a whole pipeline that we'll start seeing. And there is a massive market that's very clearly out there to harness. The other thing which will change, and that could probably wait till end of Jan or 20th of Jan specifically, is when the US administration starts looking very charitably at the Indian operation, Indian supplies on the healthcare side as compared to China. Don't undermine the potential of most of these companies. And that's what I think Madhu would also be referring to in terms of the opportunity to grow, because we are such a small contributor as of now worldwide, and there's enough headroom to grow there. And the best part is CDMO is something which most recently established companies, when I say recently established, anybody with that 15-year track record has been doing very well on. So you'll find a lot of names to go with. And then you have the likes of biologics and all of that to add to it. So, the CPHI has been so interesting. To my surprise, I came across a lot of investors who were at the CPHI rather than just buyers and people from the trade. So you can imagine the kind of interest that's developing. Very likely that the PE multiples will also follow soon. But yeah, huge potential, and Divi's definitely can outperform the broader markets.
Okay, so there's a thumbs up to Divi's. Stock's holding up really well today, 4% higher. Actually, most of pharma has had a good session today. But for the time being, let's actually focus on the Nifty winner. Look at Bharti Airtel Go. Stock's up 4 to 5% right now. And this is on the back of a note from ICICI Securities. Rima, what is suddenly getting ISEC so excited? What's new?
Well, they believe the valuations are reasonable. So they've upgraded Bharti to a buy, and their target price is at 1875. Now, if you look at the valuations on EV to EBITDA and you compare it to peers, you will see it's expensive. Bharti is trading at 11.3 times. The APAC peers are at 7.1 times. But they're arguing that Bharti Airtel is growing much faster. Their earnings growth is projected to be 14.5% to 15%, higher than peers, which are sub 5%. But another metric to look at, a valuation metric to look at, according to them, is the free cash flow yield. Because globally, telcos are known and owned for their free cash flow and their strong dividend payout. Now, if you look at it from a free cash flow yield, then Bharti does not look expensive versus its APAC peers, despite providing that higher growth. So the free cash flow yield for Bharti Airtel is 6.7%, and that's just a 10% premium to the APAC peers. And they say that Bharti's free cash flow is sustainable and may continue to grow for the next couple of years. And therefore, in that context, the valuation is reasonable, according to Bharti Airtel, which is why their target price is set at 1875. And this is a stock which has done very well this year. Year to date, the stock has given a return of 57% and more upside to go.
Absolutely. It is the 4th best performing stock on the Nifty this year. After, of course, Trend, M&M, and there's BEL. By the way, BEL, PSU name, has also done really well in 2024. And then comes in Bharti at position number 4. Prakash, hi, good afternoon, and happy Friday to you. Are you convinced with the ICICI Securities argument? I mean, is the valuation enough to look at fresh purchases? Because then there is the other chatter, like the perennial chatter, right, that we'll have another round of tariff hikes. What's your thought?
Yeah. So good afternoon, Surbi. So I think it's the ARPU hike that's ARPU raise that's clearly driving all these justifications. Once you know that the ARPU is likely to inch up even more strongly year on for the next 2 years, there's no reason why you would want to kind of try and buy into the stock. And these levers that the report talks about are fairly well known. In fact, one of the recent developments that I personally felt was a big leg up for Bharti's operations, and Rima would corroborate that, is that their arrangement with engagement with Nokia on the 5G switching supply has actually been ratified, which means that they will actually go all out and start expanding. By the way, Bharti hasn't expanded its tower network since last year. So you can imagine, there's been a wait period which is fairly long. And if they have to compete with not a Vodafone, but a BSNL, they will have to kind of start doing this very aggressively. So I do like that space, but is that risk reward good enough? The answer is probably you would go to the vendors in the ecosystem rather than the principals. So I spoke about one telecom tower company which has been doing very well. It's a bit small, 2,000 crores market cap. It's called Suyog Telematics, if you want to look it up. That's the company that's been taking a lot of orders from BSNL. It's been doing well for Bharti and Vodafone in the past. A lot of money that was stuck has started coming back from Vodafone. So, these smaller names will actually give you a bigger delta. So I would believe, yes, if Bharti does well, BSNL comes back into the reckoning. There's no reason why the vendors to these large companies won't do well. So look at that. It's a very promising space. And of course, Indus also continues to offer the same kind of salience, but with a slightly bigger size. The agility would probably be a bit limited, and hence the price would probably take longer to corroborate that. But absolutely positive on that space.
Prakash, good afternoon. Good to see you. And Prakash, I want to ask you about two stocks. The two recommendations that you have given us in a matter of the last month or so. One is on your Diwali pick, Nalco. It's done well, though this week it's down close to around 5%. So what's the view on that one? Would you look to buy into this dip going by the shortage we're seeing in the alumina market? Point number one. Point number two is on Welspun Corp. On Monday morning, you said you're expecting the stock to do well. And in fact, it's up close to 11% in this week itself. We've not heard any fresh news flow, but it appears both on the domestic as well as on the Trump front, the company could gain. Your view on both these two, Welspun after the run-up and Nalco after the pullback.
No, absolutely. So, Nigel, thanks for recalling these. The Welspun Corp is more a play on the acceleration in terms of what the Mumbai development and the Dharavi development would kind of start fetching. So, the vendors to these large companies are very clearly looking at growth. And from that channel checks, we could figure out that these companies would start, the principal, the OEMs would start doing so well. They've got a lot of capital locked into these new growth areas, and that will start kind of improving the ROCs. So the last couple of years have been a bit tepid because of expansion. And the same thing goes for the US thing. If Donald Trump is looking at reducing energy prices, there's no way he can ignore shale gas for internal consumption and substitution of imports. And if that were to happen, the pipe network will definitely come into play, which has been a bit low key for the last few years in the previous administration. So that's a huge upside, and they have units overseas which could kind of start contributing and escape that tariff barrier kind of a thing. On Nalco, yes, the dip has come, and we of course know the dip was more driven by a global softness in metals for some time. I don't see any reason why Nalco will lose out on its strength. In fact, alumina continues to be the cherry on the cake of sorts, and they actually have enough supplies to counter whatever shortages China would face. So my sense is it's more secular than what we think, and then probably would go on for another 2-3 quarters easily. And that's where I thought, from a 1-year perspective at that 220 zones, it's probably a very good risk reward. And it continues to be so. So buy on dips is, of course, a very, very sensible thing to do given the visibility of earnings improvement. The EBITDA itself would almost go 80%, 90% from where it is. So you can imagine the stock price hasn't reflected that yet.
Prakash, hi, good afternoon. The two names from the Piramal Group, Piramal Enterprises and Piramal Pharma. I think Piramal Pharma, of course, re-rated quite a bit. Enterprises has also done well from the lows recently, back at above 1,200 or so. Any thoughts here?
Good afternoon, Prashant. So, actually out of these Piramal stable, I mean, you would look at pharma as what has always been the core strength. They are trying to make a comeback, rebuild. the entire business from what legacy promise they have, know-how they have. And that's finally taking shape. So I think the pharma piece is what you should look at, but valuations don't permit you to be very secure about it in terms of a market, softness coming in or a sell-off coming in a big time. Because remember, this is a stock that is fairly high beta even within the pharma pack. So when you have much more stable names, you would begin with that, right? And look at these companies when the market is in the mood to reward for at least the next 2-3 quarters in terms of P multiples remaining steady, flows being very strong. As of now, I think it would probably be a bit vulnerable from a stock perspective. The business, of course, as I said, is they're putting the building blocks. All of that results have started showing. In fact, the next quarter, December end quarter, you could see some very good improvement from the September end quarter. So you will have that expectation building up. But I would wait for some more time, or rather buy something else within pharma rather than.
Okay, before we let you go, Prakash, earlier Nigel said we should talk about, weekend-related stocks. He was talking about Alco-Bev. Let me talk about planning trips. So easy trip, that's the last talk for you for today. The stock's very excited today, of course, 11% higher because I think it's ex-bonus. They're doing a 1:1 bonus. But what about it otherwise? What thoughts? I mean, this year has been checkered with a lot going on with this company, from getting into spaces which seemed a little unrelated. I don't know if you've had a look of late and whether you'd look at owning it at all if you're trying to play the whole travel and discretionary spend segment.
Yeah, so I do agree. This is a company that's been trying to do a lot, been all over the place, get its mojo back. But, if you look at the graph, from the level that it started falling off was where the promoters diluted their own stake. There's absolutely no other explanation I have. And they probably are the smartest people in town in terms of knowing what the business is doing or how the business is doing. If you corroborate that with what the price action has been, I mean, these bonuses and all would probably be a bit exciting sentimentally, but doesn't make a difference to the underlying business. And I'll tell you what, Ease My Trip has still not found its path to profitability in that sense in a very significant way. They keep having to give freebies and all that. It's a very competitive market. You want to play the travel, leisure, this thing. I think hotels this quarter will surprise all of us with the kind of wedding season that's manifested, and it goes on till Jan and Feb. So the next 2 quarters could be very strong for airlines and for this thing. And I would definitely want to look at Indigo at this level, just corrected about 20% from its recent highs for no apparent reason. But if things start looking up for them, the kind of routes that they've done, the kind of tie-ups with Japan Air and Turkish Airlines, all of that will start playing out in the next 2 quarters. So look at that. Probably be better off flying rather than just ticketing.
Okay, fair enough. Got that point. So yeah, hotels, take your point. When one scan on any particular app and those tariff rates are enough to give you a mini heart attack, right? But that's the sense of demand that we have, especially at this time of the year. Thank you for joining in, Prakash. You have a good weekend. We need to take a break, come back on the other side, and we'll have Tushar Pradhan joining in with some market perspective.
Profession. So I think that feels very good. And then from an AMD standpoint, I think we've also had a very good 10 years in terms of, taking our business from what was, in 2015, we were about a $4 billion company, and this year we'll be north of 25 billion. So there's been a lot of growth in there.
There has been a lot of growth, and I'll address the growth in just a second. But I want to double down on your bet on India. And you have committed $400 million to 2028, and you've just been here to inaugurate the last phase of this campus. Why the decision to make India the home for your largest R&D facility?
Well, we actually look at it in a very logical way. When you think about our business, it's all about having the most talented people around the globe. We run a very global team, and we did make a bet on India. We made a bet that we could build an end-to-end design capability here. So hardware, software, systems. It's an extremely talented team, and with the investments, nothing comes overnight. It comes after literally 20 years. I think 20 years ago we started with maybe 100 people.
Yeah.
Now we have 8,000 people in India across all of our product portfolio, and I think the bet has really paid off. We wanted to have a major site in India, and we wanted to grow that skill set across the board. And I'm very happy to say that this is our largest team outside of the U.S. This is our largest design center here in Bangalore. So it is a very special place.
Well, I'm glad to hear that from you, Disa. I also want to link this to the larger semiconductor story that's now starting to play out in India. You met with the Prime Minister in September when he was in the US for his visit. India is aspiring now to become a manufacturing hub of semiconductors as well. How do you see that playing itself out, and what do you believe will be some of the things that we need to be mindful of as we grow this ecosystem in this industry here?
Well, I have to say, I have a very, very high regard for Prime Minister Modi and his strong vision on technology across semiconductors, both the Make in India, semiconductor manufacturing, design, as well as all the focus on AI. I think every aspect of that is truly important as we go forward, and especially around semiconductor manufacturing. What I admire is the very concrete, pragmatic steps that have been taken to both attract global companies here, as well as building the local infrastructure and ecosystem. And I think the one thing is these ecosystems take time. They don't come overnight, but I would say lots of very strong progress. And we continue to invest in India because we really believe that this will be one of the most important markets and regions going forward, as well as a wonderful infrastructure and ecosystem for the type of development that we do.
Okay, welcome back. We've got the market, which is looking good. Although I must say we've come off a little bit, about 50 points on the Nifty from the from the high that we saw when we sort of started the show. So the high, by the way, has been made at about 245 at 24,190, and we are at about 24,140. So exactly about 50 points gone in the last 10 minutes or so of trade. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good to have you with us here. Thank you very much for your time. We've been following this microfinance, pain and microfinance story. Abhishek has been tracking this for a while, and he'll join us a little later. Of course, it's become a mainstream now, lots of downgrades, etc. I don't know if you have any thoughts specifically on stocks in this space, and whether it's a sector which goes through these boom and not bust, sometimes bust like we saw in Andhra back in 2000, I think it was 2010 or whatever. But you go through these periods of pain like what we're going through. Would you look at it as a cyclical thing and look forward to improvement? Stocks are down 50-60% in many cases from highs, or you'd say there's a lot more to go.
Yeah, I think this space has been, as you've rightly called out, fairly cyclical, because over time the credit cycle expands, it almost becomes a bubble. And then eventually there is some event somewhere in some state or some region which eventually has a contagion effect, and it starts to hit almost everything MFI. But you have to remember a couple of things, Prashant. One is that the MFIs have an extremely high yield. And if you get to understand what kind of costs that they run, even with a significant, I would say, bad impact on asset value, their ability to jump back is very, very quick. So while there might be an opportunity to enter into such stocks once this kind of, widespread pain becomes obvious in the stock prices, I think if one is a little bit more of an astute stock picker, one should look at the capital, I would say, strengths of some of these MFIs. understand that these things are likely to keep coming, but at the same point, understand the kind of bounceability, if you call it, of some of these MFIs. I think you've got a big trade there coming up. And I think over time, we have to understand that India continues to remain an underbanked, poorly serviced credit market. And these are companies which provide the much needed fuel for the 8% growth that we aspire for at the bottom of the pyramid. So I think these are companies which are structurally and strategically very important for the economy. And I think these opportunities do come by where if you pick up the more capitally stable MFIs, I think they might just provide a great opportunity to enter.
Tushar, so in your analysis at Hexagon Partners, which are the sectors or themes where the earnings growth is the highest, say over the next 2 years?
I think manufacturing is one space where we've identified that because of the significant increase in order flow, we continue to see pretty significant earnings growth throughout manufacturing. And here I'm calling out manufacturing, which could be large manufacturing, process controls, and down to the fact that we also include auto to a certain extent in that, and auto ancillaries. But it is not to say that every quarter is going to be smooth in the sense that every quarter will be better than the quarter prior. There is going to be seasonality, especially when we talk about infrastructure and large manufacturing. It is not very evenly broken up in the quarters and the kind of growth that we look for on a quarterly basis. So I think when we talk about manufacturing earnings growth, one has to take a step back and look at it from an annual basis. Sometimes the spillover of realization of these orders get delayed, and we may not have a very clean cut on that. So there may be some hiccups, but I think that is really where we feel at Hexagon the significant volume and the I would say the buoyancy in earnings is. Earnings is also pretty strong in private banks. This is a sector which has been largely ignored for some reason so far into the year. But I think the continued credit expansion and the kind of consumption demand that we are seeing, especially in the festive season, in the just concluded Diwali season, we are continuing to see pretty great asset addition without any significant cost. And I think these are companies which are again slated to have a very significant earning growth forward. I think I would also call some certain cyclical companies, including sugar, chemicals, where there will be a cyclical upside because sugar companies especially have come off due to some regulatory changes relating to ethanol, which should start coming back. And I think those are the earnings growths that we see really very strong.
Okay, all right, got that, Tushar. What about this whole insurance space? That's been sort of the big debate over the last 24 hours, right? And it's still anyone's guess. But I guess the sense that the market at least has is that some sort of curbs or regulation, some guardrails are coming when it comes to using bank insurance as a channel. Your thoughts?
Yeah, I think this has been a little bit of an in and out kind of sector. And that is the risk that you take when you invest in companies such as those, because the kind of upside that life insurance companies in general will provide to an investor actually will come well into the 20th year of having issued the policy, because that is how life insurance companies make money. They will always remain profitable. When it comes to non-life, I think the metrics are slightly different. However, in a country like India, where there is still a fairly low penetration when it comes to coverage, whether it is for life, whether it is for non-life, I think this is a sunrise industry. So one should not get caught up with what the regulatory changes have made or will have an impact to current earnings on a per quarter basis. One has to take a look at these investments really from a very long-term perspective, and that is where these companies will score. But as was the case with other sectors where regulatory risk was fairly high, it was always good to keep them. But I think those are not going to be the drivers for continued return in a portfolio. I think a core and satellite approach where you push these companies into really sound core strategies and not worry about their fluctuations given whatever regulations may change, because I'm sure the regulatory changes are only temporary in nature, and it takes some time for the company to adjust to the new environment, and they go on. But the volatility due to that can be pretty high in the interim. So I think it is something of the portfolio choice to be made here. Maybe a smaller allocation, but much more long.
No, got that. You know, it looks like we were talking about a lot of financials today. So another one is NBFCs. Tushar, your thoughts? Because again, it's one space where it's relative. It's subjective if you want to call them bargains or not. But stocks have corrected again because this year in financials, I think the theme has been RBI cracking the whip and tightening regulation, right? New regulation, but more importantly, asking companies to tighten their own ships and follow the rules to the letter. Anything you've done there in that space?
Yeah, I think NBFCs is, I would say, another interesting space where regulation has always come in almost as a cycle over time. And I think with good reason. Because as, for example, we've seen in the gold financing companies, there was a reason for regulation to become stricter. Because the more retail these businesses are, there is a fear that it could lead to some serious loss of public money. When it comes to other NBFCs across the spectrum, also, I think because the very retail nature of these loans and the very widespread use of these inducements, which could, actually be in the form of lesser formalities compared to going to a state bank or a much bigger housing finance company, etc. That remains, I would say, a sector which is very attractive because there is going to be borrowers who clearly don't fall into the more traditional borrowing schema, and as a result of which the NBFCs always will gain as a result of that. And as I mentioned right from the start of this conversation, that India remains an underbanked, underserviced market when it comes to credit. So from a demand perspective, I think all of the NBFCs have a reason to be there in their share of the sun, and they will grow. But because of the nature of this evolving regulation, I will call, because we really don't know, whether the entire regulatory revamp is over at any point of time, because these things keep evolving over time. So I think that is a risk, a discount that you have to give to the valuations of these NBFCs. Some of them have corrected, but we yet do not know what more in store for these kind of activities. And I must say that NBFCs is not a generic word. I think each of the NBFCs bring a very special, I would say, nuance to the entire market. So I think it's bottom up that one has to look at these companies. There are very safe and secure NBFCs which are kind of away from the regulatory overhang or the oversight because they themselves are very self-regulated and they're very transparent. I think these companies do not face much risk because as regulations go, if companies continue to work behind the lines as if, and not only on the line, you have a lot of buffer available for these businesses to yet prove to the market that they're doing business the right way. So I think it is more to do with that. And I think one can pick and choose from a bottom-up basis which of the ideas of among the NBFC pack they like.
All right, Tushar, thanks a lot for joining in. Wishing you a good rest of the day and a good weekend ahead as well. We'll chat with you soon. Let's focus on a few stocks in the broader markets, and Lloyd's Metal is coming on our radar. Remember, the stock in the last few years has gone up more than 10 times. But we have an initiated coverage coming in from Anand Rathi, and they believe there's more to go. So they have initiated with a buy rating target price of 1,260. In terms of earnings, they are expecting the EBITDA number to compound by close to around 65% over the next 3 years. Wow, that will throw up a big number. Now, they're making 4 big points out here. On the iron ore mine that they have, they're saying that this mine has been allotted and not via the auction process. What this means is it'll have validity till 2057, which removes that uncertainty. And also they don't have that risk of the high premiums that others have to pay when they're mining. Point number one. Point number two is they're focusing on enhancing their capacity. Remember, as of now, they have the EC for around 10 million tons approximately. But in the coming year, they could do close to around 25 million tons of usable ore. The total capacity will be enhanced to around 55 million tons, but in all probability, 25 million tons is what they could sell in the next year itself. So that's great news as well. Just take a look at the trajectory in terms of their iron ore sales. Point number 3 is they're not satisfied just doing iron ore mining. Now they're talking about forward integration, and they have earmarked close to around 33,000 crores of capex. And in the next few years, they'll be a full-fledged steel company as well. And finally, they are eligible for benefits under the IPS, which is the Investment Promotion Scheme, which means all the capex that they put on, they'll be eligible to some kind of money coming back as well via incentives. So put all this together, a stock that is up close to around 10 times in the last 4-5 years. Well, it's come back from nowhere, and now Anand Rathi believes there's more to go. Well, time to slip into a short break, though. On that note, we'll come back. Nimesh will be waiting for us. He'll tell us what's going on in D-Street Chatter. Mitesh as well will be back with us. He'll tell us about a couple of technical picks. Stay with us.
An idea is all you need to start a business. For you to succeed and scale in that business, what you need are a series of boring, non-glamorous, repetitive daily decisions. And that's exactly what this series is all about. The nuts and bolts of business success.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown,
ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurs.
Welcome back. Well, the markets have slipped a little bit from the top, close to around 50 points or thereabouts. Even the mid-cap index, actually, that's up only 0.1%. So it appears in today's trading session, it's diametrically opposite of what happened yesterday. Yesterday, you had the broader markets that did well and the headline index was lower. Today, the headline index is doing well and the broader market's not as well. Nimesh joins us to tell us what is he picking up. Nimesh, I guess the FI participation will not be that much, because they may be off for the weekend. But what are you picking up in terms of flows?
Well, slightly contrary to what you were expecting, Nigel. I'll talk about that. But broadly, it's a good start to the December series. We've, our market is almost at days high. And actually, we've reversed what happened yesterday. Yeah. And even yesterday, while the market, Nifty was down 300 points, the feedback was it was largely an F&O-led pressure and not much selling. I mean, the FI number looks large, but that has got a lot of F&O angle as well. Today, in fact, in the last 30 minutes, I understand there is a large basket buying at trading FI desk. So maybe you'll see some action in some of the large cap names, largely on back of that MOC buy flow is what I understand. Additionally, now it looks like there is a lot of interest in the new entrants in the F&O. A lot of stocks have started buzzing in today's market. There is an institutional interest as well. For instance, look at something like an LIC that's at days high of 5%, and I understand there is institutional buying as well in stocks like LIC. So there is a bit of interest back in the new entrants is what I understand. Technically 24,200, we are marginally below that, but that's a level to watch. If that's taken out, then maybe you'll see a further momentum in the Nifty as well as in the broader market stocks as well. But net, I guess it's a good start, and there is buying as well, is what I understand by the larger FIs.
So watch out for that then, because as we speak, the Nifty is 65 points off the high point of the day. But as Nimesh is telling us, there could be action in select stocks as well, because there could be a big FI buyer in select stocks. But Nimesh, tell us about individual stocks. What do you
a lot of stocks are buzzing in trade, even in the broader markets today. So the first name is Hindustan Construction, HCC. In the last couple of days, we've seen good volumes, and the stock has actually recovered very sharply as well. One of the reasons is I understand a leading HNI investor has been very aggressively buying the last couple of days, and hence the volumes are on the higher side and the stock started buzzing as well. So that's the first name. The second name is Gujarat Fluoro. I had put out this news earlier as well, and the news turned out to be true. They raised one round of funding in the subsidiary business. Now I understand another round of funding is likely in the battery business very soon by Gujarat Fluoro. So that's something to track in that stock. The third name is Bharti Airtel. After a long time, there has been a big surge in that name. There are buy flows, of course, but additionally, I understand the selling pressure which was there from a US-based fund, that seems to be largely over in Bharti Airtel, and hence you've seen a big move there. And the last name is Ashok Leyland. Within the large cap names, the Ashok Leyland is actually in a trending up market. It's been soft, largely on back of sell flow. So expect high delivery volumes, but that's on the sell side by larger FIs in Ashok Leyland.
Okay, thank you very much for that, Nimesh. Mitesh is now with us for a few calls, perhaps for the day or for the weekend. Mitesh.
I think Petronet is something which has done well. It's kind of towards the days. So BTS there. Keep a stop at about 327.90 or just below 328 is what I mean. Target of 336, 337 most likely can be tested on Monday. And the other stock which I like, that's a BTSC on Syngene. I think it's made a good heights, retrace a little bit, but I think the chart pattern remains strong here. So keep a stop at about 934. Look for a target of 950.
Okay, all right, Mitesh. Thank you very much for the calls today and the calls through the week. You have a good weekend, and we'll connect again on Monday. Let's move on now. The second quarter GDP numbers are due today this evening. Lata is joining in with the key expectations. Lata, what can we expect? How will these numbers perhaps look like?
Big number we await today at 4 p.m. is the second quarter GDP number. Our CNBC-TV18 poll sees Q2 GDP at 6.5%, and that's the lowest in 6 quarters. This 6.5% compares with 6.7% in just the previous Q1 and 8.1% year ago in Q2. The Reserve Bank itself has forecast 6.8% growth for Q2, the quarter that ended on September 30th. But that is down from its earlier forecast of 7%. Now, our poll also sees the GVA, gross value added, at 6.5%, same as GDP, versus 6.8% Q1 and 7.7% year ago. The GVA actually is a better measure of the economy. GVA, you just have to add taxes, subtract subsidies to get to the GDP. Now, as per our poll, GDP is dragged down partly by poor showing of manufacturing and electricity. However, services are expected to have done well at 8.2%. Let's see. Looking at GDP from the expenditure side, the fear is that government capex or gross fixed capital formation, as it's called, which was doing well till about a quarter ago, may have slumped in Q2. Our poll also shows that some economists, including the Reserve Bank, see a very smart rebound in the second half. That's the CNBC-TV18 poll expecting 6.8 to 7% growth in the second half, Q3 and Q4. The Reserve Bank itself expecting 7.4, but not all people in the poll are agreeable to even 6.8 to 7%. So that 7% plus growth, which the Reserve Bank is forecasting, doesn't have too many supporters now. So have we given up the 7% growth pace altogether, which we had over the last 3 years? That we will know only in May of 2025, next May.
Thank you very much for that. Moving on now, the microfinance sector is in focus on the back of fresh brokerage commentary, and they are cautious. Abhishek, of course, has been talking about it for the last 6 months, but he joins in with the latest. Abhishek.
Well, brokerages have written on MFI sector for the lenders, and they are going cautious with respect to lenders over there. So UBS has written on microfinance. They say that MFI overdues have continued to rise at an accelerated pace in October 24 as well. So portfolio at risk of more than 0 days or first day of due has increased by 130 basis point month on month in October 24 to about 17.5%. Slippages will be high in H2 FY25, and they also say that MFI industry portfolio outstanding is down 8% from March to October. Jeffries has written analyzing MFI loans. They say that microfinance loans of 16 lenders, which forms about 60% of the market share, points at 18% CAGR seen over the last 2 years with respect to AUM growth on account of rising clients as well as exposures. But loan growth may fall in H2 FY25, and leverage is up with rise in share of more than 4 loans per customer to about 6% from 4% that it was earlier or 2 years back. So this forms about 19% of the loans and is leading to higher overdues with respect to lenders. So Utkarsh, Spandana as well as CreditAccess have higher share of these loans, while Bandhan Bank remains their top pick in the segment. Goldman Sachs has also written on microfinance sector. They say that sizing the microfinance stress, it could be anywhere between $4 billion to as high as $18 billion with respect to stress pool in this sector. So loan rates in the MFI segment have actually worsened over the last 2 quarters. They believe that the sector will continue to face headwinds, and they could see a further spike in loan losses in H2 FY25. So they believe from this stress pool of about $4 to $18 billion, they believe that 12 to 17% could actually turn into NPA. Back to you.
All right. We will leave it on that note. Thank you very much, Abhishek, for the latest there. The MFI stress making big headlines throughout this week today. We'll take a break, come back with more market talk in just a bit.
Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Welcome back. Hemang Jani is our next guest on the show. And as we say hi to him, the market's cruising along quite nicely, still 200 points higher on the Nifty. Hemang, good to have you on. Thanks for joining in. Let's start first with the trend that we're seeing on Bharti Airtel today. Big move, courtesy some positive brokerage commentary. ICICI Securities is bullish on the stock. But would you be looking to buy Bharti now?
Yeah, good afternoon, and thanks for having me on the show. Yes, Bharti has been one of the better performing stocks, though it also corrected the market correction that we had about 1.5 months now. But when we look at the performance, particularly in terms of the ARPU and the growth, and most importantly, the postpaid subscriber addition that Bharti has posted are exceptionally good, and that would drive a significant ARPU growth over the next, let's say, 1 or 2 years. So we do think that Bharti is extremely well placed, though it has moved up today by about almost 4-5%. But for next 12 months, we are still looking at about 18 to 20% kind of earnings growth in Bharti, from a numbers perspective.
Hemang, stay with us. Just coming back to you. Yash is now standing by. He put out that story on how IRDAI is advising insurers to reduce their dependence on bank assurance. That was a CNBC-TV18 exclusive yesterday. I think the entire street has taken note of that story, and these are some of the views which they are putting out. Yash, take it away.
Well, Prashant, of course, yesterday the stocks, as far as life insurance companies are concerned, reacted quite sharply. They're yet to recover from those levels. But certainly there are interesting comments which are coming from various brokerages. To start with Morgan Stanley, as far as the reaction on the stocks is concerned, that they've said that investors had a no smoke without fire read-through of that particular story. Also, investors felt that insurers were being too optimistic about the surrender value regulations also previously, but those regulations did come through. They expect aggression as far as the non-bank channel of sale for these life insurance companies is concerned. Kotak has also written some comments as far as the story is concerned. They believe that diversification of distribution is anyway a secular and inevitable trend. They are also talking about the fact that diversification away from bank assurance but can lead to downgrades if stringent timelines are imposed as far as that diversification is concerned. According to them, private life insurance stocks look attractive after the recent correction. JP Morgan says that they expect a slight moderation in the bank assurance sales in the near term. Insurers, according to them, might adopt a cautious stance to avoid any potential regulatory scrutiny. LIC is the top pick for them because it has the least share of bank assurance. Finally, Bernstein has said that bank channels are central to the distribution of life insurance policies in India. This particular proposal, that is monitoring and advising on reduction of share of bank assurance, will be met with fierce pushback from the insurance industry.
Okay, all right. Thanks very much for that, Yash. Indeed, lots and lots of talk and chatter around some of the life insurance moves that we've seen in the last 24 hours. Thank you for that, Yash. Let's ask Hemang. Hemang, anyone's guess what's coming next? Are you comfortable buying life insurance stocks now?
Yes, so there will be two things we have to understand. One is that there was a case of mis-selling and target-based selling that particularly banks were doing, and which is what FM also alluded to, that there should be some sort of a restriction or control on the manner in which these products are being sold. So that's one aspect where obviously the regulator will try to tighten the process. But when it comes to this bank assurance, I think it's more of a fear that probably people have that this may happen. And if you look at the actual contribution of the bank assurance from the top insurance companies, it's steadily coming down. So as long as there is no immediate sort of implementation of any stringent norms, I don't think this by itself will be a big negative. In fact, the stocks have reacted yesterday. Today also, I think they haven't really recovered. But if there is any correction in names like HDFC Life, SBI Life, I think one could possibly look at buying into it.
Okay, so buying the dip when it comes to insurance. Hemang, we're sort of almost winding down for the day and the week. Any other ideas? The market has been going through its correction. Things maybe, hopefully, bulls will want to believe that they're stabilizing now. Any fresh ideas?
Yes, the market is keenly, waiting for the Santa rally, and I think from the lot that has been added to F&O, names like CAMS, CDSL, Lodha, these are the names where we do expect good, strong earnings also, and they have been included in the F&O. And we think that from current, price points, they do offer 18-22% kind of an upside. So these are some of the pockets that will be positive for it.
Okay. All right, Hemang, we'll leave it on that note. Thank you for joining in and look forward to the next call soon. Well, with that, we're down to the last 2 minutes of trades. Let's start recapping the day. It's not a bad day at all because this 200-point recovery has meant that the Nifty is going to end the week above the 24,000 mark. In fact, 24,100. Talk about the gainers today. Bharti Airtel on the upside. Then you have a couple of names from the pharma space like Sun Pharma and Cipla that did pretty well. M&M is up about 2.5% as well. You've got Tata Consumer, ONGC. These are names on the higher side. A lot of the Adani Group stocks, they continued their rebound. Adani Ports, for instance, is up about 1.5% today. If I look at some of the other Adani names, and they too have managed some gains. Adani Green and Adani Energy Solutions. These are some of the other movers on the way up. Talk about the rest of the big names on the Nifty. Lever, ICICI Bank, L&T, Reliance. These are the big heavyweights that have supported the market today. Downside, Power Grid, Shriram Finance, and Hero MotoCorp, but not too many sort of losers, just 2 or 3 of these big names. Otherwise, it's been a good day, and I guess, Prashant, the bulls will just heave a huge sigh of relief that yesterday's fall looks like it was a one-off, and we're back to the green side today.
No, absolutely, and I think, for the week as well, right, Surabhi, the small cap index is the one which is doing the best. It's up 5% Friday to Friday. And that is really looking pretty smart out there.
Absolutely. The bell has gone. Nifty for the week actually up about 1%. The mid-cap index for the week up about 2.5%. And small caps doing even better, as Prashant mentioned. So not a bad day at all. With that, we take your leave on this edition of Closing Bell. Thank you for watching, but don't go anywhere because coming up next is our Friday edition of Editor's Roundtable.
I am a big believer in the capability of the group. I am invested and I have bought more in this fall. I want to be making very clear that, and these kind of events, in a large corporate life, these kind of events will happen. And I frankly do not see the reason for this level of panic because of the case which is being pointed out.
The Wall Street posted gains for the second week in a row. The Nifty is now inched 2.5% higher in the last 2 weeks. On Editors Roundtable today, we take a look at how the markets have fared in December in the past few years. We'll also tell you the 2025 outlook for the Indian markets and key asset classes. And as we inch closer to the weekend, we'll dive into the Indian alcohol companies to understand their growth potential. I'm Reema, with me, Prashant, Nimesh and Nigel. And joining us on the show, we've got Harish Krishnan, co-CIO and Head of Equity at Aditya Birla Sun Life Mutual Fund, who'll be joining us in just a bit. Hi, guys.
That was a deliberate line, Reema, you put in?
No?
We're going to dive into alcohol. Oh, you said alcohol stocks. I don't know what Nigel is doing. And that's the piece he's presenting.
Yeah, we'll dive in as well over the weekend. Yeah.
By the way, this is a busy weekend, Reema, and you usually have all the dope and information, right? There's a concert happening
There is a concert happening tomorrow.
Tomorrow.
Dua Lipa. Yes.
You going?
Who's going?
Which concert, sorry?
I think
Dua Lipa.
Dua Lipa. I also heard an hour ago. So, but into the end of the year, there is a lot of stuff happening as well. Let's just quickly take 2 minutes and put out a couple of points in terms of where we stand now as far as the week is concerned. So, this week has been quite incredible because we came out on that Monday with all guns blazing. Actually, you go back to Saturday when that election result came and there was, feverish pitch about that gap up on Monday, if you remember. And of course, Monday we did get a gap up and it was a pretty strong start to the week. But then somewhere it kind of fizzled out. And, yesterday, of course, was perplexing with that big fall, that, 12,000 crore sell figure from the FIIs. And then, of course, Friday, markets really recovered and, added about 200 plus points. So the weekly statistics is up on your screen. And the Nifty is up just under 1%. Nifty Bank is up just under 2%. The star really has been the small cap index, which is up 5%. So, whatever else this week, as compared to last Friday, portfolios would be feeling a little better. especially if you look at the 2.5 on the mid cap and the 5% gain that we've seen on the small cap index as well. So for all the gyration, that's a change at the end of the week that we've seen. In terms of things to watch, we're getting into December by the time we come in, etc. I just want to focus on currencies a little bit. And then Harish Krishnan, as Rima said, is our guest, and he's also somebody who's watching currencies pretty closely. So take a look at this, right? Thursday, of course, markets were shut, but we almost had a 1% fall in the dollar index on Wednesday. It was the largest one-day fall for the dollar index since Powell's dovish speak during Jackson Hole. That is, you've got to go all the way back to late August to find that, that 1% or nearly 1% fall that we had. Just to take that point forward, what is the dollar index made up of? I mean, it's a weight against a basket of currencies, and 3 of the largest currencies within the dollar index are looking stronger. Euro is seemingly turning around from very, very beaten down levels. The Japanese yen has seen a big move. The dollar JPY is moved from 155 to 150-ish levels in a span of just 5 trading sessions. The third component is the CNY, on which I want to sort of get in Harish in just a bit. So 3 of the sort of important currencies are looking stronger. By the way, the dollar JPY has broken below its 200-day moving average. The last time this happened was July 31st, and we all know what happened in the first week of August. That was that big shock. And, markets had sold off very quickly. In a week, markets were down about 5-6%. The point I'm making is this. It's very difficult for the dollar index to... The consensus has been that the dollar will be strong, US exceptionalism, etc., etc. But the fact is, as we wind down this year, it's very difficult for the dollar to be stronger if 3 important large components, currency components, are actually looking better. So it's possible, and this is actually a bit of a non-consensus view, it's possible that the dollar index cools off. And that is not exactly bad news. Actually, it's good news. It's outright good news for emerging markets, because that is seen as, as a signal for EM flows, etc. Just one more thing, which I think sort of went under the radar. The institutional sort of AAI bull-bear index, right? The overall index, which is closely tracked from an equity point of view, that seems to have, the bull-bear index seems to have collapsed. And there's been a big increase in bearish sentiment. And this has happened in the last 3 or 4 days. But this is, again, tracked more for US out there. The point is, we're getting into December. Seasonally, it's better part of the year. Go back in history and look at it. But the fact also is that it's also a little unclear as volumes, etc., start to thin off. So watch for some of these things as we come back into next week. In any case, I don't think it's anyone's case that we're likely to see a big move up or down. We are kind of very, very ranged in that sense. Let's welcome in Harish Krishnan on the show. Harish, good to have you with us here. Thank you very much. I remember, you telling us, I think 2 interactions back, that your the biggest risk for you was the CNY. But I don't remember, you said your risk was CNY appreciating or depreciating? Because it had been depreciating till recently, and only now it has started appreciating a little bit, relatively speaking. So just wanted your thoughts there to begin with, Harish.
Right, Prashant. Yeah, you're right. I do think that the call out on currencies is possibly a bit, under the radar, and that's something that can take a lot of people by surprise. At least let me tell you what my thinking on the currency moves are. As you said, it's a consensus move that the dollar will keep strengthening. There is this phase of US exceptionalism, but I would not be surprised if the dollar marks a top close to the presidency inauguration. Again, we'll have to really wait and watch out in case President Trump really decides to go quote unquote nuclear as far as tariffs are concerned. In which case, there is a small percentage that, we could go in for a massive amount of currency retaliation, which may involve a significant devaluation of the Chinese renminbi. And that is the, the black swan or the tail event that I am referring to, which can obviously have significant impacts as far as Indian currency is also concerned, as well as Indian equities. But that still is a tail risk at this point of time. I think our base case is that it is going to be more talk than action. For sure, there is going to be some action in the form of tax cuts, etc., which are all reasonably well priced in as far as the US equities is concerned. The US bond markets have also reasonably priced in with respect to the stimulus that can potentially come through, and therefore we think that post the Trump presidency, we will see a wave of normality coming through, which means that liquidity can potentially come back into emerging markets, like you alluded to. But that's more a Feb March kind of a scenario.
So December perhaps could be quieter, and that is not bad, bad news for our markets, because we've gone through this period. First you had the US election, then the state elections, then the earnings in the Indian markets. This has all happened in the last 2 months. And come January, again you'll have the earnings season and Trump takes charge. So December is literally sandwiched between two, events, busy earnings and busy news flow kind of events. And typically December has been a good month for equity markets. So out of the last 20 years, for 15 years, in the month of December, the Indian markets have given a positive return, and on an average, it's been close to about 2.5%. The only other 2 months where we've had better returns, at least in the last 20 years, have been April, and the other one is July. And 2024, if things go, as they are right now, could end up being the 9th consecutive year that the Indian markets are going to close with positive gains. So far, year to date, we've rallied close to about 10%. But a quick word on what we should watch in the next 1 month. Well, interest rate decisions from US, India, China and Japan. RBI policy is on 6th of December, but the India and the US policy will be watched very closely. Geopolitical tensions, there is an OPEC meet on the 5th of December. The FI flows, it thins out towards the end of the year, but so far, year to date, the FIs have sold $33 billion in cash so far. And the last few days of the month are likely to be very active on the IPO front as well. There are some reports which suggest that 20,000 crore is still set, left in terms of the IPO action for the remaining year. But as I said, this could be a quieter month in terms of news flow, so therefore maybe even positive. But January is the one that the street will be watching, because seasonally it's been weak. There is Trump, takes charge on the 20th, and then on 1st, it's also the run-up to the Indian budget.
Well, I'll tell you what, the bulls will really be opening for a good December. Last December was very good. The December series, the markets were up. Yeah, for the series, it was up close to around 8%. So the bulls will really do with some gains towards the end of the year. But Nimesh,
so you're hoping a Santa rally, right?
Santa rally, and I'm off from the 20th. Whether there's a rally or not, I'll be rallying. But Nimesh, what about 2025? How is it shaping up for various asset classes?
Well, Nigel, it's very difficult to predict as to what 25 is going to be. But generally, what I've read from the brokerage notes of influential brokerages, looks like it's going to be a flat to a very moderate returns for emerging markets as well as India as far as equities are concerned in 25. So let me just go to the wall and explain why I'm saying this. But, before I talk about 2025 outlook, let me just run through as to what happened in 2024, right? Just look at, let's do a recap on what happened in 2024. Global markets have been quite strong. The average returns have been 15 to 30%. The broader markets like Nasdaq and Dow were up 19-20%. The Asian peers like Nikkei, Hang Seng up 15%. DAX was up 15%. The only outlier in the global market was Karachi Stock Exchange up 60% Y2D in 24. So that's the global picture. How has India done in the global context? Well, we have relatively underperformed after the recent fall in the indices in the last couple of months. So the Nifty, the broader markets are up 22%. Well, the Nifty and Sensex are up 10% after a 10% fall, but we've seen in the last couple of weeks. So have relatively underperformed so far in 24. So that's what the Indian markets have done. Look at what the other asset classes have done. Gold has been the big outperformer in 24 so far. It's up 27%. The dollar is up 5%, and the crude is down 6%. So that's what the global other asset classes have done in 24. Now the key question is what to watch out for in 2025. I've gone through some big reports from influential brokerages. I'll start with Jonathan Garner of Morgan Stanley. They've put out a note and they expect a just 1% return for MSCI EM index in 25. So they have a target of 1100 on MSCI EM index. They believe that the dollar EPS growth will be just 8% for 25 and 26 versus the consensus of 15% and 12% respectively. So earnings are going to slow down is what they expect in emerging market. However, they are more confident about India in 25 and they believe that the earnings outlook would be quite stronger, and they actually have an overweight stance as well. However, they believe that they expect the current cyclical slowdown to abate in 25. So that's a big call from Jonathan Garner of Morgan Stanley. The other big voice was Timothy Moore from Goldman Sachs. They expect a 4.5% Asia ex-Japan GDP growth in 25 and 11% MSCI EM ex-Japan returns in 25. For the Nifty, Goldman Sachs have a year-end target. So next year, year-end target of nearly 27,000, which means 11-12% upside even from current levels. Similar is the view from JP Morgan as well. So Rajiv Batra from JP Morgan has a Nifty base case of 26,500, and so means a 10% upside. Interestingly, they've put out 7 indicators which could drive the Indian markets in 2025. The first is the political stability. Second, which has been a big factor, is the faith of domestic investors. That's going to be quite key for India to outperform. Third, relatively safe haven in the amidst the trade war too. The fourth, the rural economy is expected to gain momentum in CY25, so that's something to watch. Beta to the US equities, geopolitical risk, which is likely to continue, which means that the risk premium is going to shrink, and of course the under ownership of the global investors. So these are the 7 drivers for India to do well in 2025. So that's the JP Morgan view. Even CLS has put out a coin strategy, and they believe that the late stage cycle for emerging markets in India is likely to continue, which means the returns could be front-ended in calendar year 25. Earning sentiment has been a bit of a drag, but they do not expect to get worse from here on. And they believe that China will lead the returns in 2025 within the emerging market basket. So that's the CLSA quant view. Just let me end with the macro picture as well, or the macro outlook as well for 25. In terms of big brokerages, UBS has cut the GDP forecast for India for FY26 to 6.3%, and they expect a 75 basis point rate cut in CY25. Goldman Sachs has a GDP forecast of 6.3% for CY25, and they believe they expect a 50 basis points rate cut in CY25. However, Morgan Stanley has a GDP target of 6.5%. But interestingly, Morgan Stanley says that the first rate cut is expected only by April, and it's going to be a very shallow rate cut. So that's the big macro view as far as 25 is concerned. So broadly, the feedback seems to be expect a moderate return and needs to be little front-ended is what most of the global brokerages believe as far as 25 is concerned.
No, absolutely. And, what a year, as you see, we began by 26% for the US. And I mean, it's been absolutely incredible. Harish, in terms of themes that you guys are watching and your team are watching, also where there are opportunities as we head into next year, what would those be? Sort of top of mind, top 2-3 themes.
So I think financials could be a theme where, there has been a reasonable amount of despair in the near term, given the significant regulatory actions that have happened. Rewinding back about 18 months back on your show, we had come and said that, everything that is going right for banking is going right now. And therefore, we want to go underweight at that point of time. Now we are getting into that first point wherein, pretty much the credit growth has come down. You've got credit costs starting to go up, and you've got net interest margins under trouble. I think now we're getting into a zone of normalized earnings, which I think the street will like and would want to re-rate it at least close to the market multiple. These are all franchises which have got derated at a discount to the market multiple as we speak now. So that's one call out. The second call out, I would say, would be resources. This is again a space where we think that both the two largest economies of the world, US and China, can potentially go in for a certain amount of stimulus in their economies. Given the fact that you're coming through a phase where demand is not something completely fallen off. I think a small stoking of stimulus, maybe in terms of, say, bringing back manufacturing back into the US, can actually ignite some of the commodity prices. This is again a space. Just a raw data point. If I were to plot the metals share of profits in India over the course of the last 25 years, today we are at 2001 levels. So that's the extent of profit pool share that has kind of deteriorated for metals, a space which is completely under-owned, and where there is a potential for an asymmetric payoff. So these would be the two areas that I would think, one could be a consensus financials. Most people have been saying positive on financials over the course of the last 12, 18 months. The only thing is, I think we are turning positive now after being underweight. The second is in terms of the resource plays. I think that could be another area that can take people by surprise.
Harish, what about IT? There is a mixed view within IT as well, and 25 could be a big year as far as earnings. As far the Indian companies are concerned, how are you positioned in IT names?
We continue to be positive in IT. IT continues to be a place wherein, if I look at the margin construct of Indian IT, most players are still below the pre-COVID levels of margins. And in that same time frame, we've seen offshoring go up significantly for India. We do think that there is a lever for margins to come back, as well as potentially, once the US companies, post the stalemate that they've seen in the last 12, 18 months due to the macro worries, get a greater confidence. I suspect that we are going to start seeing tech spending get back. So I think it's a nice place to be in. It's just that it's done quite well in 24 already. And so therefore we do expect reasonable continued strength out there. But the big delta, like I said, could potentially come in from these pockets, which haven't really performed over the course of time.
Sure.
Okay, all right, Harish, point taken. So that is IT services, but the two other themes you said, metals and interesting stats there, and financials as well. We'll take a quick commercial break here. As promised, that piece on Alco beverages, and Nigel is
deep diving.
Diving deep on the other side. So stay tuned. We're back.
Welcome back. Well, let's focus on Daru then, because we had Ms. Madhu Kela who joined us earlier in the week, and he made a couple of points, both on Dawa, that's pharma, as well as on Daru. Let's talk about Daru. He seems to be quite bullish on India's alco bev industry. And one factor that he put out was that Motai, which is a Chinese company, their profitability is equal to 25 times all the Indian companies' profitability put it together. So Motai currently does around $12.5 billion of profitability, while the Indian companies altogether, they do $500 million odd. So there's a big gap out there. And Motai themselves, 15 years ago, their profitability itself was only $500 million, which has moved up to around $12.5 billion odd. So let's make a point out there. It appears that there is a big penetration scope here in the Indian alcohol beverage industry. So a few factors that come up for you on the screen. One is the Indian industry itself is one of the fastest growing. In terms of volumes, we're third after China as well as the United States. And just take a look at the graph. In trillion, we should be at around 5 trillion rupees of the total industry. That comes from around 1.5 trillion just a few years or so ago. Next up, moving to the per capita consumption, even of beer. India is lagging behind. I'm doing my bit, but in fact, we are lagging big time. India, in comparison to what the globe is doing, the consumption really needs to catch up on the beer front. That's point number one, tremendous potential in India. Point number two, state governments. They seem to be making steps in the right direction. Case in point being the UP government. They introduced the liquor policy in 2018. And from there, if you look at it, well, you saw the sales move up of all the organized players. That monopoly that was there in terms of distribution, that got taken out. And just take a look at the excise revenues for the state. That moved up. And they set a good example. The Andhra Pradesh government as well has implemented the liquor policy, and they are talking about giving good quality alcohol at reasonable prices. So we'll see how that goes. But they've set a bit of a trend, and hopefully most of the other state governments could also follow, which in turn will be very, very good news for the organized industry. Premiumization, that seems to be taking center stage as well. And in the last few years, if you look at the premiumization, both of a couple of companies, one is United Spirits and the other one is Radico. Premiumization as a percentage of the total mix, well, it's moved up drastically, for both of them. And it's not just consume premium alcohol, consume more amount of Indian single malt. I think that graph should come up for you because earlier single malt was being consumed, but the foreign single malt was consumed more than the Indian single malt. However, now the Indian single malt that's being consumed is more than the imported single malt as well. Next, currently we're in this wedding season, and the number of weddings itself, the number of days are higher, the spending is more as well, and people want to consume premium. So young couples as well, they have a lot of focus on the bar, which in turn will result in a lot of consumption. And, finally, margins. If you're looking at the gross margins in the last few years, of all some of these frontline names, you have seen a contraction in margins, of all these three names. But DAM Capital, they have put on a note, they are talking about margin expansion of around 250 basis points approximately, because the input costs are well behaved, glass prices are okay, and the premiumization theme will drive the realizations as well. So they're expecting improvement from there on. Finally, the valuation picture comes up for you on the screen. So it seems, as Mr. Madhu Khela said, there's tremendous potential here in India for these alco-bev companies, and it seems there are a lot of triggers and tailwinds as well for them. Well, Harish, let's come across to you. Let me get your view on this. There is a lot of potential. Some of these stocks have seen a decent run as well, but penetration's improving, premiumization's there, and input costs well behaved. What's your view on the sector?
We are reasonably extremely positive on this space as well. In fact, in many of our schemes, wherever we have FMCG or consumer staples exposure, but you will find only alco-bev, as representative of that FMCG share. Now, part of the reason why we've been positive on alco-bev, apart from all the reasons that you mentioned, is that generally there is a lag between price hikes that various state governments give and the cost increases that all these companies suffer from. Now, what we had seen, and as I think one of your graphics also showed, premiumization has moved up meaningfully between FY19 and FY24, and yet gross margins have come off so significantly between that same time frame because energy costs had gone up, glass costs had gone up, barley costs had gone up, the input raw materials had gone up significantly. And state governments typically take a reasonable amount of time to give through those price hikes. Do remember that in most states in India, it is an administered price it's not a free market in the sense like all FMCG, wherein prices can be set by the manufacturer, etc. So therefore, there has generally been a lead and lag, and we do think that now raw materials being better behaved, we do think we've already seen some states give that. We see more and more states giving a higher price rise, which means that we're going to see some of that clawback of that margins. So continue to believe that this can be a very good space wherein we get to experience reasonably rational policy making also. To this policy making, we've also seen, for example, some state governments being open to even e-commerce delivery. Again, this entire space of alco-bev has been very, very restricted in terms of media, in terms of distribution outlets, etc. And therefore, it's refreshing to see the various governments and policymakers having a slightly open mind to see how they can both maximize their revenues as well as improve the overall usage of these industries.
Harish, thank you very much for joining us today. We're all going to dive into our weekend. You enjoy yours too, but keep it with CNBC TV18 for more news and updates.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. A rebound on Friday helped Sensex and Nifty end the week with 1% gains. Mid-cap index gains 2% this week. Adani Group stocks continue to regain lost ground after the bribery allegations. Indian government breaks silence on the Adani controversy 10 days after the US bribery indictment. Foreign Affairs Ministry spokesperson says the matter is between private firms, individuals and the US Justice Department. Adds Indian government was not informed in advance and has not had any conversation with US in the matter. Zee Enterprises shares rise a day after shareholders reject proposal to reappoint Puneet Goenka as a board director. Retail investors vote overwhelmingly against a board seat for him. There's no imminent threat to Goenka's position as the CEO as long as he has the backing of the board. Supreme Court throws a spanner in the works for Byju's fundraise via stake sale in Akash Educational Services. The top court restrains Akash from removing veto rights of minority shareholders. Opposing deal directs Akash to seek relief in NCLT.
It's just malicious and it's frustrating, but thankfully now we seem to be through it.
Air India CEO Campbell Wilson says airlines take every threat seriously, even as he calls bomb hoaxes malicious and frustrating. Calls for faster and consistent assessment of bomb hoaxes to avoid disruption. That's an exclusive. Government serious frauds investigation office begins probe against Hero Electric and Okinawa for alleged violation of EV subsidy norms. The Heavy Industries Ministry had approached the Corporate Affairs Ministry seeking a detailed probe. Israel and Hezbollah continue to accuse each other of violating the ceasefire in Lebanon as the fragile truce enters the third day. Israel continues to attack Gaza, killing at least 42 people in the last 24 hours. The winter session of Parliament remains paralysed for the fifth straight day. Opposition demands a discussion of the Adani controversy, Manipur violence, among other issues. No clarity on the next Maharashtra Chief Minister yet. This despite Eknath Shinde hinting at accepting a BJP Chief Minister. Shinde, Fadnavis and Ajit Pawar meet Home Minister Amit Shah in Delhi to discuss portfolio allocation. Sources say that the Shiv Sena is keen on the Home Affairs Ministry, but the BJP is unwilling to relent. Australia passes a legislation to ban social media for children under 16 years of age, becoming the first country to do so. Facebook's parent company Meta accuses Australia of failing young people by not considering their voices. The government says the Indian cricket team will not be travelling to Pakistan for the Champions Trophy in 2025 due to security concerns. India's cricket board had earlier informed the ICC about the same. Right, straight to the news just coming in. The Indian government has broken its silence on the Adani controversy 10 days after the US bribery indictment. The Foreign Affairs Ministry spokesperson Ranveer Jaiswal has said that the matter is between private firms, individuals and the US Justice Department. He added that no extradition request has been received from the United States. He also said that Indian government was not informed in advance and has had no conversation with the US on this matter.
We see this as a legal matter involving private firms and individuals and the US Department of Justice. Obviously, there are established procedures and legal avenues in such cases which we believe will follow, would be followed. And the Government of India, so far we have not, to answer your question, we have not been informed in advance on the issue. We haven't had any conversation also on this particular matter with the US government. Also, related question came from Sudhi. So, I would like to inform you that, any request by a foreign government for service of summons or arrest warrant is part of mutual legal assistance. But such requests are examined on merits. We have not received any request on this case from the US side.
All right, let's take a look at the market action. A Friday rally helped Sensex and Nifty end the week with 1% gains. Nifty got back above the 24,100 mark. Sensex has moved closer to 80,000. Mid-caps outperformed the blue chips. Prashant Nair is here with a market wrap.
A much better session after yesterday's smacking. And yesterday was perplexing. There was a almost $2 billion net sale number. People were worried. The view was that do not extrapolate what had happened yesterday to future sessions. And there was a bit of a recovery which was expected. And that recovery did materialize at open. It strengthened through the course of the day. At one point, we were nearing Nifty being up 300 points, although there was a bit of a give back towards the end. But 200 plus points is what we had coming through on the Nifty benchmark. Bank Nifty, a little more mixed, a little more sort of unsure. Mid-cap index, flattish but higher. Small-cap index was the clear winner with about 0.8% gains. The changes for the week will also come. That is Friday to Friday. Remember, we started the week with that Maharashtra big verdict over the weekend, and Monday was that big day. And then, of course, it got a little muddled. So 5 days, Nifty up 0.9%, Nifty Bank up 1.8%, mid-cap index 2.5%, but the winner was the small-cap index with 5% coming through in this week. I'll come back to just today. So the big gains, Bharti, there was a brokerage upgrade, almost 5% there. Cipla and Sun Pharma and healthcare as sectors and pockets also participated. Mahindra and Adani Ports. I'll get to more Adani names in the broader space. Names like Adani Green, Adani Energy Solutions, these were all up once again. So most of these stocks have recovered quite a bit from the lows which were made after that, US SEC, DOJ indictments. Premier Energy was another sort of recovery name today. Piramal Pharma, big one, 8%. Sagility has been a big winner through the course of this week. Tirumalai Chemicals and Hikal were some of the others which participated. Just some pullbacks as well today. Swiggy has had a good run, gave back some. Ola Electric had a big last 2 days, gave back some. CreditAccess, that Goldman Sachs downgrade, almost back to the recent lows from where it had recovered 10%. HFCL, Poonawalla FinCorp, KPIT, Colgate, CG Power, and Shakti Pumps were some of the others. US investors are already largely out of the picture this week, and I think we'll only get better and sort of more clearer global cues as well, which I think remain important to track as we get into December in a real way. Back to you.
Right, big updates coming in. The Q2 GDP numbers are out. India's GDP grew by 5.4% in the second quarter of the fiscal, the slowest in over 20 months. Let's go across to Lata Venkatesh. Lata.
This is a terrible number. We were all expecting that it would be 6.5%, which is what the CNBC-TV18 poll threw up. Let me tell you why it is shocking. The first forecast of the Reserve Bank for this quarter was 7%. They brought it down to 6%, and they held that 7% as recently as the last monetary policy. As of October 6th, they were expecting a 7% growth. They brought it down to 6.8 when they released the October bulletin. But 6.8, and look, where are we at 5.4? This is a seriously shocking number. I'm trying to go through the details. I think it's manufacturing that has really been jacked. It's grown by just 2.2%. And in my poll, I had got a near 5% growth in manufacturing, 4.7% to be precise. And last quarter, Q1, manufacturing had grown by 7%. In the year ago quarter, manufacturing had grown by 14%. But this 2.2 comes as a very big shock. Among other things, you can say that perhaps trade, hotels, transport and communication, which is a very big services sector, ST buses, Udupi hotels, everything comes under this. Trade, hotels, transport and communication, that's grown by just 6%. The expectation was that it would do closer to 7 to 8%. So that again has pulled down. Financial sector also. Finance, real estate, insurance, the whole financial piece, that was expected to grow by close to 8% or even more. That's grown by just 6.7%. All these were supposed to make up for the loss in mining, for the loss in agriculture. Agriculture has grown by 3%, by the way. Not a very bad performance at all. My poll had given me a number of 3.6 or 3.65 to be precise. But at 3%, it's not as big a disappointment as manufacturing and services have been. Let me just come to GDP from the expenditure side. Whether you're consuming, whether you're investing, whether you're exporting. If you look at that data, there has been an all-round slowness. The private final consumption expenditure, the engine of growth for India, accounting for about 58% of the economy, that's grown by 5.9%. That defines the GDP growth of 5.4 because consumption has grown by only 5.9%. Consumption has been slow for a better part of the last 3 or 4 years, ever since COVID ended, it grew in the first quarter to 7.4. So we all thought that consumption has returned. Remember, in all the FMCG stories, we were talking about the revival of rural consumption. But well, overall consumption is only 5.9. What was working for India was actually investment, what you call gross fixed capital formation. That was growing by between 7 and 11% over the past many quarters. That slumped to 5.4. And I think the blame squarely falls on the government on this, because government capex, which had slowed in the first quarter, even when it slowed because of elections, it was still 7.5% growth. But second quarter, you had no excuse of elections. In spite of it, the growth has only been 5.4. So this is an all-round slowness. It's a shocking number, will deserve much more analysis, and certainly a recast of the full year growth. The full year growth for RBI stood at 7.2. The government was always more modest, expecting it to come between 6.5 and 7. Now 6.5 looks ambitious. That's my first impression. Over to you, Archana.
All right, GDP shocker there. Big updates coming in as far as Q2 GDP is concerned. Moving on, India's industrial output data could soon be released on the first working day of every month. Sources tell CNBC-TV18 that the government is deliberating reducing the time lag between IIP prints to 30 days from 42 days currently. Remember, the estimates are usually released on the 12th of every month. The data that is scheduled for release on December 12th will be for the month of October. The Indian rupee traded flat near its all-time low, lagging behind its Asian peers. This as significant foreign fund outflows and month-end dollar demand from importers weighed on the currency. However, intervention by the Reserve Bank limited losses. Forex traders said the rupee remains in a weakening mode due to dollar demand from importers and foreign banks. All right, it's time for a short break. News and updates continue on the other side.
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूं, सत्यनिष्ठा से प्रतिज्ञा करती हूं कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी।
श्रीमती प्रियंका गांधी वाड्रा।
मैं प्रियंका गांधी वाड्रा जो लोकसभा की सदस्य निर्वाचित हुई हूं, सत्यनिष्ठा से प्रतिज्ञा करती हूं कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगी। मैं भारत की प्रभुता और अखंडता अक्षुण्ण रखूंगी तथा जिस पद को मैं ग्रहण करने वाली हूं, उसके कर्तव्यों का श्रद्धापूर्वक निर्वहन करूंगी। जय हिंद। I'm very happy.
Each company has their own strategy, so I cannot comment into what others are doing in. But we are very sure that after the launch, we will definitely take again the feedback of the customers who gave the feedback initially in terms of what kind of product they are looking at from us. And after the, not only the product, but even the service aspect.
Welcome back. You're watching Business 360. Israel and Hezbollah have exchanged blame over violating the ceasefire in Lebanon, even as the uneasy truce entered day 3. The Israeli military claimed that its warplanes fired over southern Lebanon after it detected Hezbollah activity at a rocket storage facility in the region. Since then, there have been no reports of violations of the ceasefire. Israeli forces continue to stop displaced Lebanese people from entering villages that were once attacked. They also urged citizens to stay away from the border region. Civilians were seen returning to their homes on the third day of the ceasefire. Meanwhile, the situation in the Gaza Strip remains volatile. At least 42 civilians were killed following a series of Israeli attacks on a central Gaza refugee camp. Other parts of Gaza, including Khan Yunis, also witnessed a spate of attacks in the last 24 hours. And moving on from one war-torn region to another, Russian President Vladimir Putin has threatened to escalate its offensive in Ukraine by using intermediate range weapons. This comes a day after a barrage of Russian missiles hit Ukraine's power infrastructure, triggering a power outage across key cities. President Putin confirmed that Russia has also begun mass production of nuclear weapons to strike Ukraine. Russia's response comes after Ukraine used American and British-made missiles to attack the Russian territory. Zee Enterprises shares rise a day after shareholders rejected proposal to reappoint Puneet Goenka as a board director. This comes days after Goenka stepped down from his post as managing director. Vamakshi Dhoria is here with more. Vamakshi.
Well, the shareholders of Zee Entertainment have gone ahead and rejected a proposal for the reappointment of Mr. Puneet Goenka as a director of the company in its AGM that was held on November 28th. Now, the proposal was defeated by a 50.4% vote. That means that nearly 50.4% people or shareholders rather voted against his reappointment as a director in the company. In fact, this comes after proxy advisory firms InGovern and IIAS both recommended shareholders to vote against his reappointment. But largely, the picture still remains the same, and that is because Mr. Puneet Goenka has already stepped down from his position as the managing director of the company earlier on November 18th, citing that he wanted to concentrate on his operational responsibilities as the CEO of the company. So that still remains the same because he will still continue to be the CEO of the company. So that is the news flow surrounding Zee Entertainment.
Right, thank you, Vamakshi. CNBC-TV18 News Break confirmed Aster DM has announced a merger with Blackstone-backed Care Hospitals. The Dubai-based hospital chain will acquire nearly 2 crore shares in Care Hospitals at 446 rupees per share. Remember, CNBC-TV18 had reported that Blackstone will hold 34%, TPG will hold 11%, and the Mupin family will hold 23% stake in the new entity. Food delivery giant Zomato has successfully raised 8,500 crore rupees through a qualified institutional placement. The QIP closed yesterday following strong interest from qualified institutional buyers. The company issued 34 crore equity shares at 253 rupees a share. The issue price reflected a 5% discount to the floor price. This is Zomato's first major fundraising effort since its IPO in 2021. Here's a CNBC-TV18 exclusive. The Centre's Serious Fraud Investigation Office has begun its probe against Hero Electric and Okinawa. Sources have told CNBC-TV18 that the government is probing the 2 electric vehicle companies for alleged violations of the FAME2 scheme norms. The government has also approached the Ministry of Corporate Affairs, urging for a detailed probe. The Supreme Court has agreed to hear a PIL seeking an investigation into allegations of illegalities and fund siphoning by the former promoters of Indiabulls Housing Finance. The court issued notices to the company and other respondents on the plea filed by Citizens Whistleblower Forum. The forum has sought a court-monitored special investigation team to probe into the alleged financial misconduct. And staying with all the action from the Supreme Court, setback for Byju's, the apex court has directed a stay on a resolution to sidetrack minority shareholders to facilitate stake sale in Aakash Educational Services. This move comes days after the National Company Law Tribunal blocked Aakash from amending its articles of association to remove the veto rights of these shareholders. The NCLT's interim order also stops any changes to Aakash's governance structure until its final decision. The Supreme Court has ordered the Uttar Pradesh Police and District Administration to be neutral and maintain peace and harmony amid violence in Sambhal. It also directed Shahi Jama Masjid's Management Committee in Sambhal to approach the Allahabad High Court to challenge a trial court's order. The trial court had ordered a survey of the mosque after Hindu petitioners claimed that a temple previously existed at the site. The Supreme Court stayed all proceedings before the trial court until the High Court hears the matter. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Today. We'll also give an assurance to all the customers who are actually looking for a trust and reliable product in the market, which currently is not available as of now. So keeping that in mind, we will bundle the entire price accordingly, keeping in mind all the aspects of our product as well as the services which we'll render from our rendering setups.
FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores of the EBITDA. So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. We have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution, and we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27 we should be reaching to 19,000 megawatt of commission capacity. NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding then, which will be at the most optimum then price.
As far as resources are concerned, I think we have an extensive R&D facility which is working in Japan, and the entire R&D really works in terms of creating a product which is really good for the Indian market. And we have done extensive research not only from the customer's perspective but even from the suppliers, from the dealers' perspective as well, in terms of what kind of product they are looking at. And basis on that research only, we have created these two nice products today, for which we are introducing today in Activa E as well as QC1.
Just spoke with Prime Minister of Israel and Lebanon. I'm pleased to announce that the governments have accepted the United States proposal to end the devastating conflict between Israel and Hezbollah.
הערב אביא לאישור הקבינט מתווה להפסקת אש בלבנון. משך הפסקת האש תלוי במה שיתרחש בלבנון. בהבנה מלאה עם ארצות הברית, אנחנו שומרים על חופש פעולה צבאי מלא. אם חיזבאללה יפר את ההסכם וינסה להתחמש, אנחנו נתקוף. אם הוא ינסה לחדש תשתיות טרור בסמוך לגבול, אנחנו נתקוף.
Hello and welcome to this special State of the Economy show. We are analyzing the second quarter GDP numbers that are just published by the Ministry of Statistics, by the MOSPI. It's a shocker. At 5.4%, even the lowest respondent in our poll did not have a number lower than 6.3%. So, you know, it's a good 1 percentage point lower than our lowest forecast. And if I were to tell you that the Reserve Bank began the year by expecting this quarter to have a growth of 7%, as recently as October 6th, in the previous monetary policy, the Reserve Bank maintained that we could see a 7% GDP growth in the July, August, September quarter. 5.4 is outside the realm of anyone's belief. By the time we came to the October bulletin, we could see that the Reserve Bank had come down to 6.8. On the street, a poll done by me just, 48 hours ago indicated that we would still get a 6.5% growth. We are over 1 percentage point less than what the street is prepared for. The lower numbers, agriculture is a little lower than my poll. I had expected 3.6% going by what the respondents told me, but we are getting a number of 3%. That's not so bad. It's mining that's quite a shocker. Mining numbers have come in at minus 0.1. That's a bit of a shocker. The other number is manufacturing, coming in at 2.2%. The number that I got from the economists was as high as 4.7. So there seems to have been a very big, drop in those numbers. And the other big number that's disappointed people is financial sector. The finance sector has shown a growth of only 6.7%. The numbers that I had got were close to 8%. Finance, real estate, insurance, all that come together. Real estate had a fairly decent quarter. 8% was the expectation, but the number we are getting for finance is only 6.7. Trade, hotels, transport and communication is a very big employment-heavy sector. Expected to grow at about 6%. It's delivered 6%. It's not all that bad. So it appears to be more manufacturing, financial services, agriculture itself and mining that have taken the economists by surprise. Construction has come in at 7%. That's not a bad number. I think that was about the expectation that we got as well at 7%. In fact, it's done better at 7.7%. The real problem appears to be mining and metals. Now, we could see it even in the first quarter numbers. The second quarter corporate results. Metal companies, metal and mining companies and oil and gas were the companies that showed negative EBITDA, showed the lowest growth. And therefore, it's possible that the same thing is moving on into the GDP number as well. So that's the preliminary comments that I can think of. The consumption and investment numbers also are not very impressive. GDP can be looked at from the output side, that is agriculture, how much agriculture has contributed, how much manufacturing. That's the output side. It can be looked at from the expenditure side. Are you spending on investment? Are you spending on consumption? Are you spending on exports or imports? The consumption growth has only been 5.9%. That's a rather poor number. We were over 7% in the first quarter. And investment, which has been running between 7 and 12% over the past 7-8 quarters, has slumped to 5.4. Here, perhaps the blame lies with the government. Government capex had not picked up in the first quarter because of elections. It was expected to pick up in the second quarter, but looks like states and centre have not really got this area going. Those are the preliminaries that I can see from the numbers, but I'll defer to the experts. Joining me is a star panel: Kaushik Das, the Chief Economist, India at Deutsche Bank; Aditi Nair, the Chief Economist, ICRA; and Sakshi Gupta, Vice President and Senior Economist at HDFC Bank. Join us. We will have more economists joining us in just a bit. Aditi, first thoughts, 5.4, will it require a lot of revisions to future numbers as well?
Lata, well, certainly this number has come in well below all of our expectations. Consensus was around 6.5%, so big downside surprise over here. And you mentioned the sectors that led to the downside. In my mind, it's actually manufacturing which has really led to this lower than expected number. Most of the others are, in the ballpark of what we had expected. Mining as well, as you said, has come in with a contraction. And the services sector as a whole has come in about 70-80 basis points below what we had penciled in. Agriculture also 50 basis points below our initial projection. So it is broad-based, but I would say that, definitely the weakness in this quarter is to a very large extent being led by manufacturing and by mining. Now, for the full year, I'm still hopeful that a couple of factors are going to lead to better looking numbers in H2. Part of it is kind of a catch-up as compared to what happened in the first half of the year. So one thing which will turn around is that, with the heavy monsoon, the positive impact of that is actually going to be more visible in the agri output in the second half of the year and in the rural consumption numbers, even as urban consumption is showing further signs of unevenness. And on the government capex side, with every passing month, the asking rate to be able to meet the budget estimate is climbing higher and higher. October, again, with Diwali, we've not seen a great month on the government of India's capex outflow for the month of October. And the asking rate now to reach the budget estimate of 11.1 trillion it's really climbing very steeply with every passing month. So we are expecting there to be a larger miss in capex. Possibly we need to be prepared that the miss is going to be in the range of 1 trillion or thereabouts. But even with that, we'll still end up with a very high growth in capex in the second half of the year, despite this anticipated miss. So some of these factors will lead to better looking numbers in the second half.
Okay. The government fiscal numbers have also come in, and the April-October capex stands at 4.6 trillion versus 5.5 trillion year ago. So there is a 15% fall if you look at the April-October number. Of course, we need the July, August, September numbers. I'm just giving you the full 7 month, which the government has just released. So clearly the government has not been able to pull up its capex